Okay, so today is our last class, and in continuation to our yesterday's discussion, so we completed section 16, conditions for availment of ITC. Have a look into this illustration 3. This is actually a summary of this question is based on section 16. XYZ Limited is engaged in manufacture of taxable goods. Compute the ITC available with XYZ Limited for the month of October 2023 from the following particulars. Inputs A, GST 1 lakh, one invoice on which GST payable was 10,000 is missing. Now in this case, can we take ITC on this 10,000 rupees? Why we cannot take ITC on 10,000 rupees? What is the condition which is not satisfied? The person availing ITC should be in possession of tax paid document. In that case, he is not having the tax paid document, due to which the ITC cannot be availed. So 10,000 rupees ITC cannot be availed, then ITC can be availed only on 90,000 rupees. Then next, inputs B 50,000, inputs are to be received in 2 installments. First installment has been received in October 2023. So this month only we have received first installment. When can we take ITC? On receipt of last installment. Means can we take ITC in the month of October? No, we cannot take ITC on this 50,000 rupees. Capital goods 1,20,000. XYZ Limited has capitalized the capital goods at full invoice value inclusive of GST, as it will avail depreciation on the full invoice value. Can we take ITC on this? Why we cannot take ITC? So if depreciation is computed on tax component also, then we cannot claim ITC. So 1,20,000 we cannot take. Input services 2,25,000. One invoice dated 21/2023. 21/2023 means which financial year? 21/2023 means which financial year? Financial year 2022-23. For the financial year 2022-23, what is the time limit for availment of ITC? 30th November 2023, or the date on which they file the annual return, whichever is earlier. What is the date on which they are filing the annual return? 15 September. See the third point. The annual return for the financial year 22-23 was filed on 15 September 2023, whichever is earlier. So which is earlier? 15 September 2023 will be the earlier date. So but right now we are in which month? October month. So whether the time limit for availment of ITC is expired? Yes, because we should avail the ITC by 15 September 2023, but we are in October month. So on this 50,000, can we avail ITC or we cannot avail ITC? We cannot avail ITC, which means 1 lakh we can take, 50,000 and 1,20,000 we cannot take. Out of 2,25,000 also 50,000 we cannot take, which means 1,75,000. So 1,75,000 plus 90,000. Here also only 90,000 can be taken. So 90,000 plus 1,75,000 will be 2,65,000. Are you understanding this? Now we are moving on to section 17. Already we have seen the similar time limits. What are the 5 cases where the time limit is same? Time limit for availment of ITC, time limit for issuance of credit note, time limit for rectification of GSTR 1, time limit for rectification of GSTR 3B and GSTR 8. Then look into next one, section 17, apportionment of credit. Apportionment of credit means, already I told you, when I have some inward supplies which is partly used for taxable and partly used for exempted, I can take the proportionate ITC attributable to taxable, which means what should I do? First take the total ITC, then proportionate attributable to exempted we will reverse. So remaining is the net eligible ITC. For example, 40% of the inward supply used for exempted, 60% used for taxable. So first you will take the total ITC minus 40% related component you will reduce. So the 60% is what available. Is it clear? The same thing we will do even for business, non-business purpose also. Already we have seen these 2 points in the reversal. Now what we need to understand here is the meaning of exempted. So what should be taken as exempted? Generally, what is the meaning of exempted for the purpose of payment of GST? That is, at the time of computing the payment of GST, what will be treated as exempted? Three things: notified as exempted, nil rated, non-taxable. These three. Already long back we discussed the meaning of exempted, correct? So notified as exempted, nil rated, non-taxable, these three things will be treated as exempted. This exempted for the purpose of payment of GST. Now what we are discussing is meaning of exempted while doing the computation of ITC. What computation of ITC? First we will take ITC avail minus ITC reverse. In that ITC reverse, how will you calculate ITC reverse? ITC avail into numerator denominator. What is the numerator? Exempted turnover divided by total turnover. In that exempted turnover, what should be taken is what we are understanding. Are you getting this? So this meaning of exempted supply is only for the purpose of computation of ITC to be reversed. There only we will apply this. This is not for payment of GST. You understood? So we have two types of exempted turnover definition in GST. One for payment of GST, another for computation of ITC. For computation of ITC, what is the meaning of exempted turnover? Those 3 points will come here also. What are those 3 points? Notified as exempted, nil rated, non-taxable will come here also. Apart from that, extra what you have, say this, notified as exempted, nil rated, non-taxable. Apart from that, extra what you have, 4 points which are actually not a supply, but for ITC purpose it will be treated as exempted. What are they? Sale of land, sale of building, sale of securities, and sale of warehoused goods under customs. Actually these 4 are not a supply. Agreed or not agreed? So for payment of GST, we will not at all treat it as supply first of all, because sale of land excluded from supply. Sale of building where entire consideration received after obtaining completion certificate or first occupation, whichever is earlier, is also excluded from supply. Then sale of securities is also excluded from supply. And sale of warehoused goods under customs. So under customs what will happen? We will be selling some warehoused goods. So that point already I told you, spalled slow, W point. So I imported the goods, kept the goods in the warehouse, and thereafter I sold that goods. That is also excluded from supply. But these 4 are treated as exempted supplies for doing the computation of ITC. Understood? So first 3 points, notified as exempted, nil rated, non-taxable. Next 4 points, sale of land, sale of building, sale of securities, supply of warehoused goods. Sir, in case of land and building, what should be taken as a value? You need to take stamp duty value. And in case of securities, you need to take 1% of the sale value of the securities. So don't take full sale value of the securities as the exempted turnover. 1% of the sale value of securities should be taken as the meaning of exempted turnover. Then supply of warehoused goods, value at which such goods are sold. Then next one, supply covered under RCM. When my supply is covered under RCM, actually I will not pay GST, but my recipient will pay GST. But while computing the exempted turnover for ITC purpose, I need to treat it as exempted turnover, because actually speaking, so I am not going to pay GST, so it is added to my exempted turnover. Understood or not? That's the reason why I told you 2 people will opt to pay GST under FCM. Who are those 2 people? Author as well as GTA. Author opt to pay GST under FCM, and GTA also opt to pay GST under FCM, because if they want to enjoy the credit, so they need to pay GST under FCM, because if their outward supply is covered under RCM, they cannot take ITC on their inward supplies. That is this, supply covered under RCM. Next, see this 2 points. These 2 points are actually exempted, but for computation of ITC it will be treated as taxable. So far whatever we have seen, 8 points is the meaning of exempted for ITC. What are the 8 points? Notified as exempted, nil rated, non-taxable, sale of land, sale of building, sale of securities, sale of warehoused goods under customs. Last point, supply covered under RCM. This is the meaning of exempted for computation of ITC. But there are 2 transactions, actually for payment of GST it is exempted. We don't have to pay GST. But while doing the formula, exempted turnover by total turnover, whether we need to take it in the exempted turnover? No. we need to take it in the taxable turnover. What are they? Interest on loans, advances, deposits. Actually, interest on loans, advance, deposits is exempted na for payment of GST. But for ITC purpose, they are asking us to treat it as taxable. Thereby, what will be the benefit? We will be able to take the ITC. Correct? When my outward supply is interest on loans, advances, deposits, I will not pay GST. But should I do any reversal of ITC? No. Happily, I can enjoy the ITC. But this benefit is not given to the person to whom really we need to give the benefit. Actually, to whom interest income is more? Banks, financial institution, NBFC. For them, this is not applicable. You understood? This is applicable for others. Others will have a small portion as interest income. Na? For others only it will be applicable. See this. So, for banks, NBFC, it will be exempted supply only. But for others only it will be treated as taxable supply. Same way, sale of duty credit scrips. These duty credit scrips are like coupons which are available under foreign trade policy. To exporters, these coupons are given and thereby they can redeem these coupons for payment of customs duty on import, or they can transfer these coupons to any other person. For example, I am an exporter. Whenever I am exporting, a percentage of my export value I will get as a coupon. What can I do with that coupon, sir? That particular coupon, I can use it for payment of customs duty, or that coupon like a voucher, I can transfer it to any other person. When I am selling it to any other person, actually it is an exempted supply. But for ITC purpose, it will be treated as taxable. I have given below the table what is the meaning of duty credit scrips. Incentive in the form of coupon given under foreign trade policy to use it for payment of customs duty on import, or it can be sold to another importer. Then next point, this already we know, export of goods or services or supply of goods or services to SEZ. Actually it is zero rated. We have two options, either pay IGST or don't pay IGST, like that. But for ITC purpose always it will be treated as taxable. Means can we enjoy the ITC? Yes. And one important point also remember here, basically a product is exempted. But the moment the product becomes exported, it will become zero rated. For example, this calci is exempted. For this calci, I purchase some raw material. Can I take ITC? This calculator is exempted. I am selling in India. For this calculator, I purchase some raw material. Can I take ITC? No. But this calculator is now exported. This calculator is now exported. Now, can I take the ITC on the raw material purchase for this calculator? Yes. Are you observing this? The moment the product is exempted or goods or services, we cannot take ITC. But when it becomes export, it becomes zero rated. The character changes. It becomes zero rated. When it becomes zero rated, now whatever material that we have purchased for this or whatever inward supply for this, we can happily take ITC. Are you understanding this? That is this 11th point. Can you remember this pa? First three cases actually it is exempted both for payment of GST as well as for ITC. Next 4 points actually not a supply, but for ITC it is treated as exempted. Supply covered under RCM is actually taxable for payment of GST. Only thing we will not pay, our recipient will pay, but for ITC purpose it will be treated as exempted. Next 2 cases actually it is exempted for payment of GST, but for ITC it is becoming taxable. Last point, zero rated means we will either pay GST or don't pay GST, but for ITC it will be treated as taxable. Now what you need to remember is for the purpose of ITC only, because for payment of GST already you know what it is. For ITC purpose only, what is the special case you need to. So therefore whatever is taxable, whatever is exempted normally may not be the taxable and exempted for the purpose of ITC. Please watch out for this in the exam, because when you do the computation, in the first step you will take the total turnover etc. and all. But in the last step, that is third step, third statement, you do the ITC reversal. There don't go by just with the logic of regular taxable, regular exempted. You again check the question once again as to whether it is really taxable and exempted for ITC purpose. Accordingly you take the ratio. Is it clear? Next. See that note 1, apart from the above discussion, if any outward supply is taxable for payment of GST, then for availment of ITC also it should be treated as taxable, correct? Apart from these cases, any other transaction, if it is taxable for payment of GST, even for ITC purpose also it will be taxable. Then note 2 says, just remember the example of a shampoo which is manufactured by a manufacturer. There is a manufacturer who is making shampoo. You just write down example shampoo. Okay, shampoo is manufactured, and this particular shampoo which is manufactured using the raw material, that is inputs, input services and capital goods. Will this shampoo be always sold? Not necessary. Sometimes it will be disposed as gift or free sample in order to promote the product, correct? Because basically in our country, if anything is given for free, so people will definitely be happy to use it. But if you are charging, they will think twice, they will not. Free means, okay, let me try. They will try, definitely they will try. But if it is chargeable, they will think that as to, okay, why should we pay? We are already comfortable with the product, so we should not buy, like that they will be thinking. That's why nothing wrong in that. See, this is how the behavior of the consumers here. Reason being, Indian consumers, majority of the cases are middle class consumers. So middle class mentality will be like this only. Even I am also like that only. Everyone is like that. So even I will also buy things in discount. Even I will also be interested when something is given for free. Maybe we can try, like that, will think. But definitely I will not give it to my kids and all. I will check, and okay, if it is good, then I will be giving it to my kids. But what I am telling is that in order to establish a product, first we need to give it for free. Agreed or not agreed? So therefore it is given as free. Is it supply or not a supply? Why not a supply? Because it's given there as not a supply. Without consideration. Without consideration, you need to apply 7(1)(c). What is that 7(1)(c)? DRIP. D for disposal of business asset. Is this shampoo my business asset? Yes, pa. Yes. Where will you show your finished goods? Inventory. In asset side. Inventory is in asset side. Dear, cleared foundation and came na? Accounts you know na? Where you will show inventory? In accounts, balance sheet, asset side. So inventory is my asset, business asset. Okay, it's a business asset. Shampoo is my business asset. On which ITC availed or not availed? Not availed. Not availed. Where am I purchasing shampoo? So I am manufacturing shampoo, but I availed ITC on what? Raw material. What I am disposing of is what? Finished product. That's why it will not come under disposal of business asset. Okay, will it come under other points? No. Related party transaction, import of service from related person or principal agent transaction, it will not be coming. Consequently, it is not a supply. When it is not a supply, then whether we can enjoy the ITC on these inputs, input service and capital goods, for which the circular says, no, you have to do the proportionate reversal. For example, you write down inputs ITC is 1,20,000. Input service ITC 90,000. Inputs ITC 1,20,000. Input service ITC 90,000. Capital goods credit is 2,70,000. Okay. Capital goods credit 2,70,000. This is the ITC with respect to inputs, input service and capital goods. Now, using these three, we made some finished goods, that is shampoo. What we are doing with this shampoo is that we are distributing it as free samples. How much is the value of these distributed as free samples? 50,000 is the value which is distributed as free samples, whereas sold quantity, sold value is 9,50,000. You understood, pa? What is the value of goods distributed as gifts of free samples? 50,000. But what is the sold value? like sales 9,50,000. So therefore what they are telling is that you do the proportionate reversal. You do the proportionate reversal. So tell me what is the proportionate reversal? What is the ITZ availed? What is the ITZ availed? What is the ITZ availed? 1,20,000 plus 90 plus 2,70,000. 4,80,000. Now what is the proportionate reversal? 4,80,000 into what by what? Exempted. What is treated as exempted here? 50,000 divided by, what is the total turnover? 10 lakhs. So that will be equals to 4,80,000 into 50,000 divided by 10 lakhs. 24,000 is the ITC reversed. Are you understanding this? Clear pa? So which means the remaining is the net eligible ITC. So this is how we need to do. You understood this special treatment? So when this will be applicable? When the purchased goods are distributed as gifts or free samples. When the purchased goods are distributed as, when the manufactured goods are distributed as gifts or free samples. So what we need to do is that proportionate ITC we need to reverse. Are you understanding this? Then see the note 3. Pa, you understood or not pa? Note 3, I am having some inward supplies and I am using it in the outward supply as a product given as quantity discount or gift. You remember example Kinder Joy. So what is the inward supply? Toy is purchased. We are purchasing a toy, and in Kinder Joy I am giving chocolate plus toy. I am giving chocolate plus toy as a product, and this chocolate plus toy is fixed at somewhere like 60 rupees as the MRP. Now in that case, tell me, on this toy can we take ITC? You understood the example? I am purchasing a toy. Using that toy, I coupled with the manufactured products and I am giving it like a combo. I am giving it like a combo. Now in this case, what happened is that, so this 60 rupees is the single price, and the toy purchase, can we take ITC or not? First we will see this 60 rupees will be composite supply or mixed supply. Composite supply. Why? Always the toy will be given along with the chocolate. So let it be composite supply or mixed supply. We are going to tax this price. Yes or no? Let it be composite supply or mixed supply pa, but we are taxing the 60 rupees. When we are taxing the 60 rupees, in that we are also taxing the toy which is given as gift also. Due to that reason, on this toy ITC available. Understood? Because we are not just giving it as gifts or free samples. So first of all, why this discussion come? Because we have one blocked credit point which says that if purchased goods are distributed as gifts or free samples, we cannot take ITC. But in this case, we are purchasing the goods, giving it as gifts or free samples, but actually separately we are not giving it as gifts or free samples. We are coupling along with the other product. So therefore that will become composite supply or mixed supply. So on this toy ITC will be available. Is it clear? So first point you need to remember is that if the manufactured goods are distributed as gifts or free samples, proportionate ITC to the extent of this free samples we need to reverse. Second point, if any product is purchased and given as gift along with the other product, now in that case we can take ITC on the product purchased even though it is given as gift, because the outward supply will become either composite supply or mixed supply. Then next note you see, note 4. I am purchasing some inward supply as a trader and I am just like that giving it as gifts or free samples. For example, I am purchasing a water bottle, okay. So water bottle, kids water bottle I am purchasing, and this kids water bottle I am just distributing it as gifts or free samples. So kids water bottle I purchased because I am into the business of sale of school bags, water bottles, or tiffin boxes like that. Okay, I purchased the kids water bottle, and on that the GST is paid, GST at the rate of 12%, and I purchased it, and I am just giving it as gifts or free samples, because in my shop some kids are coming and purchasing the school bag, lunch box. So therefore I need to retain that, because usually what will happen, the moment kids start purchasing this lunch box, bag, etc. in one shop, every year they will be putting a pressure on their parents to go and buy from the same shop. Actually kids are the loyal customers, adults will not. Adults will go to some other shop also, but kids will say, no, that shop only we will go, because last time when we purchased, that Anna has given water bottle for free, so we will go there only, like that they will tell. So now, to encourage this loyalty amongst the kids, the shopkeepers will be giving these gifts. It's a normal case. Now in that case, whether they need to reverse the ITC on this water bottle purchased, that is, can they enjoy the ITC or they cannot enjoy the ITC. What they are telling is that as the bottle purchased, at the time of purchase of bottle itself, this GST paid is availed as ITC, correct? When you are disposing it off, it will become supply under 7(1)(c), disposal of business asset, disposal of business asset on which ITC availed. So it will come under disposal of business asset on which ITC availed. So don't reverse any ITC, enjoy the ITC. Is it clear? Because already at the time of purchase itself we took the ITC. Now it will become supply. So enjoy the ITC with respect to that. Suppose at the time of purchase itself you came to know that it is going to be distributed as gifts. Can you take ITC? No. Why you should not take? Because it's a blocked credit. You understood? At the time of purchase itself, here I don't know that I will be giving it as gift. Normally to sell it in my shop only I purchased, but I am distributing it as gift. Some cases we will purchase some products only for the purpose of distributing it as gifts. Example, these shops and all, garment shops will be purchasing this dinner set, mixer grinder, suitcase, etc. and all for the purpose of giving it as gifts. The purchase itself is for the purpose of giving it as gifts, correct or not? Now in that case, can they take ITC in the beginning itself at the time of purchase? No, they cannot take, because it is a blocked credit, okay? Then next, activities specified in schedule 3 are not treated as exempted supplies. So only these 4 activities are exempted supplies. There are list of activities which are excluded from supply na. Spalled slow, but out of this spalled slow, these 4 activities are only specifically given as exempted supply. What about other activities? Actionable claims other than lottery, betting, gambling, and then we have post, sovereign functions, whether that should also be treated as exempted supply? No, that is not necessary to be treated as exempted supply. Only activities specified in schedule 3 are not treated as exempted supply, except sale of land, sale of building, and even supply of warehoused goods under customs. That's it, pa. We completed 17.1 and 17.2. Let's see how this will be tested in exam. So they will be giving a question wherein we need to compute the net GST payable. So in that we need to definitely do the ITC reversal. Okay. See this question. X Limited is engaged in consulting services, has provided the following services during September 2018. Services to A Limited in Mumbai 4 lakhs, services to B Limited in UK 6 lakhs. Service to A Limited in Mumbai is actually taxable. We don't have any point related to this. As it is taxable for payment of GST, even it will become taxable for the purpose of ITC. Okay. So now this question alone we will see as to how to present it in the exam or arrive at the answer. So kindly you also make note of the answer as to how to write it in exam, because whenever you get a question like this you should know the approach. Okay. So first we need to prepare a working note. In that working note, like the table we discussed na, transaction for payment of GST what it is, for availment of ITC what it is, this table. Like this one table we discussed, yes or no? Like that, we have to prepare one table in the working note, okay, that we will do. So working note, you prepare with these columns. Working note, working note with particulars, value for payment of GST, and for availment of ITC. Particulars, value for payment of GST, for availment of ITC. First one. What is the first one? See your book, pa. You see the book and tell me. Services to A Limited. Services to A Limited. What is the value? 4 lakhs. Is it given as exempted? No, nothing is given means taxable. What is the rate given in the question? Yo. What is the rate given in the question, pa? 18%. Applicable rate of GST to X Limited is 18%. So which means we need to pay GST on this. Okay. So taxable. For payment of GST it is taxable. And how much is the GST that we need to pay? 4 lakhs into 18%. That will be 4 lakhs into 18%, 72,000. As it is taxable for payment of GST, is it covered under those special points? No. So naturally it will be taxable for ITC also. Correct? It's not covered under the table, na. Means if it is taxable for payment of GST, it will be taxable for ITC. Then next, see the second transaction. What is the second transaction? Services to B Limited, where? In UK. Is a consideration in Indian rupees or dollars? Consideration in Indian rupees. Will it qualify for export of service? No. Why it will not become export of service? Consideration should be in convertible foreign exchange. But here the consideration is in Indian rupees. That's why it will not qualify for export of services. Only for 2 countries, the consideration can be in Indian rupees. What are those 2 countries? Nepal and Bhutan. So here it is not a export, not a zero rated. So normally it will be taxable. What is the value? 6 lakhs. So normally taxable, which means we need to pay GST 6 lakhs into 18%. How much? 1 lakh 8,000. As it is taxable for payment of GST, even it will be taxable for ITC purpose. Then see the next one. Services to C Limited, where? C Limited in Nepal. Now don't bother about the consideration. It can be in foreign exchange or it can be in Indian rupees. How much is the value? 3 lakhs and it is zero rated. But are we going for payment of GST or without payment of GST? See the question last line. They are opting for which option? Wherever applicable, they opted for export of service without payment of IGST under bond or LUT. Which means are they required to pay GST? Not required to pay GST. Not required to pay GST. Second option, correct? And for ITC purpose, will it be treated as taxable? Yes. For ITC purpose, it will be treated as taxable. Even though it is zero rated, that 11th point in the table, even though it is zero rated, but for ITC purpose, it will be treated as taxable. Then next one. Services to D Limited, where? In Bhutan. Services to D Limited in Bhutan. What is the value? 2 lakhs. Again, Nepal and Bhutan, don't bother whether it is Indian rupees or foreign exchange. It will become zero rated. Again, with payment of GST or without payment of GST? Without payment of GST. but for ITC purpose it will be treated as taxable. Then next, services to E Limited, correct? Exempted services, how much? 6 lakhs. So for payment of GST it is exempted. Should we pay GST? No. As it is exempted, notified as exempted, even for ITC purpose also it will be exempted. So we need to prepare this table first. Then while doing the computation of net GST payable, I told you some steps involved. What is step 1? First statement, GST payable on outward supply. Already we computed 72,000 plus 1,08,000. So statement 1, computation of GST payable under FCM. Computation of GST payable under FCM. How much is that? So 72,000 plus 1,08,000, how much that comes to? 1,80,000. What is the second statement? RCM. Computation per long back I discussed evening, I discussed with you the template as to how to arrive. Computation of GST payable under RCM. Do we have anything in this case? 0. Third statement, ITC availed and reversed, correct? ITC availed and reversed. So what is that? ITC availed. First we check the question. What is the ITC availed? What is the ITC availed? They gave the inward supply data. They are telling 10 lakhs excluding GST at 12%, correct? So 10 lakhs into 12% is 1,12,000. Sorry, 1,20,000. 1,20,000 minus ITC reversed. What is that ITC reversed? ITC availed 1,20,000 into exempted turnover by total turnover. Go to the working note. You see which is exempted for ITC purpose, ITC purpose, ITC purpose, ITC purpose. Last column, last column. Last column, what is exempted? 6 lakhs. So 6 lakhs divided by total turnover. Okay. So total turnover is what? 6 plus 4, 10, 15 plus 6, 20, 21 lakhs. Then what will be the ITC reversed? 34,286 rounded off. So net eligible ITC, net eligible ITC. So 1,20,000 minus 34,286, that is 85,714. Now last step, net GST payable. What is the net GST payable? 1,80,000 minus 85,714, that will be 94,286. This is how you need to do. Understood? But stick on to the same format. That statement 1, statement 2, statement 3, statement 4. And accordingly, extra what you need to do is that one working note you are doing, because you need to know for payment of GST what it is and for availment of ITC what it is. Understood? Got the confidence? You do it in the same way in exam whenever you get a question related to ITC, meaning of exempted supply. By seeing the question itself you can easily understand, okay, they are checking on ITC reversal, okay. Then next, say this, question number 5, illustration 5. Messrs ABC traders has made taxable outward supply of 20 lakhs, GST 12% and exempted outward supply of 10 lakhs comprising of interest income 4 lakhs and other exempted supply 6 lakhs during July 2018. Their inward supply for the month is 10 lakhs excluding GST at 10%. Compute the net GST payable. Now again we need to prepare a working note. First, taxable supply is how much? 20 lakhs. So it will be taxable for payment of GST as well as for ITC purpose. So taxable. How much is the GST payable? 20 lakhs into 12%, 2,40,000. First we are preparing the working note. Then next, exempted, which is interest income 4 lakhs. So interest income 4 lakhs, for payment of GST it will be exempted. But we have a special point for interest income. What is that? Even though it is exempted for payment of GST, but for computing ITC it will be treated as taxable. So we need to put it under taxable. Then other exempted, it is exempted for payment of GST. As it is exempted, notified as exempted, even for ITC also it will be exempted. Okay. Now you prepare the working note. Now first you need to prepare the gross GST. What is the gross GST liability? Clearly given 2,40,000. Second statement, nothing is there. Third, ITC. ITC, what is the ITC availed? 10 lakhs into GST 10%. That is 1 lakh is the ITC availed. Respond pa. So 1 lakh is the ITC availed minus ITC reverse. What is ITC reverse? 1 lakh into exempted turnover divided by total turnover. C exempted for the purpose of ITC. If you see for payment of GST, 10 lakhs will come. But actually you should not see exempted for ITC purpose only, we should see, not for GST. For ITC purpose only 6 lakhs. So into 6 divided by 30. How much is the ITC reverse? 20,000. So what is the net ITC available for utilization? 80,000. Are you understanding this? Now what is your gross liability? 2,40,000 minus 80, 1,60,000. Simple. So therefore, not necessary that you will get a question exactly like this, but on one adjustment alone I coined this question. Like this 2-3 adjustments will be there in the question. Previous one is related to 0 rated. Previous one is related to 0 rated. This one is related to that interest. Okay. What if this interest is received by a bank? Then what will happen? It will be exempted for payment of GST even for the purpose of ITC. However, bank is having another option. Bank, financial institution, NBFC is having one option. That option is called as 50% ITC option. In that 50% ITC option, without doing this proportionate calculation based on exempted turnover and total turnover, flat 50% we will remove and remaining 50% we will enjoy. Is it clear or not? Sir, under proportionate ITC what you are doing? Total ITC minus ITC reverse, that is ITC availed into exempted turnover divided by total turnover. One scientific way of doing, we are doing, correct or not? But in case of 50% ITC option, we will not follow any of this formula, nothing. So total ITC into 50% reversed, remaining 50% we will take. You understood? Now when it will happen like this, for example, my interest income is 30%, other income is 70%. If I go for proportionate ITC, I am a bank, my interest income is 30%, other income is 70%. If I go for proportionate ITC option, how much ITC I will be getting? 70%. If I go for 50% ITC option, how much I will be getting? 50%. So I will prefer, correct? Now my interest income is 60%, other income is 40%. If I go for proportionate ITC, how much credit I will be getting? 40%, because interest is exempted na. Whereas if I go for 50% option, how much I will be getting? 50. So I will choose. You understood? But sir, like this, can we choose month on month, sir? No. We need to choose it in the beginning of the financial year. That will be applicable throughout the financial year. Okay. Now see this illustration 6. HDFC Bank registered in Chennai, Tamil Nadu has earned 20 lakhs as interest income, 8 lakhs as commission, 4 lakhs as other charges during March 2018. Applicable rate of GST is 18%. During the month, they have received common inward supplies worth rupees 6 lakhs excluding GST at 18%. Compute the net GST payable. Now, what we should do first, working note, taxable supplies how much? 8 lakhs and 4 lakhs. What pa? For bank, other than interest on loans and advances is exempted or taxable? Taxable. Only interest on loans, advances, deposits is exempted. All other income will be taxable, correct or not? In exemptions we have discussed in detail. So therefore commission will be taxable and other charges will be taxable. What is the taxable? 8 lakhs and 4 lakhs, 12 lakhs. On that they need to pay GST. Yes. What is the rate of GST given in the question? 18%. So therefore 12 lakhs into 18%, 2 lakhs 16. As it is taxable for payment of GST, it will be taxable for ITC. So whenever you get like this, first put one working note better. When you put one working note, you will know the clarity, at least a starting point, because 90% of the students, what I have observed is that they have a starting problem. That is, in the answer sheet, they don't know how to do or where to start, etc. They know the question, they understood the question, they know that they need to arrive at the answer, but they don't know how to put it properly. You understood? That is because we lack the communication ability. We, just like that casually we speak. We never speak like in a formal way. This is first, this is middle, this is end, like that. Unless otherwise you are an orator or a public speaker or a teacher, you will not have this communication sequence. That's why what we do is that, so randomly we will try to put the answer, but the sequencing we will not get. So we don't know where to start, our pen will not move. So that's why better put one working note, particular amount for payment of GST for ITC. Now automatically you will get, and that's why I gave you that 4 statements. What are the 4 statements that you need to do? So a template and all I have given at appropriate places mainly for that reason. So now in this case, first taxable turnover for payment of GST, so therefore taxable for ITC also. Next, interest. Interest is actually exempted for payment of GST. Even for ITC purpose also it will be treated as exempted. We don't have the exception, correct? That exception is for whom? Other than bank, financial institution, NBFC. Now, there are 2 options, proportionate ITC method, ad hoc ITC method. First we will see proportionate ITC method. What is your gross liability? Statement 1, 2,16,000. Statement 2, 0. Statement 3, ITC. In that ITC, what is the ITC availed? What is the ITC availed? But by now you should be telling pa, because already 2 questions we did. Third question it is 6 lakhs into 18%. What is 6 lakhs into 18%? 1,08,000. That is ITC availed. ITC reverse. 1,08,000 into exempted turnover by total turnover. What is exempted turnover? 20 lakhs divided by total turnover 32 lakhs, that will be 67,500. So 1,08,000 minus 67,500, 40,500 you reduce. So you will get the net liability, 4th statement, that is 1,75,500. Are you understanding this? Whereas when you go for proportionate ITC option, gross liability remains the same. Am I right? Gross liability same. Statement 1 same. Statement 2 same. Statement 3 alone it will change. ITC availed will be how much? 1,08,000. ITC reversed will be how much? 50%. What is 50% of 1,08,000? 54,000. So 54,000 gone means remaining 54,000 you will be getting. That if you adjust, the liability will be 1,62,000. But in exam only when they are asking both the options, you do both the options. Otherwise you don't have to do. But don't write the conclusion, it is advisable to go for option 2 because the liability is less under that option. Like costing, don't write. You understood or not? Reason being, here we should decide this option in the beginning of the financial year. That option selected in the beginning of the financial year will be applicable throughout the financial year. Is it clear? Then look into illustration 7. This illustration 7 is connected to transportation sector related exemptions and ITC. Okay, how they could connect exemptions and ITC in one question. Pacific International Limited, a shipping company registered in India, has made the following outward supplies for the month of September 2023. Transportation of goods by vessel from India to outside India. For vessel, do we have any exemption? Waterways, what is the exemption for transportation of goods? Only 2 exemptions. Inland waterways, specified goods between India in coastal waters is exempted, correct? But this is not exempted. So, taxable for payment of GST, even for ITC purpose also it will be taxable. See the working note, first step. Transportation from India to outside India, 20 lakhs taxable. So as it is taxable, we need to pay GST, that is 18%. So 20 lakhs into 18%. As it is taxable for payment of GST, it will be taxable for ITC. You understood? This is how you will prepare the working note first, na? Then next, second. Transportation of goods by aircraft from India to outside India. For aircraft, what is the exemption we have? For goods, only one exemption. What is that? Outside India to India. Is it outside India to India or India to outside India? Exempted or taxable? So therefore it is taxable and we need to pay GST. As it is taxable for payment of GST, even it is taxable for ITC. Then next, transportation of goods by vessel from outside India to India. Vessel outside India to India, taxable. Vessel outside India to India will be taxable. We don't have any exemption. So same story, correct? Then next, aircraft from outside India to India, exempted. Outside India to India, aircraft is exempted. As it is exempted for payment of GST, notified is exempted. Even for ITC purpose also it will be exempted. Do we have any special case? No. Then domestic transportation of goods by vessel from one place in India to other place in India. Do we have any exemption? Yes, specified goods. Specified goods transported between places in India is exempted. Waterways, inland waters or coastal waters, specified goods. But in the question they did not give specified goods. Due to that reason it will become taxable. So it will be taxable for payment of GST, so for ITC. Now you understood na this working note? Now what's the next step? Number one, statement number one, computation of gross GST payable. What is the gross GST payable? Just do the calculation, 3 lakh 60 plus 1 lakh 80 plus 2 lakh 70 plus 90,000, that is 9 lakhs. All multiples of 9 only. 9 ones are, 9 twos are, 9 threes are, 9 fours are, like that. So 9 lakhs. And 9 lakhs is the first statement. Second statement, do we have anything under RCM? Is transportation sector covered under RCM? No. And therefore RCM liability is not there. Next, number 3, ITC. In that ITC, check the question, tell me what is the ITC availed. 6 lakhs, that is 50 lakhs into 12%, 6 lakhs is the ITC availed. Don't sleep, tomorrow onwards you sleep daily. Don't sleep, one day, last day, please, Chalangala, please, okay. Don't sleep, these are all important questions here, and whatever I have given in practice manual, I have not given in this. These are all probable questions. That's what I am discussing in the class, okay. And so what I am doing is that last attempt also same indirect tax, this attempt also same indirect tax, next attempt also same indirect tax, but what varies is the area of importance. Which areas CA exam can ask? Actually, I like one subject called as financial management. My favorite subject. If anyone asks me, sir, what is your favorite subject? Financial management is my favorite subject. And you know, in my CA final, I got in financial management 92 marks. 92 marks. And in my CMA final, I got 90 marks, and CMA Inter also I got 90 plus. Because of that only I got All India first rank in CMA Inter. Final I did not get. So that much favorite subject it is for me. But I did not teach it. Reason being, I know only when we teach one subject we will be able to do the justice. And indirect tax I taught because indirect tax is so lively, and there is always an updation, and others cannot do. So I am doing. You understood? Really, others, what they will do? So many times this FM faculty, costing faculties, account faculties and all, when I see, I will get a jealousy about them. They have to learn only once. The same thing they need to repeat in every batch. No updation, but saturation will come. What is that saturation? Over a span of time, their efficiency will come down. They will not be that much excited to take the classes. and automatically the quality also will come down, and these people will go out of the market eventually. This is the story of every faculty. I could recognize that in the beginning itself. I thought, no, I don't want to. So I have either law, IDT or DT. So these three subjects. But which subject changes so frequently? DT yearly, law 2-3 years once, IDT every 6 months. Choose this. Choose this, so that every batch I feel like it is my first batch, because I have lot of things to learn new and teach new, and I will not teach it in the same way. If you observe last batch to this batch, definitely there will be a different way of things. So therefore, this is what gives me satisfaction. That's the reason why I am taking only one subject, this subject. So I am keeping track of how ICI will think and how they will be asking questions, which attempt what questions they have asked, which attempt what are the probable questions. Everything I am incorporating into my discussion and I am teaching for you. Okay, that's why students will be telling after exam, sir, many things you said in the class only came, sir. It is because of the simple research, as we are in touch with the subject. You understood or not? So that's why these are all very, very important areas which are not tapped. Maybe these can be tested in exam for the forthcoming. Okay, so see this. First, ITC avail. What is the ITC avail? 50 lakhs into 12%, 6 lakhs. ITC reverse, 6 lakhs into, what is exempted turnover? See the table. Only 5 lakhs divided by total turnover, 55 lakhs. 5 by 55, 54,545. 6 lakhs minus this, 5 lakh 45, 455. Already you know what is the liability in 9 lakhs. 9 lakhs minus 5 lakh 45, 455. 3 lakh 54,545 is the net GST payable. Understood? The next one you see, special provision for availment of ITC by a banking company, financial institution or NBFC. Already I told you what are the options available to them. Option 1, proportionate ITC. Means proportionate ITC, what they will do? Normal. So ITC availed, ITC reversed. So far what we did na, that is proportionate ITC method. What is second method? Ad hoc ITC method. In ad hoc ITC method, what they will do? Flat 50% they will take, remaining 50% they cannot take. Correct? Now, there are some key points, differences between these two. That is, whenever you have some inward supply, you are a bank, you are having some inward supply from a distinct person. In that case, under option 1, you will do proportionate ITC only. But in case of option 2, they are telling you can go for 100% ITC. Okay, what is the inward supply pa? You are a bank pa, from another branch you are receiving the service. So inward supply from a distinct person. Under proportionate ITC method, you need to do the proportionate calculation for this inward supply also. But under ad hoc ITC method, you don't have to do proportionate ITC, full ITC you can enjoy. Got it? Say this, restriction of 50% shall not apply to tax paid on supplies made to another registration within the same entity. That's what I have given. Inward supply from distinct person, full ITC available, 50% reversal not applicable. Are you understanding this? Whereas option 1, even inward supply from distinct person also treated as common ITC, and we need to do the proportionate reversal. Got it? And this option, once excised, cannot be withdrawn during remaining part of the financial year. Another difference is that usually inward supply used fully for taxable, we will take full credit. Under proportionate ITC method, inward supply used fully for taxable outward supply, we can take full credit. Inward supply used for exempted, we should not take credit. Correct? Inward supply commonly for taxable and exempted, we will take proportionate credit. Agreed or not? Raw material like input X used fully for taxable outward supply, you take full credit. Input Z used fully for exempted, don't take credit. Input Y partly taxable, partly exempted, take the proportionate credit. This under which method? Proportionate ITC method. But in ad hoc ITC method, inward supply used for taxable, inward supply used for exempted, inward supply used for both taxable and exempted, everything into 50% only. You understood? Even fully used for taxable also 50%, fully used for exempted also 50%, partly taxable, partly exempted also 50%. That is the another difference between these two options. Is it clear? So see this, first we need to take total ITC. Total ITC minus ineligible ITC. What is ineligible ITC? Blocked credit and non-business purpose. You understood? Blocked credit and non-business purpose is the ineligible ITC. And you take out. Definitely you cannot take that credit. What pa? Even though it is coming in GSTR 2B, you cannot take blocked credit. You cannot take inward supply used for non-business purpose. Correct? Then take out ITC for taxable, ITC for exempted, remaining is only common ITC. But under option 2 you see, total ITC minus ineligible ITC is only common ITC, which means what? Exclusive used for taxable also common, exclusive used for exempted also common. Okay. So based on that, I gave one illustration. Already we discussed HDFC Bank like that one question. Similar to that, you take it for practice. So this question, because it's there, actually it is your past exam question. Already I have discussed that in the practice manual. It is there in that video. So therefore you don't have to bother about this. You can watch that video also, or if you want to practice also, you can take it for practice. Now we are moving on to blocked credits, section 17, subsection 5. A very, very important area. If you are not being tested on this block credit, return the question paper and come. That is not CA intermediate exam. Some other exam you would have went. Okay. That much important it is. Definitely it will be tested. See the first one. What is block credit basically? There are some inward supplies, even though it is used for business purpose, but you cannot take ITC, that is called as blocked credit. See that motor vehicle related block credit, you are purchasing some motor vehicles and used it for transportation of persons. What will come under motor vehicles used for transportation of persons? Two-wheelers, cars, so SUVs, bus, etc. will be coming under motor vehicles for transportation of persons. Vessels and aircraft, self-explanatory. Others, can you tell me what are the other motor vehicles? Lorry, tractor, road roller, crane, JCB. Yes, correct. These are all other motor vehicles. On which can we take ITC? Yes, yes, we can take ITC, there is no restriction. So lorries, trucks, ambulance. But sir, ambulance, would it come under transportation of persons? No. Ambulance is to provide a first aid. For example, you want to go immediately, emergency to one place. Can we book an ambulance and pay some 500 and go? No, na, impossible, right? So it is not for transportation of persons. That's why it will come under other motor vehicles. ITC always available. For other motor vehicles, no restriction. Correct? Then for transportation of persons, again see that capacity does not exceed 13, capacity exceed 13. But while determining the capacity, it includes driver seat. Someone asked here last class. So capacity includes driver seat. I did not tell passengers. Capacity. Capacity means that includes driver. Okay. Now what is capacity exceed 13? No. Example. Bus, mini bus or a big bus. Buses usually come under capacity exceed 13. Is there any restriction? No. ITC always available. But the restriction is where? Capacity does not exceed 13. Generally capacity does not exceed 13, ITC not available, but in 3 exceptional cases ITC available. What is that? Number 1, used for further supply. Example, I am a dealer, car dealer. I am purchasing car, selling car. Can I take ITC? Yes. Used in the business of transportation of passengers. Means what? So Ola, Uber or any travel agency, can I take ITC? Yes. Driving schools. So yes, these 3 people alone can take ITC on motor vehicles less than 13, capacity less than 13. For all other cases, ITC not available. Are you understanding this? Then vessels and aircrafts. Vessels and aircrafts generally blocked credit, ITC not available. However, 4 exceptions we have. In that these 3 exceptions are common. Further supply, used in the business of transportation of passengers, imparting driving skills. What is the extra point that we have? Used for transportation of goods, ITC available. Now, just observe this chart. I will give you some questions, you answer. A chartered accountant purchased a car for use in his profession. Can he take ITC? Why? Capacity does not exceed 13, not covered under the exceptions, therefore ITC not available. Understood? Then another case. So, a travel agency purchased a car for use it in the business of transportation of passengers. Car capacity does not exceed 13, but it is covered under the second exception, so they can take ITC. Then, a company which is in the business of renting of motor vehicles purchased a motor vehicle to give it on rental basis. Can they take ITC on the motor vehicle purchased? Where? Further supply. Further supply means not only sale but also renting of motor vehicles. Then, an actor purchased a caravan for the purpose of taking it to the shooting spot and staying in that caravan. So, whenever there is a shooting break, etc. Now, can he take ITC on the caravan purchased? Why? He can take ITC because it will not come under motor vehicle for transportation of persons, it will come under other motor vehicles. As it is other motor vehicles, ITC can be availed. You understood? Next. So, this flying squad, like that, one company purchased a tempo traveler and modified it into, like a vehicle for transportation of dead body. You would have seen one vehicle, tempo traveler they will buy, full glass they will put, and dead body and all they will keep, and they will be transporting rich dead body. Okay. Poor dead body means normal vehicle without AC, open air, etc. But little costly dead body means, so they have to properly take it, okay, in a glass, etc. and all vehicle, because the dead body, at least at the time they are going, till the time they are going, the dead body require AC, what to do? So, for that reason, okay. Now, in this case, can they take ITC on the vehicle purchased? Why? I am asking vehicle, they can take ITC or not a supplier, I don't need. ITC available or not available? ITC available, correct answer. Now tell why. It will come under others. But the outward supply is not a supply. Transportation of dead body, still they can take ITC? Yes, because what we learned, only sale of land, sale of buildings, sale of securities and supply of warehoused goods is only exempted for ITC. Remaining cases of exclusion from supply, it is not a supply, there is no restriction, means logically we can take ITC with respect to that. You understood? But ICI has taken a view that if it is not a supply, ITC not available like that. In one question, they have taken that view. So, but that question was given at the old context. Previously, we did not have clarity at the time they gave. Now, in today's context, if they are asking this question, what you need to write? You need to mention that outward supply is not a supply. Consequently, they can take ITC on inward supply. But if outward supply is covered under exempted, then we cannot take ITC on inward supply. Is it clear? Next, another example. Reliance Industries Limited purchased an aircraft for transporting its director. Can they take ITC on that? Why? Aircrafts not covered under the exceptions. Therefore, ITC available or not available? Not available. Suppose Blue Dart Courier Company purchased an aircraft for transporting the courier parcels. Can they take ITC on that? Yes, because it is used for transportation of goods. Understood? So, whenever you get a question, you need to just apply this chart and arrive at whether ITC available or not available. Done? Now, look into the second chart. There are 4 services in relation to motor vehicle. If motor vehicle is eligible for ITC, on these 4 service also GST paid can be availed as ITC. Okay. So what are those 4 services? Repairs and maintenance, insurance, servicing, hiring, renting and leasing. What's the difference between repairs and maintenance and servicing? Servicing will be in the authorized service center. Repairs and maintenance will be in the workshops, private workshops. So both are connected. Then insurance, hiring, renting and leasing of motor vehicles. So if the motor vehicle purchased is eligible for ITC, on these 4 service also GST paid can be taken as ITC. If the motor vehicle purchased is not eligible for ITC, on these 4 service also GST paid cannot be taken as ITC. For example, listen carefully. So from quite a long time, actually I wanted to drive this BMW car. Okay, let's see how that car will be. Why that much of fancy towards this BMW, Audi, Benz, etc. and all. So therefore I wanted to buy, drive the car. But I cannot afford to buy that car. That will be somewhere 60 lakhs, 70 lakhs or 1 crore like that. Instead, we can buy 5 cars for that and we can open a travel agency. That's how my mind will think, okay. And therefore, I cannot. But my desire can be fulfilled by taking that vehicle on rent, correct? Now, I have taken that vehicle on rent for 3 days. Each day I am paying 10,000 rupees, 30,000 rupees. Now, can I take ITC with respect to this renting? If I buy car, can I take ITC? If I buy a car, can I take ITC? So on that car, when I take on rent also, I cannot take ITC. Understood the logic? If a person purchasing a car, can he take ITC? No means that car if he takes on rent also, he cannot take ITC. Got it? Another example. A company wanted to transport its passengers from the home to office, office to home. For that, it took a bus on rent. Can it take ITC on the renting of the bus? Yes, because if they buy the bus, they can take ITC. So that bus when they take on rent also, they are eligible for ITC. Got it? Then, a chartered accountant purchased a car and he used it in his profession, and on that car he took a insurance and he paid insurance along with GST. Can he take ITC on that insurance? No. As car is not eligible for ITC to him, insurance also not eligible for ITC. What if the same car is purchased by a driver who is using it in Ola or Uber for transportation? Can he take ITC on the insurance? Yes. Understood, pa? So 4 services. What are those 4 services? Repairs and maintenance, insurance, servicing, hiring, renting and leasing of motor vehicles. See the key points. While determining the capacity, driver should be included. Means including driver should be taken. Further supply can be even sale of motor vehicles or motor vehicles given for renting, hiring or leasing. Then there is one point, third point you see, repairs, insurance and servicing of motor vehicles received by a general insurance company is always eligible for ITC. What does it mean? For example, you purchased a 2-wheeler and that 2-wheeler you just drove in the road and thinking that, like you wanted to test to what extent the speed it will go, you drove, okay, and you were going in somewhere 130, 140, 150 speed like that, and needless to say, in our Chennai, lot of speed breakers, lot of holes, etc. are there. And to escape that speed breaker or to escape that hole, you just bent the vehicle, because of which you met with an accident. Now, the vehicle is completely damaged. What you will do? You will take the vehicle to the service center. Now, when you take the vehicle to the service center, they will estimate the repair cost as 60,000 rupees. But that 60,000 rupees, you will not pay, as it is a new vehicle. By default, first year, there will be a bumper to bumper insurance. So therefore, the insurance company will pay the entire 60,000. In that 60,000, there is GST also. Can the insurance company take ITC? Yes. Yes. Because the restriction of the insurance is only to the owner of the motor vehicle, but not to the insurance company. So now we need to check for the owner of the motor vehicle. Insurance is not eligible for ITC, na? Correct or not? If the motor vehicle is not eligible for ITC, when you buy the 2-wheeler, can you take ITC? No. So on the two-wheeler, when repairs or insurance is done, that is also you cannot take ITC. But this restriction do not apply to the insurance company. Insurance company can always take ITC. Are you understanding this point? Fourth one, hiring, renting and leasing of motor vehicles as a statutory obligation by employer to employee is also eligible for ITC. Now listen carefully. A company taking the cab on rent for transporting its employees, generally can they take ITC? First, company purchasing the cab, can they take ITC? No. As company purchasing the cab, they cannot take ITC. Even on renting of cab also, they cannot take ITC. Are you understanding? A company, a software company, which is purchasing a car to transport its employees, can they take ITC? No. Capacity does not exceed 13, not covered under exceptions, they cannot take ITC. Now the cab or car, they are taking on rent, can they take ITC? No. As car is not eligible for ITC, even the renting of car is also not eligible for ITC. Understood? Now, if that car is taken because of a statutory obligation, then can they take ITC? Yes. That is this. Hiring, renting and leasing of motor vehicles as a statutory obligation. Means government of Tamil Nadu mandates. Because this mandate is there for quite a long time, but companies are not properly following. Every company for their female employees who are working in the night shifts mandatorily should provide a proper cab facility till the time they reach their home. One escort also should be provided. So mainly to prevent the crimes that are happening, and this GO was there in long back, some 2017 itself this GO was there. But companies are not, because the problem is we make a law, but that law is enforced or not, we will not check. So enforcement of law is very much required. So law making is easy. They will sit and they will make the law, but whether the people are following the law or not. So, and that is where the issue here, many companies are not doing now, they are forgetting that there is a GO like that, because there is no one to question them. So the problem with every crime is that if someone is not questioning only, the problem will happen. Just like today's, whatever Kolkata, the issue which is happening, so it is not because of that Kolkata issue. There are many people who are undergoing this kind of molestation or abuse, etc. and all. Everything together came in one place. So this is actually ignition. Previously, from quite a long time, lot of people at different places, they are facing this issue. But at one place, it is coming. And it's a good thing. You also please, to the extent possible, post it in the social media, and you also should give the voice, because we need a very stringent law. At the same time, that should be enforceable also. But the today's law is not stringent, and like Arab countries, some kind of law we should be having. Cut it and throw it, okay? So therefore, some kind of law like that should be coming to India also. That is mandatorily required. But the problem here is that we have a number of loopholes in the law. And like how Prevention of Terrorist Act, POTA, like that, there should be a separate act, no inquiry, no age, nothing, hang to death. You understood? Something of that sort is really required. For that we should voice out. You understood? Only when the punishment is severe, so people will have the fear. When the punishment is not severe, definitely people will take it for granted. So the punishment should be so severe that people should have a fear of even touching their wife also. You understood? You understood what I am telling? So that much severe punishment should come in India, and then only these issues will solve. So coming back to this, here what has happened, already some law is there under that government order, because this issue has happened. That's why government gave that order. So when girl was hacked to stabbed to death in the Nungambakam railway station, and immediately after that only government could recognize, yes, so there is no protection to the women who is working in the night shift, so they brought this GO. Under that government order, they are taking the rent of cab and they are providing the cab facility to their employees. Now can they take ITC? Yes. This obligation need not be under GST law. This obligation can be under any law for the time being in force. So can be under any law. Ambulance and caravan are not motor vehicles for transportation of persons. Due to that reason, it will come under other motor vehicles and we can take ITC. Now, first part that we have completed is motor vehicle related blocked credits. Mostly the blocked credits will be on motor vehicle related only. The next area is construction related blocked credits. In construction related, we have three inward supplies on which we cannot take ITC. What are they? Any service used for construction of immobile property, works contract service for construction of immobile property, or any goods for construction of immobile property, we cannot take ITC. What are the three inward supplies? Any service received for construction of immobile property, any goods purchased for construction of immobile property, last works contract. What is the difference between this works contract and this any service? Usually in works contract there will be both goods and service element, but in the services there will be only service element. But whatever the case may be, all these three purchased or received in relation to construction of immobile property is blocked credit, we cannot take ITC. However, we have three exceptions wherein we can take ITC. Exception number 1, the restriction is only to the owner of the property, not to the supplier. Suppose if a builder is purchasing the goods for construction of immobile property, he can take ITC. You understood? A builder, that too, what kind of properties he will take ITC? Commercial properties. Because for residential properties, the rate of GST is 1.5% or 7.5% without ITC, they cannot take. But for commercial properties, definitely they will be able to take ITC. Who? Builders, supplier, that is builders. And ITC restriction is not there for the supplier. ITC restriction is only to the owner of the property. Second, suppose if that property is a plant and machinery, for example, construction of lifts, construction of escalators, construction of generator, etc. Even though it is immobile in nature, but for construction of that, they can take ITC. So plant and machinery. But the plant and machinery excludes telecommunication towers and pipelines laid outside factory. For construction of telecommunication towers, if we receive, even though it is like a plant and machinery, but we cannot take ITC. Same way, pipelines laid outside the factory. What if it is pipelines laid inside the factory? Can we take ITC? Yes. Then if construction expenditure is charged to P&L, then also ITC can be availed. Because only if construction expenditure is capitalized, ITC cannot be availed. But if it is charged to P&L, we can take ITC. So tell me what are the three exceptions. Number 1, restriction not applicable to, simply you remember, restriction not applicable to supplier. Okay. Number 2, plant and machinery excluding telecommunication towers, pipeline laid outside factory. Third, charge it to P&L. Charge it to P&L also we can take ITC. Clear? Once again, restriction not applicable to supplier. Number 2, plant and machinery other than telecommunication towers or pipeline laid outside factory. Third, expenditure charge it to P&L. Now see this example. Ford Limited wanted a factory building to be constructed. They approached a works contractor. That works contractor supplies goods and services. On which can the Ford Limited take ITC? No. Why? Works contract is a blocked credit. Now this works contractor purchases the material from the market and pay the price plus GST. Can he take ITC? Yes, because the restriction is not applicable to supplier. Same way, works contractor receives the service of construction services. Can he take ITC? Yes, because the restriction is not applicable to supplier. Now, Ford Limited purchases the material from the market. On which can it take ITC? No, because any goods purchased for construction of immobile property is block credit, so they cannot take ITC. If they receive construction service, can they take ITC? No, because any service received for construction of immovable property, it's a block credit, they cannot take ITC. Now this construction contractor receives service from interior decorator, can he take ITC? Yes, because the restriction do not apply to supplier. What if the interior decorator directly provides service to Ford Limited? They cannot take ITC because the restriction is only to the owner of the property. Is it clear? Next. So we completed 2 block credits, one is motor vehicle related, second is construction related, and then we have other blocked credits. In these other blocked credits, in the first column I gave you what are all the blocked credits, and in the next column we have the exceptions to these blocked credits. Means it is block credit, but in these exceptional cases we will be able to take ITC. That is the meaning of that. See the first one. Membership of a club, health and fitness center is a blocked credit. So we cannot take any ITC. What is that? Membership of a club, health and fitness center. Example, lot of chartered accountants will take membership of social clubs like Rotary Club, Lions Club, etc. in order to increase their network, so that they will be getting some rich people as clients, because only rich people will be going to clubs, thereby they will be getting some work. So this is actually business expenditure, even then they cannot take ITC. Same way, actors or celebrities will be going to the gym and they pay the gym membership at GST, but they cannot take ITC with respect to that, even though it is their business expenditure. However, what is the exception for this membership of a club, health and fitness center? Only one exception. If it is provided by employer to employee under a statutory obligation. It is like government is mandating the employer to take membership of a club. So that is for the welfare of the employees. Now in this case, can the membership fees paid with GST be taken as ITC? Yes, because it is under a statutory obligation. Apart from that, we don't have any exception for membership of club. See the second point. Travel benefits extended to employees on vacation. Employee is going on a vacation, but that expenditure is borne by the employer. Can he take ITC? No, he cannot take ITC because it is his personal expenditure. What if the employee is going for business visits? Can the travel expenditure be taken as ITC? Yes. What if that travel benefit to employee is under a statutory obligation? Then ITC available or not available? Available. Sir, what is statutory obligation means? Means as per government law, mandatorily employer has to provide the leave benefits to the employee. In that case, they can take ITC. The next, non-resident taxable person, NRTP. Who is a NRTP? A foreign person who is coming to India. And is he having any fixed place of business in India? No. But he is engaged in supply of goods or services in India, then he will be called as a non-resident taxable person. And is he coming permanently here or occasionally? Occasionally. Example, recently this Anant Ambani's wedding has happened. For this Anant Ambani's wedding, this Justin Bieber, then one more, Rihanna, etc. people and all came. They performed here, correct? Lot of foreigners came here. John Cena also has come, and they have come here free. No, it is for a consideration. Then why sir they are required? We are speaking, we are speaking about them, that they came here. Then this guy is big fellow, etc. and all. For the sake of that, okay, let him spend. It is his money. Let him spend. Not at all a problem. And we should not bother about as to like why is he spending, etc. and all. Let him spend. Actually, it is his money only he is spending. Let him spend. But sir, he is in turn earning. That is your mistake. He is in turn earning means you are giving him a scope to earn. So everyone will earn. Now you should not sit and cry. Are you understanding? If someone is earning, because of you only they are earning, correct? Now, if you are not there, they will not earn. Once you are making them to earn, at that time itself when they have given free SIM at all, for the sake of that internet, if we did not get that free SIM and give them the customer base, today he would have celebrated his son's birthday somewhere in a temple or somewhere in one place, close family members you would have invited, it would have spent. But what you did, we stood in the queue and we purchased that SIM and we created him a market share. We killed Aircel company, we killed Vodafone, we killed Idea, Airtel, okay, surviving, and this much market share we have given him. Seeing that foreign companies and all invested in this business, then automatically, why not? Yeah, definitely. So he will be spending. You understood? For our actions only, don't expect the leader should be good and all. If we are good, automatically the leader will be good. So the change should come within first. Okay. Coming back to this, for this, a number of celebrities came. So Priyanka Chopra's husband and all came. So a lot of people came. Everyone came here, earned money and left. Are they called as NRTP? Yes, they are called as NRTP. When Justin Bieber and Rihanna has come here for giving the performance, they have brought lot of goods along with them. On those import of goods alone, GST, IGST paid can be taken as credit. But within India, if they have received any inward supplies, on that they cannot take ITC. Are you understanding? So NRTP cannot take ITC. Only on one case they can take ITC. What is that? Import of goods. Even cricketers who come to India to play IPL matches from foreign will also be coming under NRTP. They should register compulsorily, but they cannot take ITC. They can take ITC only on goods imported by them. Next. Look into the next one. Related to food, related to beauty, related to insurance. Okay. So three things. Food, beauty, insurance. Too much food if you eat, beauty will spoil, then insurance is only required. You understood or not? So food, beauty, insurance. What is related to food? Food and beverages, outdoor catering. Then beauty, beauty treatment including cosmetic, plastic, hair transplantation. Insurance, life insurance and health insurance. Related to this, we have three exceptions. If inward supply, this employer-employee statutory obligation is there. Inward supply, outward supply in the same category is also there. Inward supply part or component of the outward supply is also there. For example, a factory purchased food and beverages in order to mandatorily provide the food and beverages as per Factories Act to their workers. Can they take ITC on the food and beverages purchase? Yes, because it is under a statutory obligation. Same way, a person who is in the business of sale of food and beverages, he purchased food and beverages. Can he take ITC? Yes, because inward supply, outward supply in the same category. Suppose if it is an airline which is providing food and beverages to their passengers, if they buy the food and beverages, can they take ITC? Yes, because inward supply is part or component of the outward supply. So they can take ITC. That is this food and beverages point. Then hiring, renting and leasing of motor vehicles. Already we know one exception for hiring, renting, leasing. What is that? If the motor vehicle is eligible for ITC, hiring, renting, leasing eligible for ITC. Another point also we discussed, if it is under a statutory obligation also we can take. Then these 2 points are also there here. That is if inward supply, outward supply same category, inward supply part of outward supply. For example, I am into the business of renting of motor vehicles. I took the motor vehicle on rent and gave it on rent. Can I take ITC with respect to that? Yes. Then next, suppose if we are purchasing from a person opting for composition scheme, can we take ITC? No. It's a block credit and we don't have any exceptions. Suppose if we are purchasing goods used for personal consumption, can we take ITC? No. Already we know, because inward supply should be used or intended to be used in the course or furtherance of purchase, furtherance of business. Then this point also I discussed today. If the purchased goods are lost, stolen, destroyed or written off or disposed of as gifts or free samples. So that gifts or free samples point already I told you. I purchase some goods for distributing it as gifts or free samples. Can I take ITC on that? No. If I purchase some goods and those goods are destroyed, written off, destroyed means what? Some accident, fire accident, etc. or stolen or written off, it became obsolete and I will write off. Can I enjoy the ITC? No. Then last, goods or services which are used for CSR obligation under Companies Act. So under Companies Act, every company has to spend some money, some profit towards the corporate social responsibility. Under that spending, they will receive some inward supplies. On which can they take ITC? No, they cannot take. And here we don't have any exceptions for that. You understood? So these are the various blocked credits that we have. So first is motor vehicle related, second is construction related, and third is other block credits. But for these other block credits, you should know what are the exceptions also, okay. Then next, see section 18. The last section that we have in input tax credit in special circumstances. Okay, we'll start. See that input tax credit in special circumstances, section 18, which is in page number 96. ITC in special cases, section 18. So in this 18, basically 18 subsection 1 we are trying to understand. 18.1 talks about availment of ITC on closing stock. Availment of ITC on closing stock means initially at the time of purchase I have not taken ITC or I could not take ITC. Now at a later point of time I am taking the ITC. There are 4 situations which are given here. Number 1, initially I was an unregistered person and I am liable to get registered, so I am making application for registration within 30 days. Then at the time when I was unregistered person, I made some purchases now, I could not take that ITC, so that I can take now. Is it clear? Again I am repeating, initially I was an unregistered person. At that time I have not registered, so I would not have taken ITC. Now I am liable to get registered and I make application for registration within 30 days. Now whatever ITC that I have not taken at that time, I will be able to take now. On what? On the closing stock. Which date closing stock? Before the date the person is liable to get registered. And what is the meaning of closing stock? Inputs as such held in stock, inputs in the form of WIP held in stock, inputs in the form of FG held in stock. So see this. So there is a person who was unregistered initially and at a later point of time he is liable to get registered. Say on 5th of March 2024 a person is liable to register. So what he made? He made application for registration. What is the time limit within which he need to make application for registration? Within 30 days he need to make application for registration. So on 31st March 2024 he made application for registration. Application for registration. Thereafter somewhere on 5th of April 2024 registration certificate is granted to him. Now, so from the date he is liable to get registered till the date he is making application for registration, what is the duration? The duration is within 30 days. Now, what should be taken as a closing stock date? The closing stock date should be before the date the person is liable to get registered. What is before the date the person is liable to get registered? 4th March 2024. As on 4th March 2024, what we need to check? We need to check what is the closing stock. So what will be the closing stock usually? Raw material as such or WIP or FG. Now you see what is the raw material that is present in the WIP and what is the raw material that is present in the FG. On these 3 raw materials, whatever GST that is paid, on these 3 raw materials, whatever GST that is paid, the GST paid can be availed as ITC. GST paid availed as ITC. And when we need to take the ITC? When we need to take ITC? After we get the registration certificate. Again I am repeating, a person is liable to get registered on 5/3/2024. So he made application for registration within 30 days, that is 30/3/2024. After he makes application for registration, the registration certificate is granted to him on 5/4/2024. Now we need to see what is the closing stock as on 4/3, that is before the date the person is liable to get registered. As on 4/3/2024, we need to see what is the raw material in WIP, raw material in FG. On these 3 raw materials, whatever GST is paid, that can be availed as ITC. But when it should be availed ITC? After they get the registration certificate, they can avail the ITZ. But what is the time limit by which they need to avail the ITZ? So what is 1 month from, that is 30 days from 5/4/2024, 30 days, within 30 days from 5/4/2024, ITZ 1 needs to be filed. How this ITZ can be availed? By filing one ITZ 01 form. So there is one form called as form GST ITZ 1. By filing that form, they can avail the ITZ within 30 days from the date on which they get the registration certificate. Is that clear? Now this is the first situation. So before the date, that person was unregistered. With effect from date, he will be liable to get registered. But the important condition is what? He need to make application for registration within 30 days. This is important. He need to make application for registration within 30 days. Then, so that is about the first situation. You can see there, person applying for registration within 30 days of becoming liable to become registration. Credit entitled on inputs as such held in stock, inputs in WIP held in stock, inputs in FG held in stock. Which date closing stock should be taken? Before the date the person is liable to get registered. Now this is the base that you need to remember. From this you need to remember what are the changes for the other situations. What is the second situation given here? Total 4 situations. So far what we have seen is the first situation. Second situation says, what is the difference between first situation and second situation? First situation, he is liable to get registered, he made application for registration within 30 days. But in the second situation, he voluntarily got registered. Now, which date closing stock? Here also same closing stock. Inputs as such held in stock, inputs in WIP held in stock, inputs in FG held in stock. But which date closing stock should be taken? Before the date the person is getting the registration certificate, we need to take the closing stock. Not before the date he made application for registration. Before the date he is getting registration certificate, that date whatever is the closing stock is there, that should be taken, because in the previous case he is liable to get registered from the date he is liable to get registered, he is liable to pay GST. But now he need to pay GST only when he get the registration certificate, because he is voluntarily getting registered. That's why whichever date he is liable to pay GST, before that date only we will see the closing stock, okay. Then, so third situation is a person was under composition scheme. That person, when he was under composition scheme, he would not have taken ITC at that time. Now he is migrating to the normal scheme. When he is migrating to the normal scheme, he will be able to take ITC on the closing stock, because at the time when he was under composition scheme, he cannot take ITC. So now he will take. But what is the closing stock? Same, but extra one more point we have, capital goods also. Inputs as such held in stock, inputs in WIP held in stock, inputs in FG held in stock, even on capital goods. But in case of capital goods, we need to reduce 5% for every quarter or part thereof from the date of purchase till the date of conversion. For example, we have used it for 3 quarters. So what is the depreciation that will be allowed? 5% into 3 quarters, 15% will be reduced, and remaining credit can be taken. Because capital goods is purchased before 3 quarters, means last 3 quarters it has been used. Used means we need to depreciate. So therefore minus 5% for every quarter or part thereof from the date of invoice till the date of conversion, and remaining amount we will take as ITC. So tell me, for capital goods alone how much ITC? For inputs, input service, and that is for inputs as such, inputs in WIP, inputs in FG, no issue. Whatever GST we pay, that much we will take as credit. But for capital goods alone we are reducing. How much? 5% for every quarter or part thereof. From which date to which date? From the date of purchase till the date of conversion. Then last situation is also same. That is, a person who was making exempted supplies. When he was making exempted supplies, he would not have taken ITC. Now it got converted to taxable supplies. Now can he take ITC? Yes. Even on the closing stock he can take ITC. What is that closing stock? Same. Inputs as such held in stock, inputs in WIP held in stock, inputs in FG held in stock, even on capital goods also. Okay. Now tell me, what is the difference between 18 1A and 1B? 18 1A and 1B. That is first situation and the second situation. Only the situation difference. What is the situation difference? Liable to get registered, made application for registration within 30 days. Here voluntary registration. And what should be the closing stock in this case? Before the date the person is liable to register. And what is the closing stock in the second case? Before the date he gets the registration certificate. But both cases they will take ITC on inputs as such in stock, inputs in WIP in stock, inputs in FG. Now, what is the difference between 18, 1C, 1D? Third situation and fourth situation. Composition scheme to normal scheme, exempted supplies to taxable. Both cases before the date of conversion, closing stock, correct? And what is closing stock? Inputs as such held in stock, inputs in WIP held in stock, inputs in FG held in stock, and capital goods after reducing 5% for every quarter. Now, what is the difference between 1A, 1B versus 1C, 1D? 1A, 1B they cannot take credit on capital goods, but 1C, 1D they can take credit on capital goods. Good. Anything else? Very good. 1A, 1B now only they are getting registered, but 1C, 1D already they are registered. Super. Next. Very, very important point is that in case of 1A, 1B matching not required, but 1C, 1D matching required. ITC claim shall be verified with the corresponding details furnished by the corresponding supplier. Means matching. Correct? Just write down there matching of ITC. Matching of ITC. Matching of ITC means whenever we are taking the ITC that should match with the corresponding details of the supplier. Okay, that matching of ITC is required. Otherwise, we cannot take the credit. Matching of ITC on the day immediately preceding the day from which he becomes liable to pay tax under regular scheme. Next, understood? So tell me what are the three differences that we have between 1A, 1B, 1C, 1D. I gave it in the below table. Same page. 1A, 1B, 1C, 1D. No ITC on capital goods, here ITC on capital goods. 1A, 1B, first situation, second situation, unregistered person getting registered, here only registered person. 1A, 1B, no matching of ITC, here there is matching of ITC. Understood? How to take this ITC? In 3B? No, it is not in 3B. Usually we will take ITC in 3B, but in this case, we will not take in 3B, we need to file a separate form. What is that form number? Form GST ITC 1. This form ITC 1 should be certified by a chartered accountant or cost accountant if the claim of ITC exceeds 2 lakhs. So say this. An electronic declaration in ITC 1 shall be made by the registered person within 30 days. I told you. So whenever they are registering or whenever they are converting, from there within 30 days they need to file this ITC 1. And for which it should be certified by CACMA where the claim of ITC exceeds 2 lakh rupees. Then another point is that, which is common for all these cases, sir, when the closing stock should have been purchased? The closing stock should have been purchased within 1 year prior. So today if you see the closing stock, the invoice date to the closing stock date should be within 1 year. Suppose the invoice date to closing stock is beyond 1 year, we cannot take that as ITC. So that is given. Where the tax credit is claimed under 18(1), with respect to closing stock, section 18(2) provides that registered person shall not be entitled to take input tax credit after the expiry of 1 year from the date of invoice, which means the date of invoice to the closing stock date, common for all, inputs as well as capital goods, means the closing stock should have been purchased within 1 year prior. What if it is purchased 3 years prior, 2 years prior and all? We cannot take credit, okay? So now we are moving on to the next one, transfer of ITC. What is this transfer of ITC? I am transferring the business to you. I told you that there is no death to input tax credit. Whenever I have some excess credit, what I will do with that excess credit? I will carry forward and I will adjust against the future liability. Not like set off and carry forward of losses. So for how many years we can carry forward, set off and carry forward? For a period of 8 years, no, 4 years or 8 years like that. But there is a limit. But in this case of ITC, no limit, infinite time. Even 80 years, 90 years, 100 years also you can carry forward. And we can set off with our liability. Even when I transfer the business to you, I can transfer the ITC also. That transfer is what we are discussing. So whenever there is a transfer of business with specific provision for transfer of liabilities, means what? All assets and liabilities I am transferring to you. In that assets and liabilities, ITC also can be transferred. So whatever balance that is there in my electronic credit ledger, I can transfer it to you. I am transferor, you are a transferee. I can transfer it to you. For doing this transfer, I need to file one form called as ITZ2. ITZ2. Where there is a change in constitution of the registered person on account of sale, merger, demerger, amalgamation. So any kind of transfer of business. With specific provision for transfer of liabilities, that is important. It should not be mere transfer of business. It should be with liabilities, means it should be like amalgamation in the nature of merger. All assets and liabilities should be transferred. Not that liabilities I will pay off, only assets will be transferred. That is not. All assets and liabilities should be transferred. Then the ITZ can be transferred by transferor to the transferee in one form. What is that form? ITZ2. And this ITZ2 should be certified by CA or CMA. What is the difference between ITZ1 and ITZ2? ITZ1 for availment of ITZ on closing stock, ITZ2 for transfer of ITZ. Both should be certified by CA, CMA, but ITZ1 will be certified if the ITZ exceeds 2 lakhs. But ITZ2 will not be certified based on monetary limit, always it should be certified. Means whether the ITZ exceed 2 lakhs or does not exceed 2 lakhs, whatever it may be, it will be certified. Understood or not? Then, in case of merger, there is no issue because two companies are coming into one company. So, both the companies will transfer the ITZ to one company. But in case of demerger, from one company, there is a split into two companies. Then in that case, how the ITZ will be transferred? One apportionment we need. For example, AB Limited demerged into A Limited and B Limited. Now in that case, in what ratio the ITZ will be distributed between these two? For that they are asking us to take the assets ratio after demerger. Post demerger, there will be assets of A Limited, assets of B Limited. Say assets of A Limited 100 crores, assets of B Limited 50 crores. Then in this 2:1 ratio, we will distribute the ITZ. Is it clear? That's the next point. In case of demerger, credit shall be transferred to the new entities in the ratio of net assets. Net assets means all assets, whether ITZ availed on that assets or not availed on that assets. Total assets we need to take, because out of the asset side, there are some assets on which we will take. Land and all we will not take ITZ na, because land will be not a supply. Land also will be there, building also will be there, machinery also will be there. But land and building we will not take ITZ, machinery we will take ITZ. So they are telling, don't bother about that, all the assets you take for doing the distribution, okay. Then next another point, in case when single registration is being separated into multiple registrations, then also we can transfer the ITZ. What is that? In some cases, we would have obtained a single registration within the state. Even though we are doing business in multiple places of business, but we will get a single registration. Now we decided to go for separate registration. For example, so far we were doing business in 3 states, Chennai, Coimbatore and Madurai. Now it so happens that, so we want to get a separate registration. So now we are getting 3 registrations. Now one registration became 3 registrations. Now from this one registration, we need to distribute the credit to the 3 registrations. Again in what ratio? Just like demerger. In what ratio we did the distribution? Assets ratio. The same way we need to divide that in the assets ratio of these 3 new registrations. These 3 new registrations means already business is there, already assets will be there in these 3 places. Just see the assets ratio and divide it. In case where single registration within a state is divided into multiple registrations based on place of business, ITZ shall be transferred to multiple registrations from single registration through ITZ2A. CA-CMA certification is not required, and in what proportion it will be given? In the proportion of assets. So therefore one more form we have, ITZ1, availment of ITZ on closing stock. ITZ2, transfer of ITZ in case of transfer of business. ITZ2A, transfer of ITZ from single registration to multiple registrations. And in case of ITZ1, CA-CMA certification required if ITZ exceeds 2 lakhs. ITZ2, CA-CMA certification always required. ITZ2A, CA-CMA certification not at all required, okay. Then even 18.3, this section is applicable in case the transfer of business is on account of succession, inheritance, etc. For example, there is a sole proprietor. That sole proprietor is dead. When the sole proprietor is dead, his business will be carried out by his successor. Na? In that case also, the successor has to get a new registration and ITZ from the father will go to the son. You understood? Sir, so far father was doing business under his permanent account number, under his registration number. Now when the father dies, son takes over the business. Can the son continue with the same registration? No. Son should get a new registration, and whatever ITC that is there in the name of the father will be transferred to the son. So that is also possible. Only thing here, ITC 2 cannot be filed by the father because father is dead and we cannot call his Atma to file. So due to that reason, son only will be filing ITC 2. You understood? The next, see some special cases here. These are all cases related to demerger. So there is a company which is having business in two states, Madhya Pradesh and Uttar Pradesh. Total assets of XYZ Limited before demerger is 60 crores and 40 crores, ITC 4 crores and 6 crores. Now, this XYZ Limited is divided into two companies now, ABC and XYZ, post demerger. Now, what is the assets of ABC? Madhya Pradesh 30-30, so 60 is divided 30-30, and Uttar Pradesh 40 divided into 10 and 30. You understood? Now, in what ratio we need to divide? State wise. For Madhya Pradesh, what is a credit? 4 crores. How this 60 is divided between ABC and XYZ? Equal. Assets, how it is distributed? Equal. So ITC also you divide? Equal. Understood. Again go to Uttar Pradesh. Uttar Pradesh 6 crores. How the assets are divided between ABC, XYZ? 1:3. Correct? So therefore 6 into 1/4 and 6 into 3/4. You understood? So don't do total. Don't do total for the ITC in different states. State wise you see how the assets are distributed, in that ratio only you divide. So ITC should be transferred in assets ratio determined with respect to each state. Understood this part? Next, another illustration. Now XYZ Limited is the transferor, ABC is the transferee. XYZ is having business in 3 states, Madhya Pradesh, Uttar Pradesh, Maharashtra. Now Madhya Pradesh business is transferred to Madhya Pradesh business of ABC. Uttar Pradesh business of XYZ transferred to Karnataka, and Maharashtra business of XYZ transferred to Maharashtra business of ABC. Now in that case, will the ITC also be transferred in the respective business? First case, third case, yes. Second case cannot be transferred. So what is the important condition? Transferor and transferee should be in the same state. Means UP business transferred to ABC Limited's UP business only. If it is transferred to Karnataka, ITC cannot be distributed. So both transferor and transferee should be in the same state. What is the first point that you need to remember? Assets ratio based on each state. Second point, transferor, transferee should be in the same state. The next illustration you see, XYZ Limited, Maharashtra is demerged into ABC and PQR. Assets ratio if you see 4:6. So 4/10 is for ABC, 6/10 is for PQR. Now, how much ITC we have? CGST 6 crores, SGST 6 crores, IGST 4 crores. What is the total ITC? 16 crores. Now see the fun. The total ITC should be distributed in 4:6 ratio. Individual head wise, we don't have to follow the ratio. You got it? Total ITC 16, that 16 only you need to divide. Head wise, you don't have to follow the ratio. Means, what is the ABC assets ratio? 4/10, correct? Now 16 into 4/10, 6.4. So total 6.4 crores ITC you should give to ABC. And 9.6 crores you should give to PQR. But head wise, you don't have to follow this ratio. So see what they are doing. Full IGST they are giving to PQR. Understood? Full IGST they are giving to PQR. Full SGST they are giving to ABC. Then the CGST they are dividing. And the total is 6.4 and 9.6. Can we do it this way? Yes. The total of all the heads credit, if you distribute, that is efficient. Head wise it is up to you, any ratio you can follow. But the total should only be satisfied. ITC to be transferred in assets ratio, and headwise that ratio need not be applied. You got it? Then, now we are moving on to reversal of ITC. Reversal of ITC, see the next page. That is, already I told you, some cases we have reversal of ITC, which is non-payment of consideration to supplier within 180 days, and 37A, that is supplier not filed GSTR 3B by September 30th of the next month. That is normal in sense month on month. But these are the special cases. When it will come, there are three sections, section 18.4, 29.5 and 18.6. First we will look into 18.4. So this column we will see, this column. Then we will see what are the differences, okay. First this column, 18.4. When 18.4 will come, 18.4 is actually opposite of those two cases which we discussed in the beginning, availment of ITC on closing stock. Composition scheme to normal scheme, exempted supplies to taxable. We availed the ITC on closing stock na. Now reverse, opposite. What is opposite? Composition scheme, that is normal scheme to composition scheme, or taxable supplies to exempted supplies. There we availed, here we will reverse. You understood? We availed ITC on what? We availed ITC there on what? Inputs assets held in stock, inputs in WIP, inputs in FG and capital goods. Correct? Here also we are doing reversal on these four. Inputs as such, inputs in WIP, inputs in FG and capital goods, okay. But how are we reversing? Inputs, assets in stock and WIP in FG. So how much ever we took ITC on the invoice, that much you reverse. At that time, how much ever you took ITC, that is there in the closing stock, na? You reverse that. Sir, what if the invoice is missing? Oh, unfortunately, invoice is missing. Don't take the market value today. There, if invoice is missing, matching is there, so you cannot take ITC. Taking ITC, loss to government, condition, restriction. Here reversing ITC. Reversing ITC is gain to government. When you reverse ITC, your ITC balance comes down, means your liability will increase, gain to government, no issue. If you don't have invoice, don't worry. Today one market value will be there, you take that and reverse. Okay. So in the absence of invoice, consider the market value as on the rate of conversion. Sir, I don't know how to determine market value. You don't determine. Go to CA or CMA. They will determine. Excuse me. So CA or CMA certification is required in this case. Are you getting this pa? So we need to reverse the inputs assets held in stock, inputs in WIP held in stock, inputs in FG held in stock. How much ever ITC we avail, that much we need to reverse. Suppose if you don't have the invoice details, take the market value as on the date of closing stock, that should be certified by CA or CMA. In case of capital goods, how we avail the ITC? Minus 5% for every quarter or part thereof. Here they are asking us to do it in a different way. First divide by 60 months, because the life of the asset will be taken as 60 months. Total ITC divided by 60. See what is the balance life. To that extent you reverse. For example, we used for 36 months. What is the balance life? 24 months. Total 60 pa. In that 60 we used for 36 months. What is the balance? 24 months. To that extent you need to reverse. Total ITC divided by 60 into balance useful life. Understood? Then, where these details we need to report? ITC 3. All these details needs to be reported in ITC 3. So that is the fourth form. ITC 1, 2, 2A, 3. Okay. And what is the time limit within which we need to file? In case of composition scheme, that is normal scheme to composition scheme, they are telling within 60 days from the commencement of the financial year. Why like that? Remember, we can opt for composition scheme only in the beginning of the financial year. Within the financial year, we cannot enter into the composition scheme. Only in the beginning of the financial year. Only before commencement of the financial year, composition scheme can be opted. Is there any time restriction with respect to purchase of inputs and capital goods? No. While availing ITC, what they are telling, within 1 year before it should be purchased. While reversing, no time limit. 4 years before I purchase, sir. Okay, reverse. Reverse, okay, because it is gain to the government. Are you understanding here? Double standard here fully. So this is about this 18.4. The similar concept is there in cancellation of registration also. So what is the previous discussion we made? Normal scheme to composition scheme. Taxable supplies to exempted supplies. Now we are discussing cancellation of registration. Whenever there is cancellation of registration, then also you are no longer paying tax. That's why you should reverse the ITC on closing stock. And you observe this and tell me what is the difference that you can find. Inputs as such held in stock, in WIP, in FG. But see this. How much you need to take? Either ITC availed on that stock or tax payable on such inputs, whichever is higher. How to determine the tax payable on that inputs? That is there in rule 30 or rule 31, which you will be learning at final level. So that rules is not there. It will be given in the question itself. Be careful. The previous two situations to this situation, a slight adjustment is there. What is that slight adjustment? Not only the ITC availed we need to reverse, but we should also compare it with the tax payable, whichever is higher. Then, in case of capital goods also, like this, ITC availed divided by 60 months into balance life, or GST payable on such capital goods, whichever is higher. Understood the difference? Then, here in which form we need to submit? Their form ITC 1. Here it is GSTR 10. GSTR 10 is called as final return. And when that final return needs to be filed, 3 months from the date of cancellation or order of cancellation, whichever is later. Not whichever is earlier, whichever is later. 3 months from the date of cancellation or order of cancellation, whichever is later. Sir, should we add this 3 months to both A and B? Yes. Yes. 3 months from the date of cancellation, 3 months from the order of cancellation, whichever is later. So that's what ICA is telling. Then, time restriction with respect to purchase of inputs or capital goods not available. What will happen to the balance in the credit ledger? I reversed the past, still I have some balance in the credit ledger. What will happen to that? It will be lapsed. That is this. Then look into 18.6. When this 18.6 will be applicable? Listen, last subsection, you purchase some capital goods. When you purchase the capital goods on which ITC availed, that capital goods is now disposed of. You purchase some capital goods on which ITC availed. Now that capital goods is sold. Now when they are selling the capital goods, already ITC is also availed na. So how much ever is the unutilized ITC or sale value of that capital goods, whichever is higher is what we need to pay. Because you may buy at a higher value, sell at a lower value and enjoy the benefit of ITC. So that's why they are telling how much ever is the unutilized ITC. How to calculate unutilized ITC? Total ITC minus 5%. What is the depreciation pa? 5% for every quarter or part thereof. Now you will know what is the remaining ITC. That or GST on sale value of the capital goods, whichever is higher. See there. For exam purpose, this view 2 only to be followed. Total ITC minus 5% for every quarter or part thereof from the date of invoice till the date of supply, or GST payable on such capital goods, whichever is higher. That should be taken. And where we should pay this? We should pay this using our regular 3B. And 3B due date is what? 20th of next month. In case of 3 products, molds and dies, jigs and fixtures, refractory bricks sold as scrap, we don't have to follow this A or B, whichever is higher. Just GST on sale value. Molds and dies means to bring the product into requisite shape, we use the molds and dies. Jigs and fixtures are the products to hold the capital goods. Example of jigs and fixtures is AC outdoor unit is there na, one L angle, on the top of that we will keep the outdoor unit. So that L angle or clamp will be called as jigs and fixtures. Then refractory bricks, these are the bricks used in the factory for the purpose of construction of clints where we heat the material, okay. All these three, when it is sold as scrap, just you need to take the GST on sale value, you don't have to compare like this, ITC minus 5% or GST on sale value, whichever is higher like that. Now look into one illustration related to this. Illustration 13, you see. Illustration 13. Capital goods purchased on 8/10/2019 for rupees 10 lakhs, excluding GST at 12%. They were disposed of on 5/5/2021 for 6 lakhs, excluding GST at 12%. Compute the GST payable. Now, capital goods when it is sold, how the GST will be payable? Tell, what is the formula? ITC availed minus 5% for every quarter or part thereof. From which date to which date? From the date of purchase till the date of disposal, sale, or GST on sale value of that capital goods, whichever is higher. Now, what is the ITC availed? Do your calculator, calculate pa, 10 lakhs into 12%, how much? 1,20,000. For how many quarters or part thereof we have used it? 8/10. 8/10 means that comes in which quarter? October, November, December. Then third quarter. So then in 2020, all 4 quarters are there. Jan to March, then April to June, then everything. So 4 quarters, total 5. Then 2021, Jan, Feb, March, April, May. So part thereof. So total how many quarters? 7 quarters. For this 7 quarters, 5% means what? 35% you need to reduce. So 1,20,000 minus 35%, 78,000, or GST on sale value. What is the sale value? 6 lakhs. 6 lakhs into 12%, 72,000. Whichever is lower or higher? Higher. So 78,000. Because you are paying tax na. Always while paying tax, it is whichever is higher. Then what will be your answer if such goods are not capital goods? We will not apply this. Normally at what price it is sold, on that only we will pay GST. What is the price at which it is sold? 6 lakhs into 12%, 72,000. What will be your answer if such capital goods are disposed of without consideration and the value determined under rule is 4 lakh? Then you take that 4 lakh. A will be same. A will be same, 78,000. B will be, instead of actual sale value, you will determine the value as per rule. I told you, usually we take the open market value. So 4 lakhs into 12%, that is 48,000, whichever is higher, 78,000. Then what will be your answer if such capital goods are disposed of without consideration and the value cannot be determined as per rules? B will be 0. We don't have. But A will be 78,000, same. Whichever is higher, 78,000. What will be your answer if such capital goods are sold after 5 years? A will become 0. How A will become 0? After 5 years means, 5 years means how many quarters? 20 quarters, 5 4s, 1 quarter, like 1 full year, we will have 4 quarters. So 4 into 5, 20. 20 into 5, 100, means fully gone. So A will become 0. B will be GST on sale value. What is a GST on sale value? 72,000. Whichever is higher will be 72,000. Got it? Then, so this particular 18.4, 29.5 and 18.6 reversal, we have some additional points. I will look into that. Inputs and capital goods can be purchased any time on which ITC availed. Suppose if ITC I have not at all availed, should I reverse? No. If capital goods are purchased before 5 years, should I reverse? No, because it will become 0. ITC availed minus 5% for every quarter or part thereof. That result will become 0. If the invoice pertaining to such capital goods is not available, then what we should do? We should take the market value, and that should be certified by CACMA. And all these details of reversal should be reported in ITC 3 in the first case. If there is any balance in ITC after reversal, what is that I told you? It will be lapsed. For example, I have 3 lakhs credit. 2.5 lakhs I have reversed like this. Still 50,000 is there in the balance. What will happen to that 50,000 lapsed? Suppose I need to reverse 2,50,000. I have only 1,50,000 in the balance in ITC. So that I will reverse. Still 1 lakh is there. I have to pay. So what should I do? I should pay. Because I don't have the balance now. So I should pay. If there is any balance in ITC after reversal, it shall be lapsed. If there is any shortfall for reversal, then shortfall shall be payable using cash ledger. And the computation to be made separately for CGST, SGST, etc. And this is the difference what I gave you. So first we discussed availment of ITC on closing stock, 18(1)(c) 1D, and this is reversal of ITC on closing stock. What is the difference? In that, what are the situations? Which scheme to which scheme? Composition scheme to normal scheme, or exempted to taxable. But here, normal scheme to composition, taxable to exempted. Next, ITC, first case, available or not available? ITC available on, that is availed on closing stock. But here, reversed on closing stock. What is the meaning of closing stock? Inputs are such held in stock, inputs in WIP in stock, inputs in FG and stock. Capital goods minus 5% for every quarter. Here also same, but capital goods alone it will be different. What is that? Total ITC divided by 60 into balance life. Time restriction for purchase of inputs and capital goods, 1 year. But here we don't have. Form, what is the form? ITC 1 for availment, for reversal ITC 3. CACMA certification, ITC 1, yes, if it exceeds 2 lakhs. But here, if we go by market value, than invoice value. Looking into this illustration 12, S&P Private Limited, Coimbatore, exclusively manufactures and sells product Z, which is exempt from GST, wide notification issued under relevant GST legislations. The company sells Z only within Tamil Nadu. The turnover of the company in the previous year was 55 lakhs. The company expects the sales to grow by 20% in the current year. Owing to the growing demand for the product, the company decided to increase its production capacity and purchased additional machinery for manufacturing Z on 1/7. The purchase price of the capital goods was 20 lakhs exclusive GST at 18%. However, effective from 1/11, exemption available on Z was withdrawn. But by 1/11 itself, what is their turnover? By 1/11 itself, what is their turnover? More than 40 lakhs. Actually, what is the maximum threshold limit? 40 lakhs. But 55 lakhs means they cross the threshold limit and now they are liable to pay GST. The turnover for the company for the half year was 45 lakhs. Whether they have to register under GST? Yes. As their turnover exceed threshold limit long back and now it became taxable. So initially they were not registered. Why? Because they were making only exempted supplies. But now when they started making taxable supplies, now they need to register. When they need to register, they should make application for registration within 30 days. So that is the answer for part A. Part B, whether they can take ITC on machinery purchased, if yes, how much credit can be availed? Now you tell me, can they take ITC on the machinery purchased? Yes sir. No. You are applying fourth situation. Actually you should apply first situation. You are applying fourth situation. Read there that fourth situation when it will come. When it will come? Registered person, exempted supply becomes taxable. Are they registered person already? Now only they are getting registered. Now only they are getting registered means 18(1)(a, correct? In 18(1)(a) where we have capital goods, we don't have, which means we cannot take credit on capital goods in this case. Are you understanding? So they cannot take credit on capital goods if they are applying for registration only after 111. What if they are already registered? Now can they get the benefit of the fourth situation on capital goods? Can they take credit? Yes, but after reducing 5% for every quarter or part thereof from the date of purchase till the date of conversion. Check the question. What is the date of purchase? 1/7. What is the date of conversion? 1/11. So 1/7/2020 to 1/11/2020 means July means, so that will be coming in July, August, September, October, November. So 2 quarters. 2 quarters means how much we need to reduce? 10%. So what is the GST paid? So 20 lakhs into 18%, 3,60,000 minus 10%, that will be 3,24,000 is the ITC that can be taken. Are you getting this? Now look into some important notifications. ITC reversal not applicable in case of exclusions from supply under schedule 3 except sale of land and sale of building and sale of warehoused goods. Already we discussed. Then value of assets for the purpose of apportionment to include value of the entire assets, whether ITC availed or not availed on that assets. Then whenever there is a change in the ownership, even on account of death of sole proprietor also, we can transfer the ITC. One more point you remember, number 4, while computing turnover for reversal of ITC, while computing turnover for reversal of ITC. So what is the turnover for computing reversal of ITC means? Total ITC availed into exempted turnover divided by total turnover we take na. While computing turnover for reversal of ITC, old indirect taxes. What are the old indirect taxes? Central excise duty, state excise duty, CST and VAT not to be included. So whenever you determine that exempted turnover and total turnover, so in that the old indirect taxes, what are the old indirect taxes? 4 old indirect taxes: central excise duty, state excise duty, CST and VAT, central sales tax and VAT. Are you writing? So these 4 will be included or will not be included? Will not be included. That is one special point. Okay. Then see the next page. There is a circular on replacement of parts during warranty. Actually that circular they have not tested in May 24 exam. So there is a possibility of asking this for the forthcoming exam, September 24 or Jan 25. What is it about? First listen, please listen. I am purchasing some material for replacement during warranty period. What is warranty means? When I sell a product to you or a service to you, if that product or service is defective, I have to replace that. Am I right? Or I need to repair that. Either I need to replace that or I need to repair that. Now, usually in automobile sector, if you see, when you buy the two-wheeler, in the first year, if any issue happened, usually they give a standard warranty of 3 years. So in the first year, if anything happens, they will replace the part and give for free. Am I right? But that replaced part also they are purchasing. They are not getting anything on that. Can they take ITC? Yes. Because it is still used in the course or furtherance of business. They can take ITC and they don't have to reverse any ITC. Is it clear? What if for this warranty they are charging some money? For this warranty, whether they are charging money or they are doing it for free, ITC reversal shall not arise. No need to reverse the ITC on that product. They can enjoy the ITC because this will not come under gift or free sample. You understood? However, For that warranty, whatever money that they are charging, they need to pay GST on that warranty charges. Okay. Look into the first issue. Sleek Modular Kitchen Supplier is providing interior decoration services to Mr. X, for which Mr. X pays the consideration of 8 lakhs plus GST 18%. Now, they have to provide the free replacement of parts during warranty period. For that free replacement of part, they purchased the part on which they paid 6,000 as GST. This is the question. Now, on this 6,000, can they take credit or not? This 6,000, can they take ITC or not? Yes, there is no issue, because whenever they replace the part during warranty period, this is in the course or furtherance of business. First, is it given anywhere in the block credit? No. Is it used in the course or furtherance of business? Yes. Consequently, they can take the ITC on that. So, reversal of ITC shall not arise even if such replacement of part is without any consideration. What if for this replacement they are charging some consideration? Even then, that consideration will become supply under 7(1)(a), then also they don't have to reverse any ITC, they can enjoy the ITC on this 6,000. Clear? Next. So, what is the point that you need to remember? If any goods are purchased for replacement during warranty period, ITC can be availed. You write down in the notes below. That is the summary of this discussion. You just write down there in the notes below. So, what is the first point that you need to remember? Goods purchased for replacement during warranty period, goods purchased for replacement during warranty period, comma, ITC can be availed. ITC can be availed whether consideration is charged, or not with respect to such warranty. Goods purchased for replacement during warranty period, ITC can be availed whether consideration is charged or not with respect to such warranty. Okay. Now, another issue. You see this. Issue number 2, car manufacturer is selling, Toyota car manufacturer is selling it to a car dealer car, and they will pay 12 lakhs plus GST for purchase of this car. Again, dealer will sell the car to the buyer and they will give a warranty of 3 years. During this warranty of 3 years, so they will be providing free after sale service and replacement of parts, correct? Free after sale service also they will provide, replacement of part also they will do. What is the value of free after sale service? 3,000. What is the replacement of part value? 2,000. Now, this 3,000 and 2,000 actually will not be recovered from the buyer, correct? They have a cost, but they will not recover it from the buyer. Then what will happen? So, it will be recovered from the manufacturer. Car dealer will recover it from the manufacturer. Let us see how it happens. Situation 1. Dealer procured parts for replacement by third party and charged the consideration from the manufacturer. You understood what is happening? What dealer did? You are dealer pa. I am manufacturer. Okay. As a dealer, what you did? You purchased the part from the market, and you did the job. So, how much you will recover from me? You purchased the part from the market, you did the job pa. Now, how much you will recover from me? That's what, how much? 5,000. Part, labor. How much is that pa? How much is that? 5,000. So, how much you will recover from me? What is the money that you will recover from me? 5,000. On that 5,000, are you required to pay GST or not? Yes. Again I am repeating, you are a dealer. You are doing free after sale service to the customer and even you are replacing the part. How you got the part? You purchased it from the market. Are you understanding up to this? Now that 5,000 rupees cost what you incurred, you will pay out of your pocket or you will recover it from the manufacturer. You will recover it from the manufacturer. As you recover that 5,000 rupees from the manufacturer, on that 5,000 as a dealer, are you required to pay GST or not? Yes, you need to pay GST on 5,000. That part you understood. That information you got. Now you are purchasing a part na. How much? Not 5,000, 3,000, not 5,000. See the value of the part. Value of the part. Visible, hope it is visible for you. What is this number called as? 2,000. So what is the value of the part? 2,000. So you purchased a part for 2,000. On that you would have paid GST. Can you take as ITC? Yes. Same point. Any goods purchased and replaced as part during warranty period, whether you charge consideration or not charge consideration, you can enjoy the ITC on this. Correct? Understood here? From your point of view, clear? See that from the dealer point of view. First you are collecting 5,000 from me on the GST 18%. So you recovered 5,900 and you will pay 900 to government. And on part purchase 2,000, 18% 360, you will avail ITC. Got it? Are you required to reverse any ITC? No. Done? Now from my side you tell me. I paid you 5,000 plus 900 na? Can that 900 I take ITC? Yes. Because that is my inward supply. You are providing the service to me. But you are providing service to the customer na? Correct. But I am only paying money na? So which means I can take ITC. But I did not receive the service. Deeming fiction. On my behalf, when you provide the service to some other person, it is deemed that I have received the service and I can take ITC. So manufacturer shall pay 5,900 to dealer and ITC 900 can be claimed by the manufacturer. You understood? So integrating this, they will coin a question like this. Actually one circular they gave, and that circular, if at all it can be tested, how it will be tested, I created a question on this. Like this only they will give a question. You should know from whose perspective what is the treatment and write it in the exam. Okay. Now another situation. If replacement of parts are received by the dealer from the manufacturer. Now what happened here you see. So replacing the part and labor charges, that is servicing, is constant pa. How much service you are providing free after sale service? 3,000. What is the part cost that you have replaced? 2,000. Now compared to the previous situation, in this situation, from where you got the part? Previous case you purchased it from the market, but this case you got it from me. Correct? Manufacturer. Now who is buying the part? Manufacturer. Dealer you got free from the manufacturer means who is buying? Manufacturer is buying. So can the manufacturer take ITC? Yes. But sir, he is not charging anything. Again same point. If the goods are purchased and replaced during warranty period, whether any money is charged or not charged, they can take ITC on the part purchased. Is it clear? Now how much you will recover from me? How much you will recover from me in this case? 3,000 5,000 3,000, because already I gave you the part, using that only you did, which means how much you will recover from me now? 3,000. So you will pay GST on that 3,000. You got it? So now from your side you see, dealer side, you will recover only 3,000. Why not for 5,000? Because you got the part from me freely. So therefore you are not going to charge that for me. So 3,000. GST 18%, 540. So you will pay GST to government 540. Your job done. From my side you tell me, can I take ITC on the part purchase? Yes. Now I will pay you 3,540. On that 540 can I take ITC? Yes. On the part also I can take ITC. Even on the charges what I pay also I can take ITC. So they will pay 3,540. 540 can be taken as ITC. And part procured also they can take ITC. No issue. Got it? Now third situation. Slight change here. What happened? Normally I sold 100 parts, 100 numbers of that part to you. Sold initially. Initially I sold 100 numbers of the spare part to you and I raised an invoice. Out of that 100 numbers, you took one and you did the replacement during warranty period. You understood? Means you need to pay me for the 100 numbers or 99 numbers. No. I sent you 100 parts, 100 numbers of the spare part. For example, you need to change the valve. I gave you 100 valves and I build you 100 valves. And out of that 100 valve, one valve you are taking and doing the replacement on my behalf. I should do na? You did. Job done. Now you will pay me for the 100 valves which I have supplied or only for the 99 valves? 99 valves, because one valve which you have replaced during warranty, anyhow I should give it to you, correct? Separately rather than giving, already I sent you some stock, I am asking you to use from that stock. Then you need to pay me only for 99. But already raised invoice for 100. So what should I do? Wow, super. I should give a credit note for that one valve. You understood? I should give you credit note for that one valve. So consequently, you will pay me GST only for or value only for that 99. Now how much you will charge from me? 5,000 or 3,000? 3,000, because part already you got, you used it. Now only for that after sale service you will charge me. Now from dealer point of view, you see. First initially you paid me 2,36,000. Why 2,36,000? I sent you 100 valves at 2,000 rupees per valve. So 100 into 2,000, 2 lakhs, GST 18%. So therefore 2,36,000 rupees you have to pay me based on invoice. So you have availed the ITC of 36,000. Now I gave you a credit note for one valve, means 2,360. Now that 360 rupees you need to reverse, because whenever credit note is given by supplier, recipient should reverse the ITC, na? You should reverse. Now you need to recover your cost from me. What is your cost? Only after sale service. 3,540 you will recover from me and you will pay 540 to government. Understood from dealer perspective? From manufacturer perspective, you tell me. First I will give you invoice for 2,36,000 and thereafter I will give you credit note for 2,360. Now from the 36,360 rupees will be reduced and remaining amount I will pay as my liability. Am I right? Plus you will be giving me invoice for 3,540 and this 540 I will take as ITC. First I gave you invoice for 2,36,000. Then I will give you credit for 2,360 and you will give me invoice for 3,540. This 540 I will take as ITC. Done? Actually all these are application based questions on the warranty point. Only one point you need to remember. What is that one point that you need to remember? Goods purchased for replacement during warranty period, ITC can be availed whether consideration is charged or not with respect to the warranty and whether the warranty is done by whether the replacement is done by whom? Manufacturer or dealer? Manufacturer or dealer. So this is what you need to remember for all these illustrations. One common point only. But in any combination they can test it in the exam. Okay. In one combination they can attach it to the credit note and they can ask. In another combination they will tell, one part alone is sent by the manufacturer. Like that any version they may ask, the provision is only one. This provision only tested in different ways. Okay. The next last point. Generally we pay for extra warranty some extra amount. Extra warranty. So what is the treatment of that extra amount paid at the time of purchase of mobile? If you see you buy a mobile, they will tell, so mobile sir, 1.5 lakh you are spending on buying mobile. So you take an insurance for 10,000 like that they will tell. Have you heard that? And this particular insurance is like a warranty, wherein anything happens to that mobile, they will be providing you the repairs or replacements, etc. So you are purchasing an iPhone 15 Pro Max, 1,59,900, including 28% GST. Then Apple plus coverage, 15,000 inclusive of GST. Now this 15,000 will be taxable at what rate? Now, are you paying this at the time of purchasing iPhone or at a later point of time? If you are paying it at the time of purchase of iPhone, then this 15,000 will also be taxable at the principal supply, that is 28%, treated as composite supply. If you pay this 15,000 separately, means after purchase of the phone, separately you are paying this, then that 15,000 will be taxable at the regular rate of service. What is the regular rate of service? 18%, that will be treated as a separate contract. Are you understanding this? So, from your perspective, actually it is indifferent. You can pay either at the time of purchase or at a later point of time. But actually from seller side only there is an issue. What is that issue from seller side? They should never bill it along with the phone. If they bill it along with the phone rate of GST will get attracted. Okay. So with this, we completed input tax credit chapter. 177. In this returns chapter, what you need to know is what are the various returns and what is the due date of each and every return. Then next aspect you need to know is the late fee. How much is the late fee for delay in filing returns? And finally, there is one scheme called as QRMP. About that QRMP scheme, these are the three areas we have in returns chapter. First you see what are the various returns. What is the first return? Just start from the beginning. GSTR1. GSTR1. Who will file the GSTR1? Registered person. And what does it contain? Outward supply details. Already we discussed that. Don't look at my face. Yesterday only I discussed that. GSTR1 is a return to be filed by every registered person. What details it will contain? Outward supplies. And what is the due date by which GSTR1 has to be filed? Monthly means 11th of the month following every month. Quarterly means 13th of the month following every quarter. Super. Then GSTR2 series. We have 2B, but we will not file. It will be auto-populated. So leave it. Then 3 series. What is that we have? 3B, which is a summary return. Who will file? Every registered person. By when they need to file? Monthly, 20th of the month following every month. Quarterly, GMCA and states below, it will be 22nd, and other states, it will be 24th. Then 4, GSTR4. GSTR4 is to be filed by a person opting for composition scheme. It is an annual return to be filed by a person opting for composition scheme. And what is the time limit? 30th April of succeeding financial year. Okay, 30th April means 1 month. 1 month after the financial year. Financial year will get over by 31st March. 30th April means hardly we have 1 month to file this annual return. GSTR4. Plus, the person opting for composition scheme also will file a periodical return, which is a quarterly return in CMP 8 by 18th of the month following every quarter. So tell me what are the 2 returns which are required to be filed by a person opting for composition scheme. GSTR4, which is a annual return. By when? 30th April of succeeding financial year. Whereas CMP 8 is a quarterly return. By when? 18th of the month following every quarter. Not 20th, 2 days before, 18th. Okay. Then next, after 4, we have 5, GSTR5. Who will file GSTR5? NRTP, non-resident taxable person. I told you non-resident taxable person means basically they are non-resident who will be coming to India and will make supply of goods or services. They will not have a permanent registration. What is the maximum number of days for which a non-taxable resident, non-resident taxable person can do business in India? 180 days, 90 days. It can be extended for a further period of 90 days, but in no case they can do business beyond 180 days. The same point is even applicable for a casual taxable person. A casual taxable person also can come into the state. Who is a casual taxable person? Non-resident is coming from outside India to India, na? Like that casual taxable person will be from other state to this state. So, usually in movies and all, actors will be coming from other state to this state to act in the movies. They will be called as CTP, casual taxable person. Even some traders who will be coming from other state to this state to make sale of goods and they will go, they are also called as CTP. Both casual taxable person and non-resident taxable person are compulsorily required to get registered, and they will not get a permanent registration, they will get a temporary registration. What is the maximum period for which they will get a temporary registration? 90 days plus 90, 180 days, not more than that. So, CTP is not required to file GSTR 5. I have given there. CTP is not required to file GSTR 5. GSTR 5 only NRTP. Then what returns are CTP will file? Regular return, GSTR 1 and GSTR 3B. For NRTP, what is the time limit? See there, 13th of the month following every month, or 7 days from expiry of registration, whichever is earlier, not later. Because basically they will leave the state, leave the country, then it is difficult to catch. That's why 7 days from expiry of registration. 13th of the month following every month. For example, their registration is expired on 23rd November. 23rd November, next month 13th is 13th October. 7 days from expiry of registration is 30th November. Again I am repeating, carefully listen. 23rd November. 13th of next month is what? 13th of October, because October is the next month after November, correct? What you are listening here? What you are listening? So I am also telling, you are also like that, you are nodding your head. After November it is December, then it will be 13th of December, or 7 days from expiry of registration. What is the 7 days from expiry of registration? 30th November, 13th December or 30th November, whichever is earlier, is 30th November. That is the time limit by which they need to file this return. Are you understanding this? So they are not getting that much of cushion whenever the registration is cancelled or over 7 days maximum. Got it? Then online information, 5A is by OIDR supplier. So already we discussed, supplier outside India, OIDR supplier located outside India, making supply to non-taxable online recipient in India is also required to register in India, and they need to file GSTR 5A. 5A is like 3B return. 5A is like 3B return. So what is the time limit? 20th of the month following every month. Understood? So in 5 there are 2 returns. In 5 series there are 2 returns, 5 and 5A. 5 who will file? NRTP. 5A who will file? OIDR. For 5 what is the time limit? 13th of the month following every month, or 7 days from expiry of registration, whichever is earlier. And 5A, 20th of the month following every month. Then input service distributor, ISD, that is GSTR 6. I told you already, head office will take the credit and distribute the credit. Time limit same, 13th of the month following every month. 13th of the month following every month. Then 7 and 8, already we discussed long back, TDS, TCS. 7 is TDS, 8 is TCS. 7, time limit, same, 10th of the month following every month. 8, same. So these 2 returns, constant time limit. 7 is TDS return, 8 is TCS return. Both cases the time limit will be 10th of the month following every month. Then what is the next series? 9. In 9, we have 9, 9B, 9C. All these 9 series time limit is same, 31st December of the succeeding financial year. You understood? Annual return, what is the time limit for GSTR 9? 31st December of the succeeding financial year. But remember, who is required to file annual return? Who is required to file annual return? Only those people whose aggregate turnover exceeds 2 crores. But annual return is not applicable to all people. Annual return is applicable only if their aggregate turnover exceeds 2 crores in the financial year. Even if my aggregate turnover exceeds 2 crores, but annual return is not applicable in some cases, remember CAG tonic. Even if my turnover exceeds 2 crores, annual return is not applicable in some cases. What is that? CAG tonic. CAG, Comptroller and Auditor General, means person whose books of accounts is subject to audit by CAG. You tell me, who are those persons whose books of accounts is subject to audit by CAG? Government departments, PSUs, etc. Na? They are not required to file annual return GSTR 9 even though their turnover exceeds 2 crores. Then T, TDS, TCS, both are. TDS, because TCS deductor is required to file GSTR 9B, already we discussed, so therefore it is TDS. Then O, always O is OIDR supplier, not required. N, non-resident taxable person, NRTP, because they will not stay for more than a year, more than 180 days, so they are not required to file annual return. TON, I, input service distributor. C, casual taxable person. So these people are not required. So mark it as important for short note. So who are not required to file annual return? So whenever you get a short note question on annual return, you need to write annual return is required to be filed in GSTR 9 by 31st December of the next financial year. And if aggregate turnover exceeds 2 crores only, annual return is required to be filed. But even if aggregate turnover exceeds 2 crores, but these people are not required to file annual return. And GSTR 1, GSTR 3B and GSTR 8 and GSTR 9, whatever returns that we have discussed, all these returns can be filed belatedly. Belatedly means what? Late, after due date. How much late, sir? 3 years from the due date. 3 years from the due date. So beyond that also is possible? Yes. Beyond that also possible. Government on recommendations of council may allow to file the return beyond 3 years, but that requires government's approval. But belatedly we can file up to 3 years after due date. Then this similar time limits already we know now. Before that, GSTR 11, last return, GSTR 11. 10 already we discussed. What is 10? Final return. What is that final return? Who will file this final return? Whenever there is a cancellation of registration. What is the time limit? 3 months from the date of cancellation or 3 months from the order of cancellation. Whichever is earlier or later? Later. Then GSTR 11 is to be filed by UIN holder. Who is a unique identification number holder? UN agency, embassy or consulate. On their outward supply, this is exempted. To claim the refund, they will get a UIN. They are required to file GSTR 11 to claim the refund of GST paid on purchases. So as and when they file the refund claim at that time. Then look into the next page. This also we discussed. Can the GSTR 1 and GSTR 3B be rectified? Yes. 3 returns can be rectified. 1, 3B and 8. 8 already we discussed there. GSTR 1 and 3B also can be rectified. What is the time limit for rectification? 30th November of next financial year or date of filing annual return, whichever is earlier. Then this also we discussed. How the details will be entered in GSTR 1. B2B, always invoice wise. B2C, intrastate, always consolidated. B2C, interstate. If the invoice value exceeds 2,50,000 per invoice, then invoice wise. If it does not exceed 2,50,000 per invoice, state wise consolidation. This we have written in our book. Then this 38 already we discussed. Even though supplier files GSTR 1, but these details will not be coming in GSTR 2B. Why? Supplier is a newly registered person, or supplier liability in GSTR 1 greater than 3B for 1 or more tax periods, or he availed ITC in his 2B, in his 3B more than his 2B, or he defaulted in payment of tax, or he need to comply with rule 86B but he did not comply with that. 5 situations already we have written yesterday. In that case it will come in 2B or it will not come in 2B? It will come in 2B, but it will be under ITC not available. Consequently we cannot take the credit. Is this a temporary measure or a permanent measure? Temporary measure. And sir, newly registered means after which period they will give? That there is no clarity yet. So maybe 2-3 months, it is up to the discretion of the department. Then there are two rules which is very important, definitely can be tested in September exam. Rule 88C and Rule 88D. When this will come into picture, concentrate, please listen. You are a registered person. You filed GSTR1. You filed 3B also. But there is a difference in these two. Your GSTR1 liability is more than GSTR3B. Why will it happen? Why will it happen? Genuine, non-genuine, both reasons are there. Can you give me an example of a genuine reason? Why will you report more money in GSTR1 but lesser money in GSTR3B? What is the genuine reason? Number one, advance. GSTR1 you reported the invoice, but out of that already on some part you already paid the GST on advance. Now on remaining amount only you will show in 3B, correct? 1 lakh you raised invoice. 30,000 already you paid GST on advance in the earlier months. So this month you will show how much as liability? Only on 70,000. Now there is a mismatch, correct or not? Genuine or non-genuine? Genuine. Another case, that is credit note. Credit note. So here credit note, what I am doing is that I did not report the credit note in GSTR1, but I considered the credit note and I showed the reduction in liability in GSTR3B. You understood? One, I did not mention the credit note, but in 3B I considered the credit note and I reduced the liability. Actually I gave the credit note, but I missed to enter it in GSTR1. Because of this reason also, genuine reason, there will be a difference between 1 and 3B, correct? Or any other case. So genuine also is possible. Non-genuine case also is there. Purposively you report more liability in 1 and pay less liability in 3B. That's why department will not proceed immediately for recovery of tax without giving an opportunity of being heard. So first you will get a notice. So when you will get a notice under 88C, if your liability in GSTR1 greater than GSTR3B, okay, you will get a notice. What is that notice? Form DRC1. This is which rule? 88C. What is the before alphabet? B. DRC1B notice. You understood? Can you remember, pa? So you will get a notice in DRC1B. DRC, demand and recovery. They are going to recover. So what is the name of this notice? DRC, demand and recovery. Okay. DRC1B, you will get a notice. Again I am repeating, when 88B will be triggered? Sorry, 88C. When 88C will be triggered? Liability in GSTR1 greater than liability in GSTR3B by such amount and such percentage. Because may be negligible, 1%, 2% difference and all they will not consider. But subtractum difference is there, then immediately they will be giving a notice. That is DRC1B. How this notice will be communicated to the registered person? Either they will upload it in the portal or they will send it to you in email, or both also they will do. And what is the response time that you have? Maybe it is genuine also, na? So what is the response time that you have? 7 days. Within 7 days, give a reply. Give a reply. What is that reply you will give? If it is genuine, you will give reply. What is that? Sir, I gave a credit note. This is the credit note issued to so and so person. This I failed to report in GSTR1, but I consider this credit note and reduce my liability. So you give the reply. Or you pay the difference. Either you explain the difference or you pay the difference. If you know that you are really required to pay, you pay. Or partly payment and partly explain the difference, you do that. But all these things you should do within 7 days. Suppose you gave a reply, they are not satisfied with your reply, or you did not reply at all. Either you gave a reply which they are not satisfied, or you did not give reply at all, or you did not pay at all. Neither reply nor payment nor the reply is satisfactory, then immediately they will do recovery of tax under section 79. They will recover. How they will recover? That much amount they will create as a liability in your electronic liability ledger, which means you have to pay that liability in the subsequent months. Liability posted in electronic liability ledger, which means we have to pay that liability at any cost. You understood? That is how they will do the recovery. What if you are not paying it? They will attach your assets, they will attach your property, they will attach your bank account, and somehow they will do the recovery. Is it clear? Then, till the time you are paying it, how they will choke you? Till the time you are paying it, what they are telling, you cannot file your GSTR1 for the future period. Till the time you are paying this difference, you cannot file GSTR1, means your recipient cannot take ITC. Are you understanding? You cannot file GSTR1 means your recipient cannot take ITC. As you cannot file GSTR1, you cannot file GSTR3B also. Got it? Like that, if you are not filing 1 and 3B for consecutive 2 months, there is a concept called blocking of e-way bill. If you are not filing GSTR1 and GSTR3B for 2 consecutive tax periods for your outward supplies, you cannot generate a e-way bill. Means you cannot transport the goods. Are you getting this? Completely it is like a standstill. Your business will be stopped. So GSTR1 cannot be filed. As GSTR1 cannot be filed, GSTR3B cannot be filed. Because of which, if continuous 2 periods, if you are not filing, e-way bill facility will be blocked. Also, this will lead to suspension of registration. So like that, if you continue for some more days, then they will suspend your registration and cancel your registration also. Okay, sir, let them cancel. What is there? Reverse the ITC on closing stock. Whenever there is a cancellation of registration, we need to reverse the ITC on closing stock as such held in stock, inputs held in stock, inputs WIP, inputs in FG, capital goods, total ITC divided by 60 months into balance life or GST on capital goods, whichever is higher. Are you understanding this? So this much money you need to pay. So that's how you will definitely pay this. Got it? Because of these consequences. Till the time you pay, these consequences will arise. Is it clear? So tell me what is 88C first. Liability in 1 greater than liability in 3B for 1 or more tax periods. What will happen? Notice in DRC 1B. Then reply. Time 7 days. What is that reply? Pay, explain, partly pay, partly explain. Now, if you have not done that, then recovery and they will post the liability. Till the time you pay, what are the consequences? GSTR1 cannot be filed, 3B cannot be filed, e-way bill gets blocked, suspension of registration. Clear? Now see rule 88D. Rule 88D will come into picture for the same registered person. You are a registered person. You have taken a ITC in your 3B more than your 2B. Actually, how much ITC you should take? As per 2B. But you have taken excess. You have taken excess. Genuine, non-genuine. Both are possible. Can you give me examples of genuine? RCM, super. Next. Reavailment, good. Previous month not availed, we are taking. We return 3 cases, genuine cases. We would not have taken the ITC earlier month, we can take now, or reavailment or RCM. These things will not come in 2B, but we can take. Non-genuine cases, purposively you are taking excess credit, wantedly. In these cases, definitely a notice to be given. So see the first point, trigger point, same. ITC in 3B greater than ITC in 2B. Now you will get a notice. What is this notice? Which rule it is? 88D. So before alphabet C. So DRC 1C. Form GST DRC 1C, you will get a notice. What is the response time? Same, 7 days. What is that you need to give as response? Pay, explain, or partly pay and partly explain. what if you are not paying the difference or not explaining the difference, etc., then what they will do? Here slight change. They will again give a notice under section 73, 74. So another section they will give the notice and then only they will do recovery. Already they gave one notice na. Now there is another notice. SCN means show cause notice. SCN means show cause notice. So another notice they will give. So second chance, second life, you understood? Second chance they will give, that chance also we miss, then only recovery will be there. But in the first case, no second chance, okay. Now, till the time you pay this, what they will do? Same consequences. You cannot file GSTR1, you cannot file 3B, and your e-way bill will be blocked, and your registration will be suspended. Can you remember this pa? Easy. So definitely you can expect question on 88C, 88D can be tested. This already we discussed section 37, section 38, section 39, what are the 3 returns, when it should be filed, etc. and all. Now we are moving on to late fee, second part. The first part I told you we have returns and what is the due date of each and every return, that we need to remember. In the entire discussion, actually the important area is rule 88C and rule 88D, because this rule 88D they have tested in your RTP, like latest RTP they have given. Say this, question 10. Briefly explain the manner of dealing with difference in ITC available in auto-generated statement containing the details of ITC and that availed in return prescribed in terms of rule 88D of CGST rules. That process you need to write. Which process? Second column we saw na 88D, that you need to write, okay. So that is only what they have given as the answer, but they gave it like a paragraph. What will happen? Pay within 7 days, otherwise you know they were within 7 days, if you are not doing, again they will do a notice under 73, 74, okay. So that 88D related, because they gave in RTP 88D means not necessary literally 88D theory question may ask, they can ask even in MCQ also anywhere, okay. Now look into the late fee for delay in filing return. Section 47 talks about the late fee. Again for MCQ purpose only this is useful, you will not get any practical question on this. MCQ it will be definitely tested. Late fee for GSTR1 and GSTR3B alone you make an effort, because that is only usually will be asked, GSTR1 and 3B. What is the late fee for this GSTR1 and 3B? Nil return, other than nil return. For nil return what is the late fee? 10 rupees per day subject to maximum 250. Other than nil return 25 rupees per day. Could you see that? Nil return 10 rupees per day, other than nil return 25 rupees per day. For nil return what is the maximum amount? 250. I told you always late fee will be payable under CGST and SGST, correct. So now if the delay is 30 days, 30 into 10, 300, but the maximum is only 250. Suppose if it is other than nil return, 25 rupees per day, but the maximum amount will change. Listen carefully. If the turnover during previous year exceeds 5 crores, 5,000 is the maximum late fee. If the turnover during the previous year exceeds 1.5 crores, but does not exceed 5 crores, half, 2,500. If it does not exceed 1.5 crores during the previous year, then it will be half of that, 1,250, ignore 250, 1,000, you understood. 5,000, 2,500, 1,000, that is the maximum late fee. Can you remember pa? Turnover during previous year exceeds 5 crores, 5,000. Does not exceed 5 but exceeds 1.5, 2,500. Does not exceed 1.5, 1,000. This is the maximum late fee. Can you remember this? Now, For GSTR 5, 5A and 6, same, nil return 10, other than nil return 25. But maximum we don't have any slab, always it will be 5,000. You understood? So you try to remember this. From this only we will remember other things. For GSTR 5, 5A and 6. So nil return 10 rupees per day, other than nil return 25 rupees per day. And maximum we don't have any provision, so therefore 5,000. Got it? Next, 7 and 8 long back we discussed. 7, what is the late fee? 25 rupees per day subject to maximum 1000. 8, how much? 100 rupees per day subject to maximum 5,000. GSTR 4. Who is required to file GSTR 4? Person opting for composition scheme. Person opting for composition scheme means when a person can opt for composition scheme, their aggregate turnover during the previous year does not exceed 1.5 crores. Remember, a person whose aggregate turnover does not exceed 1.5 crores during the previous year can opt for composition scheme, and that particular composition scheme 1.5 crore means what is the maximum late fee? 1000. 1.5 crores if it does not exceed, what is the maximum late fee? 1000. Means copy paste this. Correct? Nil return 10 rupees per day subject to maximum 250, other than nil return 25 rupees per day subject to maximum 1000. Now you need to remember finally GSTR 9, 9B, 9C. So annual return GSTR 9. If my aggregate turnover during previous year does not exceed 5 crores, 25 rupees per day. Exceed 5 but does not exceed 20, 50 rupees per day. Exceeds 20 crores, 100 rupees per day. So 9 and 9C not tested in exam so far. So they can definitely make a question on this, MCQ on this. So kindly remember. So aggregate turnover during previous year exceeds 5 means how much? Does not exceed 5 means 25. Exceed 5 but does not exceed 20, double 50. And exceed 20 means double 100. First two cases maximum is 0.02% of turnover. Last case it is 0.25% of the turnover. Okay. First two cases 0.02. Last case 0.25. Okay. And the same amount of late fee we need to pay even under SGST, but we don't have to pay late fee under IGST. Then, can we file the returns through SMS? Only nil returns we can file through SMS. Just send a SMS, your registration number and the return and the period, which means that you have filed the return. You don't have to log into the portal, fill in the details, etc. But which return we can file through SMS? Only nil return. Nil return means all the entries in the return should be nil. What are the 3 returns which can be filed through SMS? GSTR 1, GSTR 3B and CMP 8. Then first return means immediately after you get registered, you will be filing your first return. That first return, you should not only mention the details of the period for which you file the return, but also the prior period. For example, see this. You are liable to get registered on 5/3. You got the registration certificate on 5/4. So it is the first return that you will file. Which month return you will file first? March month, April month. When are you getting registration? April. Means you will file the first return of April. Usually in the April return, you should give only April month details. But what they are telling, you give the March details also from the date you are liable to get registered. Are you getting this? You will do registration, and whenever you do registration, after that only you will file the return. So you will file the first return for the month of April in this case, because you got the registration in April. Now in April, usually report April details, but they are telling you even report the prior period details, because you need to pay GST from 5/3/2024. So include those details also. That is the first return. Got it? Then notice to return defaulters. That is, whenever we are not at all filing returns, in income tax also this is there. Whenever you are not at all filing returns, a notice will be given to you asking you to file the returns under income tax. Same way GST also. If you are not filing returns, a notice will be given in GSTR 3A asking you to file return. What is the time limit within which we need to file returns? After notice, 15 days. Otherwise, penalty will be applicable. Is it clear? You need to file return by due date, you miss the due date. they will give a notice to you. After notice, within 15 days you need to file. Of course, late fee is there. But that 15 days also if you miss, then penalty will be attracted. Within that 15 days if you file, only late fee. But after that you need to pay penalty as well. Understood? So we have completed in returns 2 parts. First is returns, due date and other aspects. Number 2, late fee. Now we have a third area, that is QRMP scheme, that we will discuss in afternoon session, and thereafter payment process is there, that also we will complete. Payment process and e-way bill, small topics only. So we will meet at 2 o'clock. Now it's 1:15, we'll meet at 2 o'clock. Okay, thank you. Okay, we'll start. Look into page 182, QRMP scheme, quarterly return monthly payment scheme. So I'll give you a little background about this. What has happened is that initially lot of people were unable to pay the taxes quarterly, and there is a composition scheme, like monthly they could not pay. So that's the reason why they will be going on a composition scheme, and that composition scheme was applicable when the aggregate turnover during the previous year does not exceed 1.5 crores. But my aggregate turnover exceeds 1.5 crores, but still I am a small trader. Then in that case, so what should I do? So that's where they are bringing this quarterly return monthly payment scheme. That is, my aggregate turnover during the previous year does not exceed 1.5 crores. Anyhow, I have a composition scheme. What if it exceeds 1.5 crores, but that does not exceed 5 crores? Still I am a small trader. Rather than paying taxes on a monthly basis, can I pay tax on a quarterly basis? No, that is not possible, because it is not quarterly return, quarterly payment. It's not QRQP scheme. It is QRMP scheme. Then sir, I will file returns only on a quarterly basis. Taxes anyhow I have to pay on a monthly basis only. Then why the hell they gave this? God only knows. Okay. So this is one worst scheme which is being created by government. So GSTR1 and GSTR3B will be filed on a quarterly basis. So what is the time limit by which GSTR1 and GSTR3B will be filed? Already we discussed. GSTR1 quarterly by 13th of the month following every quarter. 3B by 22nd or 24th of the month following every quarter. Okay sir, to whom this QRMP scheme will be applicable? If my aggregate turnover during the previous year does not exceed 5 crores, then I can go for previous year aggregate turnover does not exceed 5 crores, then only I can go for QRMP. And if I go for quarterly return, then my recipient also will be able to take ITC on a quarterly basis only. He cannot take ITC on a monthly basis. So then this is going to pose some restriction on the recipient. Simple pa, I will file GSTR1 quarterly means you cannot take ITC monthly, you can also take ITC on quarterly basis, because based on my GSTR1, the data will be reflected in the 2B of the recipient. So which means you will be getting this data on a quarterly basis. Am I right? Then you will not be able to take ITC on a monthly. So you will put a pressure on me. What is that? Sir, I don't know. You go to hell also. I want monthly credit only. So therefore I am forced to report these details on a monthly basis, for which they created one facility called as IFF. IFF refers to Invoice Furnishing Facility. B2B invoices. B2B invoices means what? Sale to registered person may be furnished optional on a monthly basis through invoice furnishing facility, which is reflected in 2A or 2B of the recipient. Now, rather than filing IFF, I can file GSTR1 itself na? Agreed or not? Rather than filing IFF, I can file GSTR1 itself. Next, they are asking me to pay tax on monthly basis, but I will file return 3B quarterly. How can I pay tax on monthly basis? For that they created two methods, fixed sum method and self-assessment method. These are the two methods through which I can pay tax on a monthly basis. So by when I should pay tax? For the first month and second month, by 25th of the next month. For example, April to June I am under QRMP, For April, I need to pay by 25th of May. For May, I need to pay by 25th of June. And for June month, sir, anyhow for all these 3 months together, I will file one GSTR 3B na. In that I will pay, that is 22nd or 24th of July, I will file the GSTR 3B return. In that I will pay June month liability. Are you understanding? April to June I am under QRMP. April month I will pay by 25th of May. May month I will pay by 25th of June. Then what about June month? All 3 months together, anyhow I will file a 3B. In that 3B I will pay even June month liability also. Is it clear? So monthly payment of tax through PMT6. PMT6 is the form through which we will pay, either using self-assessment method or a fixed sum method by 25th of the next month for 2 months in a quarter. And QRMP scheme is like registration wise we can choose. For example, I have 4 registrations. Between these 4 registrations I can choose for which registration I want to go for monthly, which registration I want to go for quarterly. But composition scheme is not like that. Composition scheme is all in, all out. All the people, all the registrations will be under composition scheme, or all the registrations will be out of composition scheme. But QRMP is not like that. For example, I have 4 registrations. For 2 registrations, can I go for quarterly return? Yes. For 2 registrations, can I go for monthly return? Yes. QRMP scheme is GSTIN wise, and distinct person have the option to avail the scheme for 1 or more GSTIN. What is the time frame to opt in? When should I opt for QRMP? So remember, commencement of the quarter, beginning of the quarter, 1 month after commencement of the quarter, 2 months before commencement of the quarter. So what is the commencement of the quarter? April to June? April. 1 month after means April end. You understood? 2 months before means Feb. You understood? So 1st Feb to 30th April. Same way, July to September. July to September, within 1 month. What is it within 1 month from commencement? 31st July. 2 months before. What is 2 months before? 1st May. So remember, A for after, B for before. Alphabet A is 1, alphabet B is 2. So 1 month after, 2 months before. Okay, pa? What is the time frame to opt in? 1 month after. So what is after means April 1st, pa? 1 month from April 1st, within 1 month from April 1st means end of April, April 30. 2 months before means 1st February. So like this we can opt for QRMP. That is the time limit for opting in. And what is the condition for opt-in? The last return should be filed, which means whatever monthly returns that you have, that monthly return should be filed before going into quarterly returns. GSTR1 or availing IFF facility. Is this IFF optional or mandatory? Optional. So I can file the returns on a quarterly basis. All the details I can show 3 months once in GSTR1, but monthly wise also I can show. What will happen if I show monthly? My recipient will get ITC monthly. Otherwise, what will happen? All 3 months once I will be reporting in GSTR1. That is this. The scheme provides for IFF facility for first 2 months to furnish the details of outward supply till the 13th of the succeeding month, and this is optional. So by when I have to file IFF? 13th of the month for every month, first and second month. What about third month? Anyhow, for all these 3 months, we will be filing GSTR1 by 13th of the month following every quarter. And whatever details that are furnished in IFF need not be refurnished in GSTR1, means automatically it will come. Only the last month details we need to add. But see there, what turnover I can report in IFF? Up to 50 lakhs. 50 lakhs worth of turnover only I can report in each month. So what they are doing is that they are doing an average. 5 crores are QRMP. 5 crores means 500 lakhs. 500 lakhs divided by 12, 46.67. So they are telling on an average 50 lakhs turnover only we can show in QRMP. So that is monthly we can show in IFF. That's what they are telling. But I may have business in different model also na. In few months I will have more turnover. In few months I will have less turnover. So this is one stupid point then. Then on non-opting of this facility, details of outward supply to be made in GSTR1 quarterly. Then what are the methods that I have? Fixed sum method, self-assessment method. Fixed sum method means you see the previous 3B. Previous 3B is quarterly 3B, means for 3 months once you would have filed. Say that is 1 lakh. 1 lakh into 35% is what? 35,000. I will pay for the first month and second month in the current quarter. Is it clear? I am in July to September quarter. April to June quarter, I filed already 3B, 1 lakh. 1 lakh into 35% is how much? 35,000. I will pay for the July month and August month. Got it? This is which method? Fixed sum method. What if previous quarter I was under monthly 3B? I am in which quarter right now? July to September. What was the previous 3B for June? For June I would have filed one 3B na. You take that 3B, how much ever liability you showed in that 3B. Say for example I showed 40,000 as liability. That 40,000 I will pay in the first month and second month. Why only first month and second month? That's what I am telling. For third month anyhow we are going to pay the actual amounts. So that is this fixed sum method. But sir, I don't have that much liability, sir. Previous 3B, 1 lakh into 35%, 35,000 I need to pay. But actually this month I don't have that much of liability. Then you go for self-assessment method. There is another method called as self-assessment method, where you compute how much is your liability and you discharge that. So either you can go for fixed sum method or you can go for self-assessment method. Under fixed sum method, you check whether the previous 3B is quarterly or monthly. If previous 3B is quarterly, 35% of tax liability of the previous quarter you will pay. If previous 3B is monthly, 100% of the tax liability you will pay. Are you understanding this? But when a person will not go for fixed sum method, if he is not having that much of liability, he will definitely go for self-assessment method, wherein you actually compute how much is your gross liability, how much is your ITC, and that much money only you pay. That is self-assessment method. Are you understanding this? Then, any change in the manner of filing 3B? No, no change in the manner of filing 3B. Normally we will file. And when you will come out of QRMP, what is the limit for QRMP? 5 crores. So the moment you cross the 5 crores in any quarter, from next quarter onwards you will go for monthly only. For example, first quarter 3 crores, second quarter 3 crores. So 3 plus 3, which exceeds. Then from third quarter onwards, can we go for QRMP? No, only monthly filing. Levy of late fees. Normal late fee we discussed na, that is even applicable for QRMP also. So these are the points which can be tested for MCQs. Now, there is one area which can be tested for problematic question, that is interest computation under quarterly return monthly payment scheme. So that interest computation we will try to understand. See the next page. I will explain with the help of an example. First we are under fixed sum method. Fixed sum method means what we need to do? Either previous 3B, quarterly or monthly, you take that as the precedence and you pay the liability this quarter, correct? Now we are in July to September. For the previous quarter, April to June, how much liability we paid in 3B? 1,50,000. Means 1,50,000 into 35%. What is 1,50,000 into 35%? 52,500 we need to pay for July month and August month. Are you understanding this? But your actual liability may be more or less than 52,500. Agreed? If your actual liability is more, for example, 60,000 for July and 70,000 for August, then what you need to do? This difference and September actual you pay by due date of 3B, that is say 22nd of October. Are you understanding this? First month difference how much? 7,500. Second month difference how much? 17,500. Plus third month actual how much? 80,000. That you will pay in due date of 3B, that is 1,05,000. Now are we required to pay any interest? No interest payable, provided you pay it by 22nd October. What is 22nd October? Due date of 3B. Suppose if you pay beyond 22nd October, For every day delay, you need to pay interest on this 1,05,000. Are you getting this, pa? Again, I am repeating. Suppose if your FSM liability is 52,500, you understood how we got 52,500? Previous quarter 1,50,000 into 35%, 52,500. But your actually 60. August also you will pay 52,500, but actually 70. So this difference 7,500, this difference 17,500, and actual of September 80, 1,05,000 if you pay by 22nd October, which is the due date of 3B, there is no interest. If you pay beyond the date, for every day delay, you need to pay interest at the rate of 18%. Got it? Now, sir, what if my actual is less than 52,500? Possible, na? In this case, my actual is 50,000. In this case, my actual is 45,000. Now, I paid excess, na? How much excess I paid? First month, 2,500. Next month, 7,500. That is 10,000 I paid extra. Am I right? Now, that will be adjusted from actual 80. So, therefore, how much I have to pay? Only 70,000. Understood? Then another case. Suppose if I don't have any amount for September. I don't have any amount for September. And here I paid instead of 52,500, actually 50,000 I should pay and 45,000 I should pay, but I paid excess. How much I paid excess? 10,000. September I don't have any liability. Then what will happen? I will get a refund of 10,000. Are you understanding? Why refund? Because I have paid already 52,500, 52,500. But my liability is only less than that. So extra I have paid. Whether it can be adjusted in the third month? No. Why it cannot be adjusted in the third month? Because third month I don't have the liability. So I will get the refund of this 10,000 rupees. Up to this understood? Next. Suppose July month 52,500. By when I should pay this? July month 52,500. By when I should pay? August 25th. If there is any delay, interest is payable. Yes. Not difference. I am talking about this. This 52,500 I have to pay by 25th of August. This 52,500 I should pay by 25th of September. If there is any delay, on this interest will be applicable? Yes. So therefore, under fixed sum method, there are two interests. Tell me what are those two interests? Monthly, if not paid by 25th of next month. For every day delay, interest is payable. Understood? Quarterly, the difference amount not paid by due date of 3B. Quarterly, the difference. What is quarterly difference means? Actual minus already paid. If not paid by due date of 3B, then for every day delay we need to pay interest. Correct? But on the difference, that is actual minus FSM, there is no interest if you pay that by due date of 3B. Am I right? Then in SAM, what is the difference, sir? Exactly there only the difference will come. That is, first interest, second interest, same even for SAM. What is the first interest? Monthly, if we are not paying by 25th of next month, you need to pay interest, same. Differential amount, if you are not paying by due date of 3B, you need to pay interest, same. But on the difference between actual minus FSM, there is no interest if you discharge by the due date, correct? But here you need to pay. Under SAM, you need to pay interest payable on the difference. So, on 7,500, you need to pay interest from which date to which date? Interest on 7,500 rupees from which date to which date? From 25th August till 22nd October. You understood? Write down there. Why we need to pay? Because it is under SAM method. I will tell you the reason. Usually what happens when it is SAM method, you will pay nominal some 10 rupees, 20 rupees also. Just for the sake of paying, you will pay some nominal amount. But your liability may be different. That's the reason why they are telling, if you listen to what we are telling, FSM, you will not have interest. If you do on your own, then you have to pay the interest on the difference. So interest on 7,500 from 25th August to 22nd October, and on 17,500 from which date to which date? 25th September till 22nd October. So this is the difference in interest between fixed sum method and self-assessment method. Okay. So that is what I have given in the previous page. Previous page I gave in theory. Here I just explained to you in the with the help of this illustration. Payable illana? Then you are getting refund. You are getting refund means you don't have to pay the interest. Huh? That's what, for this 7,500, are you required to pay or not required to pay? Required to pay. So you are paying interest. Over. This 17,500, required to pay or not required to pay? Required to pay. Then till the time you pay, you have to pay the interest. Why first of all this 7.5 and 17.5 comes? You don't see September. September you don't have the liability, irrelevant. September you don't have the liability, irrelevant. Actually we are not talking about September liability, we are talking about July and August liability itself. July I have to pay 60, but I already paid 52,500. So on 7,500 I need to pay interest. Same way for August, I have to pay 70, but I paid only 52,500. So on this 17,500 I am paying interest. Where I am talking about September month, I am not all talking about September month here. Then see the next page. Invoice furnishing facility, already we discussed this. For first month and second month, we will add the details in IFF. It will be reflected in 2A, 2B of the recipient. Third month depends whether first month and second month we filed IFF. Yes, only third month details we need to upload in GSTR1. Otherwise, all 3 months details we need to upload. And filing of 3B, already I told you for which stage it will be 22nd, for which stage it will be 24th. So Gujarat, Madhya Pradesh, not Maharashtra, Gujarat, Madhya Pradesh, Chhattisgarh and Andhra Pradesh, GMCA and states below, it will be 22nd. For other states it will be 24th. Monthly filing it will be 20th of next month. Now look into illustrations on interest computation as to how this can be tested in exam. See this. A registered person who has opted for the scheme has paid a total amount of 1 lakh in cash as tax liability in the previous quarter of October to December. He opts to pay tax under fixed sum method. So he is going for which method? Fixed sum method. He therefore pays 35,000 each for 25th October and 25th February and 25th March, because for Jan to March he is under QRMP. For January month he need to pay by 25th February, for February month he need to pay by 25th March, and he paid on time for discharging the tax liability of the first 2 months. In his return for the quarter, it is found that liability based on the outward and inward supplies for January and February is 40 and 42. So what is the shortfall for January? 5,000. What is the shortfall for February? 7,000. So if that 5,000 and 7,000 is paid by the due date of 3B, will the interest be applicable or not applicable? Not applicable. You understood? And next, because it is under which method? Fixed sum method. Then illustration 2. A registered person who has opted for the scheme has paid an amount of 1 lakh in cash as tax liability in the previous quarter of October to December. He opts to pay tax under fixed sum method. He therefore pays 35,000 each on 25th February and 25th March for discharging tax liability for first 2 months of the quarter, that is January and February. So fixed sum method again. In his return for the quarter, so total, that is all 3 months put together, what is the liability? 1,25,000. And when he filed 3B, 30th April. Now what is the due date applicable to him? Usually what is the due date? 22nd. Assuming that they are in Tamil Nadu, what is the due date? 22nd. What is the delay in filing 3B? 8 days. For these 8 days, interest is payable. Is it clear? Again I am repeating. 3B should be filed by 22nd October. But they filed, 22nd of April. But they filed on 30th of April. So what is the delay? 8 days delay. For that 8 days delay, they need to pay interest. On what? 1,25,000 or difference? Difference. Because already they paid 35 and 35. Correct. So 1,25,000 minus 70. What is the difference? 55. Now interest is payable on 55. Do the calculation. 55,000 into 18% into 8 by 365. 217 rupees is the interest that is payable. You understood? Then next, last question. A registered person has opted for the scheme, has paid a total amount of 1 lakh in cash as tax liability in the previous quarter of October to December. But he is opting for self-assessment method. So he paid 40,000 on time, 25th February, 25th March. Whether the monthly tax paid on time? Yes or no? Monthly tax should be paid by 25th Feb and 25th March. They paid on time. So that interest will not come. Am I right? In his return for the quarter filed on due date, so he filed the return on due date only, 22nd April. It is found that liability based on the outward and inward supply for January was 40,000 and February 46. What is the liability for Jan? 40. How much he paid? No interest. What is the liability for Feb? 46. How much he paid already? Now on that 6,000 rupees, even though return is filed by due date, he need to pay interest. Correct? From which date to which date? 25th of March till 22nd of April. Why, sir? Because it is which method? Self-assessment method. See how many number of days? So 6 days in March, 22 days in April, so 28 days. For 28 days we need to compute interest on what? 6,000. 6,000 into 18% into 28 divided by 365. That is that 83 rupees is payable as an interest. What if this illustration 3 is under fixed sum method? No interest. No interest. 1 rupee interest also not payable. You understood? So you may get a questions like this on interest computation under QRMP. Otherwise, on time limits, they will be checking in MCQ. Okay. So with this, we completed returns. Look into payment process here. Segment 10, page number 167. Segment 10, page number 167. Already in payment process, we have completed many areas. Interest computation we know, and 86A, 86B we know. So other aspects we will see quickly. Only 2 sections are there in payment process, section 49 and section 50. 49 talks about what are the various ledgers to be maintained. 50 talks about the interest computation. Okay. And as I did not ask you to write the section numbers, so do this exercise tomorrow, hardly some 1 hour or 2 hours. You spend some time, you write down the section numbers, what is it about, and give the respective page numbers, and frequently you just go through those section numbers. Because what will happen is that these section numbers we will sometimes forget. But when you are presenting the answer with section numbers, usually the weightage for the answer will be high. Okay, for that reason. So section 49, we are discussing what are the various electronic ledgers. There are 3 electronic ledgers which will be maintained by GST network on behalf of every registered person. What are those 3 ledgers? Electronic liability ledger, electronic credit ledger, electronic cash ledger. Now, what will be there in electronic liability ledger? Our liability. What is our liability? Total 5. T, I, P, F, O. What is T? Tax. I, P, F, O. What is F? Fee means late fee. Penalty for breach of provisions. Interest for delay in payment of tax and the tax. These are the 5 dues that will be there in our liability ledger. Tax dues and other dues. Interest, penalty, fee and others. Now, how money will come into liability ledger? You tell me. How money will come into liability ledger? How do we know first of all that there is a liability? We only will declare where GSTR1 and GSTR3B. In our GSTR1 and GSTR3B we declare the liability na, that will only be coming in electronic liability ledger. Understood? Then electronic credit ledger. How money will come into electronic credit ledger? We avail the ITC. How we will avail ITC? GSTR3B. There are some other ways also ITC will be availed. ITC 1, availment of ITC on closing stock, correct? ITC 2, whenever some other person transfers his business to us, we will get the ITC. Or ITC 2A, whenever the single registration is separated into multiple registration, then also we will get the ITC, correct? So what is the inflow into electronic liability credit ledger? Tell me. GSTR 3B, ITC 1, ITC 2 and ITC 2A. Now whatever money that comes into electronic credit ledger can be used for payment of all the dues or not. No. We can use the balance in credit ledger only for payment of tax dues. That too, which tax? Output tax or input tax? Output tax. Because GST payable under RCM, we cannot use the balance in credit ledger. Do you remember? Then, balance in electronic cash ledger. How money will come into cash ledger? Whenever you deposit or whenever your TDS, TCS is deducted by the other person. Are you getting this? So, PMT challan, deposit through PMT challan, that is whenever you make a deposit it will come, or TDS, TCS deducted by the recipient or e-commerce operator, or any refund. Suppose if there is any refund given by the government, that will also come into the cash ledger. But the balance in cash ledger we can utilize for payment of tax dues as well as other dues. Understood? Now, this you will be getting as a question. Write a overview on electronic ledgers. Like that 2 attempts I have asked for 5 marks. Maybe again a 5 mark question can be given. But like this, if you draw the chart, 1 mark also you will not get. But based on this chart, you need to write the theory. Okay? What is the first point that you will write? What are the 3 ledgers? What is the second point you will write? About electronic liability ledger, what are the dues that will be there? And what is the third point that you will write? Balance in electronic credit ledger can be used only for payment of tax. And how the balance will come in the electronic credit ledger. Then next point you will write, what is electronic cash ledger, how money will come and for what purpose it can be utilized. Clear? And remember the form numbers also, in MCQ it will be helpful. PMT1 is liability ledger, PMT2 is credit ledger and PMT5 is cash ledger. PMT1 liability, PMT2 credit ledger, PMT5 PMT6 deposit challan. Got it? PMT6 deposit challan. Don't worry, all these forms I gave it in the next to next page, page number 169. I gave the list of forms. Page number 169 I gave all the forms. So even though we are discussing here, everything will be connected there. Okay. Then next. Sir, whatever balance in the electronic credit ledger or cash ledger, can I get as a refund? Yes. There is some excess balance in the credit ledger, cash ledger. We have made the payment of tax. Still there is some balance. Can I get as a refund? Yes. So that is the next point. Can be refunded. any discrepancy in ledger is communicated through PMT4. There is one more form, PMT4. That is, the balances in the ledger is not properly reflecting. There is some issue, technical issue. To whom we need to complain? To the portal. What is the form for complaint? PMT4. Then, special points with respect to electronic cash ledger. See that. How we will deposit money into the cash ledger? They have given total 6 modes through which we can deposit into cash ledger. What are those 6 modes? Net banking. Through net banking you can pay, or through credit card, debit card you can pay, or if you don't have these two, UPI also you can pay, IMPS also you can pay. You understood? What are the 4 options so far? Net banking, debit card, credit card, UPI, even IMPS. Then all these are actually payment from your location. Suppose if internet is not working, or you don't have the internet banking facility, UPI facility, go to your bank and fill the NEFT RTGS form, and through that also you can pay, or you can make a over the counter deposit. Over the counter deposit means through check, demand draft or cash you can pay, but over the counter deposit there is a limit up to 10,000 rupees. You understood the 6 modes pa? Internet banking, debit card, credit card, NEFT RTGS, cash deposit over the counter, but up to how much? 10,000, UPI and IMPS. These are the various modes. Sometimes it so happens that our bank account got debited, but it is not reflected in cash ledger. This is a usual problem. Whenever you make the card payment, it will happen. Na? You swipe the card, you will get a message that money is debited, and the person will say, no sir, money not received, again you make the payment. If it is 500, 600 means, okay, we'll take the risk. We will pay, assuming that it will get, refund will be given. So you will make the payment, 500, 600, okay, at our level. Think of the tax payment which is 5 lakh, 6 lakhs. 5 lakh, 6 lakhs of tax payment you paid, debited, not reflected. Okay, again we will pay, definitely no. That much and all we cannot take chance. For 500, 600 itself we will think twice, thrice whether you make the payment, you will ask him check again, immediately you will call the bank, etc. and all. So why we need to pay the tax payment again? So that's why what they are telling, you make the complaint to the payment gateway through the portal. So the portal will ensure that the money is collected from the payment gateway. Because when you call, bank will not properly respond. First 30 minutes will go in the, press 1, press 6, press 9, like that only. And thereafter the customer care representative will take the phone and they will be telling, sir, we have taken your complaint and please wait for 7 working days to get the resolution. Due date over, pa. 7 working days, due date is over, I have to pay interest. That's the reason why. So you don't have to call the customer care of the bank, just you make a complaint to the gateway through the portal. Portal will ensure that the payment is collected, because the portal will operate through RBI. The portal, GST portal will have a connection to RBI. So therefore they will be able to capture this data and get it. So there won't be any issue. That is why they created this form PMT7. When the payment is debited in bank account but not credited in cash ledger, then communication to the payment gateway shall be made through PMT7. Then, sir, I have wrongly deposited between major head and minor heads. So what are the various heads, major heads and minor heads? You tell me what are the tax heads that we have? CGST, SGST or UTGST, not both. Why not both? Either you will be in a state or you will be in a union territory for one registration, correct? So SGST or UTGST. Then third head, IGST. Fourth head is there, cess, compensation cess, okay? So now for these 4 major heads, there will be 5 minor heads, TIPFO. So there will be a 20 cell matrix, you understood pa? So the moment we see the challan, so when you open the challan, so for making the payment, So this is how the challan will look like. There will be a 20 cell matrix like this. 4 major heads: CGST, IGST, SAS, SGST, and TIPFO. Like this, a 20 cell matrix will come. You will put it into the respective cell. By mistake, instead of IGST, you have put under CGST, SGST tax, but actually you need to pay IGST. Now, is it possible to shift the balances? Yes, it is possible to shift the balances. For that, they gave one form, that is PMT9. See there. For transfer of balances between major heads and minor heads in cash ledger, PMT9 is notified. Are you understanding this? Also, sir, I have some balance, that is I have 2 registrations in 2 different states, Karnataka, Kerala. In Karnataka registration, in my cash ledger, there is some excess balance. If I apply for refund, it will take some time. So what I am doing is that I want to shift it to Kerala's electronic cash ledger. Both registrations are mine only. Are you getting this? I have 2 businesses, one in Karnataka, another in Kerala. In Karnataka, I have some excess balance in the cash ledger. If I apply for refund, it will take time to get the refund. Instead, immediately can I transfer the balance to another cash ledger of another state, but of the same person? Yes, possible. For that also same form is used. Balance available in cash ledger can be transferred between distinct persons in PMT9. Understood, pa? Sir, can we transfer from electronic cash ledger of one person to another person? That is not possible. Only distinct person, underline that. Only distinct persons it is possible. Other persons. Is it electronic cash ledger or credit ledger? Cash ledger, credit ledger and all we cannot transfer like that. You understood pa points related to cash ledger? Then look into special points related to credit ledger. I told you, whenever we have excess balance in the credit ledger, we will get as a refund. But what are the cases where we will get refund from the credit ledger? Only 2 cases we will get refund from the credit ledger. Number 1, 0 rated supplies. What are 0 rated supplies? Export of goods or services. Or number 2, supply of goods or services to SEZ. Then another case is inverted tax structure. What is inverted tax structure? My tax rate on output is less than the tax rate on input. Example, pa, cloth is taxable at 18%. Using cloth, I made a garment. That garment is taxable at 5%. You understood? Cloth is 18%. Using that cloth, I made a garment. The garment is 5%. Now, definitely I will have excess balance in ITC. Agreed? Because my GST liability is 5%. But on my purchase I have huge credit, then also I will get the refund. So tell me, what are the 2 cases where we will get the refund of ITC? 0 rated supplies, inverted tax structure. What is the meaning of inverted tax structure? Tax rate on output is less than the tax rate on input. The next point, refund to the source ledger. What is this refund to the source ledger? I have given that as an illustration in page 171, you see that. Refund to the source ledger. Page 171, there is one illustration. For July 2021, GSTR 3B filed on 20th August. Filed on time? Yes. Where the gross liability reported is 200 lakhs and ITC is 120 lakhs. Then how much I would have paid by cash? 200 is gross, 120 is ITC. So what is the remaining amount I would have paid by cash? 80 lakhs. So how much money I paid through credit ledger? How much money I paid through cash ledger? 120 I paid through credit ledger and 80 lakhs I paid through cash ledger. Understood? Now, out of this 200 lakhs, GST is excess paid by 1,50,000. By mistake, I am paying 1,50,000 in excess. And the refund is also granted to me. So I got the refund also. Now tell me, will the refund be given into my bank account or cash ledger? Fully it will not come into my cash ledger. It will be proportionately given in my credit ledger and cash ledger. You understood why? While making payment for that month, fully I paid using cash ledger. No. So while getting the refund also, it will come into the respective ledger. Is it clear? It is like, so Swiggy, you made a payment. So through UPI, the order got cancelled. When the order got cancelled, they will refund it in the same source. Same source means through UPI only it will be returned. It will not be given to any other account. Agreed or not? Like that, whenever the refund is given, the refund to the source ledger. So in that month, we paid partly from credit ledger, partly from cash ledger. Na? So it will come. Now tell me, how much refund will be given into credit ledger? What is the ratio? 3:2. You understood how 3:2? 120 is to 80 pa. 120 is to 80. So 4 3s are 12, 4 2s are 8. Okay. In that ratio, 3:2 ratio it will be given. So tell me how much will be going into credit ledger? 1,50,000 into 3 by 5 credit ledger, 1,50,000 into 2 by 5 into cash ledger. Is it clear? So that is about this. Refund to the source ledger. You read that point. Where the registered person has claimed refund of any amount paid as tax wrongly paid or paid in excess for which debit has been made from credit ledger, the said amount if found admissible, proportionate amount debited, underline, proportionate amount debited from credit ledger shall be recredited to the credit ledger through an order in PMT3. You understood PMT3? What is the purpose of PMT3? Whenever we pay the excess tax, that excess tax will be refunded to the source ledger. For that they will pass an order in PMT3, that is recredit to electronic credit ledger. Then there is one more form called as PMT3A. What is this PMT3A? Please listen carefully. First I have some ITC balance. I claim the refund of that ITC balance. This refund is actually erroneous, wrong refund, and this has been recovered from me. There is some ledger pa, 1 lakh balance is there in the ledger. Now I have got a refund of 30,000. Now what is the balance? 70,000. I got a 30,000 refund in my bank account, but actually it is a wrong refund. I should not get. Now government has recovered this 30,000. Correct? Now this 30,000 should be coming back in the ledger or not? Yes. I claimed refund. I have returned the refund. Then the balance should increase. So that is what they are telling, PMT3A. Read. Where a registered person claims erroneous refund of ITC wrongly, upon payment of such refund, so this PMT3A will be passed for recredit. Then balance in credit ledger can be used only for payment of tax but cannot be used for payment of interest, penalty, fee and others. Already we know. Also balance in credit ledger can be used only for payment under GST but not under RCM. That also we know. Whatever balance that is there in the credit ledger may be restricted by the proper officer under Rule 86A. That also we have seen. Then see this last point. I have to pay some arrears of tax. For payment of arrears of tax, what is arrears of tax means? Some prior period tax I have not paid at the time, now I am paying. Can I use the balance in the credit ledger for payment? Yes, that's what CBIC circular says. See the last point and mark it as important. Balance available in the credit ledger can also be used for payment of tax in pursuant of demand, that is arrears of tax. For payment of arrears of tax also, I can use the balance in credit ledger. Done? Then, so what are the forms that we have discussed? Please see in the next page, I have given there the summary. PMT1 is what? Liability ledger. PMT2, credit ledger. PMT3, refund to the source ledger. Refund to the source ledger. PMT3A, whenever refund is claimed and it is recovered again recredit will be happening to the credit ledger, that is PMT 3A. PMT 4, communication of discrepancy. Whenever there is some discrepancy, we will make a complaint. PMT 4. PMT 5, cash ledger. PMT 6, challan for deposit of tax. PMT 7, money got debited but not reflected in the cash ledger. PMT 7. PMT 9, transfer of balance in the cash ledger. Okay. And then transfer of certain amounts, that is, see this, I have utilized ITC of CGST for payment of IGST. There is no issue, but account transfer will happen. So far it was under CGST, now it will move to IGST. Same way, IGST credit when used for payment of CGST or UTGST or SGST, money will go from central government account to the respective central government or state government, as the case may be. Then you see this page 170, how the taxpayer should settle their liability. Sir, I have last month tax due, this month tax. Which should I pay first? Last month tax I should pay first, then current month, then arrears of tax. You understood? Sir, last month is also called as arrears na? No, arrears means I am not reporting anywhere, department has identified that, that is arrears. So first is self-assessed tax. Self-assessed means reported. Where? In GSTR 1. When? Previous tax period. Then self-assessed tax. Again where? Reported in GSTR 1. Of which month? Current month. Thereafter, any arrears of tax we need to pay. Then PMT 6 is what? Payment challan. Payment challan will be valid for a period of 15 days. So once the challan is generated, it will be valid for a period of 15 days for payment, which means it is like your exam application form. You create the exam application and you will fill all the details and you will ask your parents one auspicious day. Until that point of time, you will not pay the fees na, because you will have a feeling like only when you pay on the auspicious day you will clear the exam. That is your belief, let it be. Now in that case, so therefore say 3 days after is only auspicious day. Still the details that you entered in the form will be there or not? Yes. Like that, once the challan is created, whatever details that you enter in the challan will be like that only for how many days? 15 days. That is this, validity for 15 days. Then there is a time like monetary limit of 10,000 for over the counter deposit, correct? Means over the counter, that is in the bank counter, towards tax, how much we can deposit as cash? 10,000, not more than that. But in 3 cases, they can deposit more than 10,000. One is government department. Whenever government department, for example, IRCTC, they are required to pay the tax. That tax they can pay even beyond 10,000 rupees. Or like income tax department, GST department also can come and do the raid. Income tax department will conduct the raid na. Many movies you would have seen. Either income tax department can come or people representing as income tax department will come. Will be breaking things, will take money and will be taking all the money with them. Correct or not? So Vijayan also in one movie you would have done. Bhairava, like that one movie. Utter flop it became. So that case, so it is also possible. And this particular like income tax rate, GST raid also will happen. GST department also can come for search. And they will also identify the cash. That cash they will take with them and deposit, which is more than 10,000. It's okay, they can make a deposit. Generally, for cash deposit in the tax, there is a restriction of 10,000. But in 3 cases, there is a relaxation. What is the first case? Government department. Number 2, GST department raid. You understood? Number 3, you have not at all paid tax pa. What department will do? They will come and attach your assets. Like property, car, etc. and all they will attach. And they will sell. When they sell, they get in cash na. That cash also they can deposit. So mark it as important for short note. To recover the outstanding dues, including attachment proceedings, or to collect the money by way of cash, check or demand draft during any investigation or enforcement activity, or government departments. These 3 cases, they can deposit more than 10,000. in the cash ledger through cash, that is through check, cash or demand draft, etc. Refund to the original source already we discussed. 86A and 86B also we discussed. Now we are moving on to the last section in this, section 50. Interest on account of delay in payment of tax. Okay. Now, you all can get up and sit once. La அப்படியே சொக்குது கண்ணு. இல்ல லாஸ்ட் பெஞ்ச்ல இருந்து எனக்கு தெரியாதுப்பா, நான் இங்கே உட்காந்துட்டு அப்படியே தூங்குறாரு. ஐயோ எனக்கு தூக்கமா வருது. சிட் here, sit. Okay, listen. So right now we are discussing section 50, interest on account of delay in payment of tax. Tell me when interest is payable. What are the cases where interest is payable? Delay in payment of tax. That's what. Late filing means delay in payment of tax. Then wrong availment and utilization of ITC. So what are the two cases we will pay interest? Wrong availment, that is delay in payment of tax. Wrong availment and utilization of ITC. What is the rate of interest? 18% per annum. Simple interest or compound interest? Simple interest only. And what is the period for which you need to compute the interest? Come on, already we know all these things. Please respond. For delay in payment of tax, we need to compute interest from which date to which date? Due date to actual date. Correct? Should we count due date or not to count due date? Not to count due date, the next date. But from the due date till the actual date, don't count the due date. The next date you count. But date of payment also we should count? Yes, date of payment also we should count. For ITC, wrong availment and utilization of ITC, interest is computed from which date to which date? From the date of utilization till the date of reversal or payment. Got it? Next, whether non-payment of interest invokes any interest? No, GST department has not yet become money lender so far. So therefore, there is no interest on interest. It's like you have paid late by 10 days. GST you paid late by 10 days. Now for the 10 days delay you have to pay interest, but you did not pay interest. Tax you paid late by 10 days pa, but on that interest you have not at all paid. And 1 year, last 1 year you did not pay interest, 1 year over. Now on this interest again will there be interest for 1 year? No, no. So that's what many times when lot of people approach me and say, sir, I have missed out payment of tax, sir, what should I do? I have to pay interest, penalty, etc. and all, it will go somewhere. I'll ask them to first pay the tax. First you pay the tax. Once you pay the tax, thereafter they will give a notice to you to recover the penalty and interest. Let them find and let them give the notice. Leisurely also you can pay, because once the tax is paid, the interest will stop there. Understood? That interest amount you pay next year, thereafter next year also, the interest amount is same, because the tax already been paid. Understood? So there is no interest on interest. Thank God. So Chechi is not getting the idea. We don't know when she will get. Maybe it can be levied. Why will she listen to my lectures and all here? If she listens, okay, then, no, I don't know. You will not have THARUN'S here, okay, definitely no. Then she is not even listening to, ICI itself. ICI is telling many recommendations, that itself she is not listening. Where from, if I tell, she will be listen, one individual. So definitely not necessary. But if she listens, then which ledger balance is used for payment of interest? Credit ledger or cash ledger? Cash ledger. On what amount interest is computed? Listen. First you need to see, is it delay in filing 3B or not? If it is on account of delay in filing 3B, means 3B you have to file on one date, you could not file on that date, so you filed late. As you file delay, like as you file GSTR 3B late, even tax also paid late, agreed? Because we will pay tax at the time of filing 3B. So 3B I have to file by 20th. I filed on 31st, which means tax also I am going to pay on 31st. Okay. Now, interest is computed on gross liability or net liability. Interest is computed on net liability. Is it clear? Again I am repeating. GSTR 3B filed after due date. There is a delay in payment of tax. But interest is computed on which liability? Net liability. What is net liability? Already you know. Gross liability minus ITC plus RCM liability is the net liability. Is it clear? Now see this question. So GSTR 3B of July 2023, gross liability 8 lakhs, ITC 3 lakhs. So 8 minus 3, how much is the net liability? 5 lakhs. That 5 lakhs he deposited in the cash ledger. But he did not file 3B. He forgot to file 3B. He paid in the cash ledger. What is the due date of July 2023? July 2023 due date is what? 20th August. 20th August. 3B due date 20th August. Okay. So July 2023 due date is what? 20th August 2023. He paid by 20th August 2023 5 lakhs. But what is the mistake that he did, sir? He did not file 3B. Then what he did? He just deposited. He thought if we deposit money that is okay. No. If you just deposit the money in the cash ledger, that does not mean payment of tax. Only when you file 3B, then only it is considered as payment of tax. Are you understanding this? Now, when he filed 3B for July, read the question. When he filed 3B for July, 28 December 2023. Now interest is computed from which date to which date? 20th August to 28 December. Count the number of days. So in August 11 days, September 30 days, October 31 days, November 30 days, December 28 days. That is 130 days he need to pay interest. On what? 8 lakhs or 5 lakhs? 5 lakhs. So 5 lakhs, calculate. 5 lakhs into 18% into 130 by 365. 32,055 rupees. So for the mistake of not filing GSTR 3B, even though he deposited the money, he need to unnecessarily pay 32,055 as donation to government. You understood? Next, GSTR 3B of August 2023, what is the liability? 4 lakhs. How much is the ITC? What is the net liability? 3 lakhs. He deposited 3 lakhs. Already 5 lakhs he deposited. Now when he deposited 3 lakhs, the cash ledger balance went to 8 lakhs, means he deposited 3 lakhs. But he did not file 3B. Now again compute interest from which date to which date? 20th September to 28th December. So 99 days for which we need to pay interest. Then again, same way September. September gross liability 6 lakhs. ITC avail 4 lakhs. What is the net liability? 2 lakhs. So 2 lakhs even though deposited, but interest is payable because the return is filed on 28 December. So 20th October to 28 December. For these 69 days, interest is computed. But all these cases, interest is computed on what liability? Net liability. Then next one. Next situation is, sir, I have to pay tax pertaining to a month. Not paid in that month. But 3B is filed for that month. I have to pay tax pertaining to a month. Some past month. 3B filed, but I missed. You understood? 3B filed, but I missed to pay the tax, which means the transaction not reported in the return. Now I want to pay, and I paid partly through credit ledger, partly through cash ledger. I told you arrears we can pay partly through credit ledger, partly through cash ledger. Now interest is computed on gross liability or net liability? Gross liability. Tax paid subsequent to payment of self-assessed return. tax paid subsequent to payment of self-assessed tax in 3B file, means already 3B file, but pertaining to that month I have not paid tax. Now I am paying. Interest is computed on gross liability. Let's see an application question, you will understand. This is a past exam question. PQR Limited have filed their GSTR 3B return for the month of August 2022 within the due date, that is 29/2022. For August month, are they filing 3B by due date? Yes. It was noticed in October that tax dues for the month of August have been short paid by 10,000 rupees. The shortfall of 10,000 was paid through cash ledger and credit ledger, amounting to 7,500 and 2,500 respectively. So, and this 3B of October was filed on 20th November. Now, if you observe, this 10,000 rupees pertains to which month? Read the question carefully. This 10,000 pertains to which month? August month. Means when we should have paid 20th of September. But when are we paying? 20th of November. Now interest is computed on gross liability or net liability or gross. Because for that August month already 3B filed. Now that 10,000 pertaining to August I am paying now. So even though the 10,000 partly I paid through cash ledger, partly I paid through credit ledger, but interest is computed on gross. So 10,000 into, what is the period for which interest is payable? Come on. 20th September to 20th November. So in September how many days? 10 days. October 31. November 20. So 61 days. For 61 days we need to compute interest on what? 10,000. So see the answer. 10,000 into 18% into 61 divided by 365. So 301 rupees. Then, so next, if PQR Limited so has furnished the return late. Let's see the second situation. What would your answer be if 3B for the month of August filed on 20th November? So there is a delay in 3B. Now interest is computed on what? Net liability. What is the net liability here? 7,500. So same number of days. August month we should file by 20th September. We filed on 20th of November. As there is a delay in filing 3B, we need to compute interest on net liability, not on gross liability. There is a delay in filing 3B. Yeah, second situation, first situation over. At the time you slept, so you don't know. So second situation, what is the second situation? GSTR 3B not filed. Now only we are filing. Now interest is computed on net liability. What is the net liability? 7,500 into 18% into 61 by 365. How much is that? Then sir, it is better to file GSTR 3B late, correct? Not like that. Because when you file the 3B late, you have to pay late fee. Whose father will pay late fee? You understood? My father only will pay. So, 25 rupees per day per late fee. How many days delay? 61 days, huh? 61 into 25, how much? Huh? That is under CGST, under SGST, into 2. To save this few rupees, you end up paying few thousands. You understood or not? So, therefore, don't compare that there like that. Next, ITC already we know. For wrong availment and wrong utilization of ITC, interest is computed from date of utilization till the date of reversal. And what will be called as ITC utilized? I told you already. That month in which the balance in ITC falls below the wrongly availed ITC, to that extent we have utilized, and we need to pay from the date of utilization to the date of reversal. Sir, what is date of utilization? For that month in which the balance falls below, next month you have to file the 3B, na? Either actual date of 3B or due date of 3B, whichever is earlier will be taken as the date of utilization. Is it clear? What will be taken as date of utilization? The month for which the balance in ITC falls below the wrongly availed ITC. For that month, whatever is the actual date of 3B or due date of 3B, whichever is earlier, till the actual date of reversal. Actual date of reversal means till the date you filed the 3B for reversing that ITC. Now, let's try to understand this with the help of an illustration. See illustration 6. Mukund traders registered in Gujarat have opted to file returns on a monthly basis, and for all the months they filed 3B on 18th of the month following every month. For the month of October 2022, they have wrongly availed 1,50,000 and reversed the same in January 2023. Their tax consultant is of the view that interest is not payable on account of Finance Act amendment. You are required to compute the interest payable, if any, based on the following information. Which month they have wrongly availed ITC? October. How much wrongly availed? 1,50,000. So see the October month data. October month already they have a opening balance of 1 lakh and they have availed 5 lakhs. In that 5 lakhs, what is the wrongly availed ITC? 1,50,000, and they utilized 3 lakhs. What is the closing balance for October? 3 lakhs. Whether the closing balance falls below wrongly availed ITC? No. So therefore they have not utilized 1.5 lakh in the month of October. Then again go to November. November opening balance is 3 lakhs. ITC availed 2 lakhs. ITC utilized 4 lakhs. What is the closing balance? 1 lakh. Whether the balance in November falls below wrongly availed ITC? Yes. To what extent? 50,000, which means 50,000 they have utilized in November. You got it? Then again go to December. Opening balance 1 lakh. Availed 2,50,000 and it is utilized 1,50,000. So closing balance 2 lakhs. Does it mean they reversed? No, no. Just because the balance increases, that does not mean reversal. See the actual date in which they reversed. So January 2023, opening balance 2 lakhs, ITC availed 1 lakh, 3 lakh utilized. In that 3 lakh, 1,50,000 is reversed. You understood? In that 3 lakh, 1,50,000 is reversed. Means which month they are really reversing, actually reversing? January 2023. Now, first question, interest is computed on what amount? 50,000. Interest is computed from which date? Date of utilization. What is the date of utilization? Date of utilization will be November 2022. For November, when are we filing return? Due date or actual date, whichever is earlier. What is that? 18th of December. So 18th of December is the date of utilization. What is the date of reversal? When are they reversing? January. For January, when they will file the return? 18th of February. So we need to compute interest from which date till which date? See the answer there, 18th of December to 18th of February, that is for 62 days we need to compute the interest. So 50,000 into 18% into 62 by 365. Understood pa? So this is how you may get a question exclusively on interest computation. And one important point, sir, while checking the balance, should we see the balance of all the heads or only respective head? You understood? We have wrongly availed IGST credit. But if you see the balance, IGST head alone, we should see the balance, or all the heads we need to see the balance? All the heads. In case where IGST credit has been wrongly availed and subsequently reversed, so we need to see the underline balance of ITC in electronic cash ledger, that is credit ledger. This is electronic credit ledger under all the heads taken together. You understood? Example pa, CGST 20,000, SGST 20,000, IGST 60,000. So what is the balance? 1 lakh. 20, 20, 60, 1 lakh. Wrongly availed ITC 80. You understood? Wrongly availed ITC 80. So IGST wrongly availed is 80,000. And balance, if you see, balance if you see CGST, SGST, IGST, so 20, 20 and 40. Now IGST head alone if you observe, the balance has fallen below, correct? Agreed? IGST alone if you see, the balance has fallen below. But should we see only the IGST or should we see the total? We should see the total. What is the total? 80,000, which means whether the balance has fallen below or not. Not. So we have not utilized the ITC. Are you getting this? Don't see the headwise. See the total. IGST wrongly availed 80. Even though IGST is wrongly availed, but you see the cumulative of all the heads. The cumulative of all the heads is 80,000, means the balance has not fallen below, so we have not utilized. Is it clear? So this point also may be tested because it is an amendment. So with that, payment process is also over. Now have a look into one area, that is e-way bill. Page number 187. Tell me when e-way bill is required. Whenever there is a movement of goods. Whenever there is a movement of goods, we need to intimate to the department what goods we are taking, from which location we are taking, to which location we are taking, and in which vehicle we are taking. Everything we need to report to the department and we need to transport. What will happen if we are transporting without informing to the department? That is, without e-way bill, if you are transporting, what will happen? The goods will be seized. And only on payment of a huge penalty, which is 200% of tax, they will be releasing it. But penalty and all you don't have, so we have to pay a huge penalty. So therefore, e-way bill, is it like payment of tax? No, no, not payment of tax, just a information. What products, which place, to which place, in which vehicle, we will report to the department. That is what e-way bill is. Is e-way bill required for goods or services? Definitely goods. Why services we will move? So goods only we will move, for goods only. So is there a movement of goods? No, there is no movement of goods. Then e-way bill is not necessary. There is movement of goods, but the goods are exempted. Whether e-way bill required? No. Remember, for exempted goods or non-taxable goods, e-way bill is not required. Only for taxable goods, e-way bill is required. Is it interstate or out of India? No, intrastate, within state. Within state, check the state specific e-way bill provisions. Means, sir, do we have different e-way bill provisions? Yes. We have state specific e-way bill provisions and interstate movement e-way bill provisions. State specific e-way bill provision, for example, in Tamil Nadu, 1 lakh is the limit for e-way bill. Means if the value of goods does not exceed 1 lakh, e-way bill is not required in Tamil Nadu. In West Bengal, it is 2 lakhs. But we should not see that if it is interstate movement. If it is interstate movement, we need to follow the e-way bill provisions as per CGST, where the limit is only 50,000 rupees. Is it clear? So for your exam, whether you need to remember state provisions or the central provisions? Central provisions. As per central provisions for interstate movement. That's why in exam, you will get mostly questions on interstate movement only. Suppose if you get a question on intrastate movement also, you apply interstate movement provisions only. Is it clear? So what is the limit for e-way bill as per interstate movement? Limit 50,000. So only when the value exceeds 50,000, e-way bill is required. Is it clear? So interstate or out of India? Yes. Is it job work or handicraft goods? No. Then other goods. Then check the value more than 50,000. Means what? For job work or handicrafts, are you required to check 50,000 limit? No. For job work or handicrafts, always e-way bill is required. So just connect it here. Job work or handicrafts, always e-way bill is required. But for other goods only, we need to check that 50,000 point. So if the value of goods exceeds 50,000, then e-way bill is required. If the value does not exceed 50,000, e-way bill not required. But what are the exceptions to this 50,000 point? Job work and handicrafts, e-way bill always required. So skip this 50,000 step. You understood? Then Here, who will generate the e-way bill? In e-way bill, there are two parts, part A and part B. Part A contains the goods details. Part B contains the vehicle details. Who will enter part A? Are you a registered dealer? Yes. Then the sender will enter the part A details. Suppose if the person who is supplier is unregistered, but the recipient is registered, then recipient will enter the part A details. Yeah, I am supplier, you are recipient. If I am registered, I will enter part A details. If I am unregistered, but you are registered, you will enter the part A details. What if we both are unregistered? Transporter will enter the part A details. Transporter shall generate if applicable. You understood? Sir, what if transporter is a layman? He don't know. If they are like sophisticated companies, they will have people, then they will do. What if he is one normal individual who is doing transportation? They don't know. Then how the e-way bill can be generated? Either seller or buyer, by enrolling as citizen, they can enter the part A details. Sir, when supplier is unregistered, recipient is unregistered, there is no GST at all, na? Then why e-way bill is required? E-way bill and GST don't have any connection. Whether you pay GST or you are not pay GST, if the goods are taxable goods, e-way bill is required. Is it clear or not? So, it may be not a supply also. It may not be supply also. Example, goods sent on job work, it is not a supply. Even then e-way bill required. Why? Because the goods are taxable goods. Okay. So, once the goods are taxable goods, either sender will enter the part A details or recipient will enter the part A details or transporter will enter, else sender or recipient shall generate enrolling as citizen of India. No need to register for this purpose, just using enrollment as citizen of India, they can do that. So, we enter the part A details now. What will be there in part A? Goods details and part A of EWB1. Now, part B needs to be updated. So, what details should be there in part B? Vehicle details. Definitely that vehicle details, who will enter? Transporter. Suppose if it is one vehicle, either sender or receiver. You understood? It may be seller's vehicle na, or buyer's vehicle na, or it may be transporter's vehicle. So, they will enter the vehicle details. Update the part B within 15 days from updation of part A. It may be updated either by transporter or supplier or recipient as the case may be. Then next we need to see, is the distance within 50 kilometers? Yes, then part B alone not required. I did not say e-way bill not required. Part B alone not required. E-way bill is required. Part A required, but part B not required because the distance is within 50 kilometers. Mainly this is in case of consignor's place to the transporter's place. Example, my place to your place, you are the transporter. I will move the goods now from my location to your location. That is a shorter distance, 50 kilometers. Anyhow, really you are only going to transport. That's why they are telling part B details not required. Say this. It is to be generated before movement of goods. It is not applicable in case of exempted goods. It is not applicable if the value of goods does not exceed 50. But while determining the value, generally while determining value, whether GST to be included or not? No. Value excludes GST. Section 15(2)(a), taxes, duties and cess by whatever name called other than GST. But here while doing the value, we need to include GST and exclude exempted supplies. Take out exempted supplies, include the GST also while determining. However, in case of job work and handicrafts, it is always required. It has two parts. Part A comprises of GST details, goods details, etc. Part B comprises of transport details. Then see the next one. What is the validity of e-way bill? Once the e-way bill is generated, it will have a validity depending upon the distance travelled. The validity will be 1 day for every 200 kilometers or part thereof. For example, Chennai to Bengaluru, it is 364 kilometers. Now, what is the validity of the e-way bill? 1 day for every 200 kilometers or part thereof. Means, first 200 kilometers 1 day, remaining 200 kilometers or part thereof it will be 1 day. So, the validity will be 2 days. So if it is other than over-dimensional cargo or multi-mode transportation, 1 day for every 200 kilometers or part thereof. What if it is a over-dimensional cargo? What is over-dimensional cargo, sir? So the tail of the cargo will be very big. So like this. These are the examples of over-dimensional cargo, wherein it will take lot of time for this to reach the destination. That's why they gave a higher validity period. What is that? 1 day for every 20 kilometers or part thereof. For example, the same 364 kilometers. So 364 divided by 20, if you see it is 18.2 part thereof. So 19 days will be taken as a validity, because basically these vehicles morning times it will not go. Fully they will park it in the highway roadside, and night times only it will, because one turning if it is to take 4 hours it will take for it to make a turning, because the vehicle is so big, and that's why morning times they will cause a heavy congestion in the traffic. So night times only they travel, so they got a higher validity. Not only these people but also MMT, multi-mode transportation, where they are transporting by ship. What is multi-mode transportation means? Up to some distance by road, thereafter by waterways, again by roadways, like that. That is called as multi-mode transportation. The moment it touches water, speed and all, we cannot travel like a regular road. Sometimes because of the weather conditions, we may not be able to transport the goods. That's the reason why they have given a higher validity. Clear pa? So tell me, what is the validity of e-way bill? Over-dimensional cargo or multi-mode transportation involving ship. 1 day for every 20 kilometers or part thereof. If it is others, 1 day for every 200 kilometers or part thereof. And validity should always be counted from the midnight of the day in which generated to the midnight of the next day as the 1 day. For example, today morning 8 o'clock e-way bill generated. Validity will be counted from today midnight to tomorrow midnight as 1 day. And suppose if the e-way bill is generated now, okay, then it will be counted from today midnight to tomorrow's midnight, same. And if the e-way bill is generated night 11 p.m, then also same. Throughout the day, any time e-way bill generated, that day midnight to next day midnight, which means e-way bill always expires by midnight. Always expires by midnight, because of midnight to midnight only not will be counted. It will expire by midnight. Can it be extended? Yes. The e-way bill can be extended within 8 hours from the time of its expiry. See this illustration. Suppose an e-way bill is generated at 0.01 hours for 240 kilometers on March 8th, where the goods are transported by truck. The validity will be 2 days. Why 2 days? 240 kilometers. 240 kilometers means part thereof. Then the first day would end on midnight of March 9. So March 8 generated means March 8 midnight to March 9 midnight. Second day will be March 10 midnight. You understood? Suppose if the e-way bill is generated for 140 kilometers, where the goods are transported by over-dimensional cargo, then what will be the validity? 7 days. How? 140 divided by 20. 7 days will be counted as the validity. Then next, some FAQs on e-way bill. When e-way bill is not required. So this is important because in MCQs they will be asking in which of the following cases e-way bill is required, in which of the following cases e-way bill is not required, like that options they will be giving. So remember this, when e-way bill is not required. Number 1, non-motorized vehicle. What is non-motorized vehicle? Bullock cart, horse cart, etc. Definitely we cannot travel longer distance now on this. So non-motorized vehicle. Then goods are moved under the control of customs. See this, port, airport, land custom station, inland container depot, container freight station and customs warehouse. These are the establishments which are under the control of customs. What are the various establishments under the control of customs? Port, airport, land custom station, inland container depot, container freight station and customs warehouse. All these are under whose control? Customs control. Between these places, if the goods are moving that do not require e-way bill, from the customs, importer's place they are taking whether e-way bill is required. Yes. between the customs establishment, port, airport, etc., that do not require e-way bill. Then movement of goods by Ministry of Defence. Defence goods also e-way bill not required. Why? If defence goods e-way bill is generated, we will know which vehicle, what goods they are transporting, and we can stop that vehicle, steal those weapons. You understood? Then empty cargo containers are being transported. That is, there is nothing inside the container, just the container. Consignor transporting goods to or from between a place of business and a weighbridge, and a weighment of distance 20 kilometers. What is weighbridge means? Usually lorry and all, they will weigh. First they will go to the weighbridge, they will see what is the weight of the lorry, then they will load the goods in the lorry, then again the lorry will go to the weighbridge and they will see what is the weight of the lorry with goods. Weight of the lorry with goods minus weight of the lorry without goods, that will be taken as the weight of the goods. So for that purpose, the lorry is going to the weighbridge. And where is the weighbridge located? Within 20 kilometers. They are telling e-way bill not required. Then goods being transported by rail where the goods belong to government. What is the difference between this point and the defense point? Defense, any mode, e-way bill not required. But government goods through railways, e-way bill not required, because railways is under the control of government only. So e-way bill not required. Then goods specified as exempt from e-way bill by the respective states. So some states and union territories have given exemption with respect to e-way bill, that also will prevail. Example, Tamil Nadu has given exemption with respect to rice. Movement of rice do not require e-way bill. So that will also be applicable. Then central government has given some specified goods. These are those specified goods. What are they? LPG for household and non-domestic exempted category customers. Usually in LPG cylinders there are two colors, red color and blue color. You tell me which require e-way bill. Blue color require e-way bill. The red color will come under household or non-domestic category, that do not require e-way bill. But sir, first of all, LPG will come under taxable. Yes, LPG will come under taxable because natural gas is only covered under petroleum product. LPG is different. Natural gas is CNG. Okay, CNG is different, LPG is different. At our home we use LPG, that is covered under GST. Next time gas bill you see, you will understand there is GST on the gas bill. Then kerosene oil, whether GST applicable? Yes. In the 5 petroleum products, kerosene oil is not there. What are the 5 petroleum products? Crude oil, petrol, diesel, aviation turbine fuel, and natural gas. So kerosene oil sold under public distribution system. Public distribution system means what? Ration shops. So that also do not require e-way bill. Postal baggage. So postal articles we will be sending from one location to another location, not required. Then see this. Natural or cultured pearls, jewelry, goldsmith or silversmith wares do not require e-way bill. Why? Then it will become money heist season 6. You understood? Gold, which vehicle they are transporting, if they submit e-way bill, now we will quit entirely. I will become professor and you will become, my accomplice, and we can loot that vehicle and settle lifetime settlement. One lorry full of gold. Think of how much money it will be. Agreed or not? That's why gold jewelry and all, when they are transporting, e-way bill not required, other than imitation jewelry. Imitation jewelry no one will steal. It's okay, you report. Imitation jewelry, no one will be bothered about it. Okay, that much risk we will not take. When we take risk, it should be having good worth. Then used personal and household effects, that is, we are relocating the house from one location to another location, that do not require e-way bill. Then whether e-way bill is required if movement of goods is not for supply. Yes, I told you, once the product is taxable, whether it is under supply or without supply, e-way bill is always required. Whether that 50,000 limit is for taxable goods or exempted goods? Taxable goods. What if in a document there is both taxable and exempted? Take out exempted, see only the taxable, and if that exceeds 50,000, then e-way bill required. While computing invoice value, whether GST to be included or to be excluded? To be included. Who will generate e-way bill? Already I told you, registered person. If the supplier is registered supplier, If the supplier is unregistered and the recipient is registered recipient, otherwise it will be transporter. Whether transporter is required to generate e-waybill if supplier has not generated because the value does not exceed 50,000. Carefully listen. There are 10 consignors. Each consignment value is 10,000. 10 consignors did not generate e-waybill because the consignment value is only 10,000. But all these 10 consignments I am transporting in my lorry. What is the cumulative value? 1 lakh, more than 50,000. So for each consignment, I need to generate a e-waybill. Is it clear? Individually, e-waybill not generated by the supplier because the value does not exceed 50,000. But aggregate of all documents put together, it exceeds 50,000. So e-waybill is generated by the transporter, and that is EWB1. And consolidating all those consignment, one single e-waybill will be made, that is EWB2, consolidated e-waybill. Other points, in case of bill to ship to transaction, how many supplies are there? Bill to ship to transaction, how many supplies are there? 2 supplies. But there is only one movement, correct? Due to that reason, e-waybill is only one e-waybill. Even though there are 2 supplies, but the movement is only 1. So in case of bill to ship to transactions, one e-waybill is sufficient. Then multi-vehicle updation is possible in e-waybill. What is that? Up to some distance, a vehicle will be carrying the goods. There is a breakdown of the lorry. When the lorry is having some issue, now we will send another lorry, in that the goods will be loaded and taken. Now again a new e-waybill is required? No. In the same e-waybill itself, vehicle number we can change. Okay. And in case of e-invoice, wherever we are giving invoice, e-invoice, physical copy of the invoice and physical copy of the documents not required, because e-invoice means automatically the QR code will be there. If that QR code is made available to the officer, that will be sufficient. Then blocking of e-waybill. See this per mark it as important for short note, blocking of e-waybill. Already I told you 2 points where our e-waybill will be blocked. Whenever e-waybill will be blocked, e-waybill. GSTR1 not filed for 2 consecutive tax periods. Same way GSTR1 or 3B. GSTR 3B not filed for 2 consecutive tax periods. For composition scheme, what is the return? CMP8. CMP8 not filed for 2 consecutive periods. Tell me what are the 3 returns? GSTR 1, GSTR 3B and CMP8. CMP8 means composition scheme. CMP8, GSTR 1, GSTR 3B for 2 consecutive periods. Or if my registration is suspended because my liability in GSTR 1 greater than 3B or wrong availment of ITC, I told you na, 88C, 88D, or non-payment of 1% of liability through cash ledger. In all these cases, for my outward supplies, e-waybill will be blocked. But for my inward supplies, can the e-waybill be generated? Yes. The restriction is only for my outward supplies. I cannot generate, my recipient cannot generate, transporter also cannot generate. You understood? The moment you open the e-waybill and put my GSTIN, the e-waybill portal will spit on your face. Idiot, you cannot generate e-waybill like that. Okay? Because the moment the supplier has not filed the returns, that supplier name if you put itself, e-waybill will be blocked. You cannot be generating the e-waybill. You understood? Neither supplier, nor recipient, nor the transporter. No person, including consignor, consignee, transporter or e-commerce operator or a courier agency, shall be allowed to furnish the information in part A in respect of which movement here? Outward movement. Then see the next page. So I told you that in e-waybill there will be 2 parts, part A and part B. Part A, registered person causing movement of goods, that we know if supplier is registered, that supplier is unregistered, and recipient is registered, that's recipient. If both are unregistered, the transporter. Sir, who will enter part B details? Simple. If it is my vehicle, I will enter. If it is my own vehicle, I will enter. If it is a third party vehicle, who is the third party? Transporter. They will enter. What if it is A vehicle without vehicle number. What is a vehicle without vehicle number? Train will not have a number. Then aircraft will not have a number. Ship will not have a number. Sir, train will have a number now, sir. That is route number, not train number. Route. A train while going from this way to that way will have one number. That way to this way will have one number. You understood? So that is not the train number for the purpose of vehicle number. You understood? Moreover, a train engine, the engine will change by the time we go from this journey to that journey. They will change 2-3 engines in the junction path. The same engine will not be pulling the train. So therefore, vehicle number is difficult for a train. Ship also difficult, aircraft also difficult. That's why they will be giving a document. For ship, they will give bill of lading. For air, they will be giving airway bill. And for train, they will be giving railway receipt. That document number we need to mention. Document reference number. RR means railway receipt. AWB means airway bill. BOL means bill of lading. Lading, LADING. So whenever there is a movement of goods under supply, what is the name of the document? Movement of goods under supply. Taxable goods means what is the document? Tax invoice plus e-way bill. Exempted goods, bill of supply, e-way bill not required. Without supply taxable goods, whether e-way bill is required? Yes, along with delivery challan. If it is exempted goods, just the delivery challan, e-way bill not required. But e-way bill, handicrafts and goods sent on job work, even if value does not exceed 50. Last point, e-way bill can be cancelled within 24 hours of its generation if the conveyance is not verified by the proper officer. What does it mean? Listen, I am sending the goods to the customer in a lorry and the vehicle reached the destination. I am contacting the driver. Whether any officer checked the vehicle? No, sir. Then immediately I will cancel the e-way bill within 24 hours and I will call the customer and say, okay, I cancel the e-way bill, invoice also will be cancelled. You hand over the cash to the driver, he will bring the cash. So completely the transaction is escaped from GST, yes or no? Are you understanding the loophole that is involved? But 24 hours is the only time that is possible. But in the 24 hours also, if the conveyance is verified by proper officer, how the conveyance will be verified by proper officer? That's where today, to avoid this loophole only, they are installing the cameras in the highways. These cameras will be connected to the e-Vahan database. The cameras will capture the vehicle number and that report will be given to the GST portal. Now when you cancel the e-way bill, it will tell, boss, we already verified the vehicle during the highway, so you cannot cancel the e-way bill. You understood or not? So basically, if the conveyance is not verified by proper officer, but usually they will verify easily. So that's where they are installing the cameras, etc. Even in toll gates also, the data will be captured. So therefore, this loophole is practically not possible in today's context. Okay. That's it. We completed e-way bill. Segment 9, registration under GST. In this registration under GST, total we are having 9 sections. Section 22, 23, 24 talks about legality of the registration. When a person is required to get registered is given in 22. When a person is exempted from registration or not required to get registration, is given in 23. When a person is compulsorily required to get registered is given in 24. So these 3 sections are very important. If at all you get a question on registration, that will be from these 3 sections only. That much important it will be. So 22, 23, 24. And before 22, all the sections we completed. Before 22, so 21 we don't have, 20 we don't have, 19 we don't have, 18 we discussed. Input tax credit in special cases. 17, apportionment of credit, blocked credits. 16, conditions for availment of ITC. 15, value of supply. 14, we don't have. 13, time of supply in case of services. 12, time of supply in case of goods. 11 exemptions, 10 composition scheme not yet discussed, 9 liability to pay tax, correct, RCM, etc. Then 8 composite supply, mixed supply, 7 supply that we have seen. 22 to 30 is given in this chapter. After 30 also we have seen few sections. 31, so due date of tax invoice. 32, being an unregistered person you should not collect tax. 33, tax component should be shown separately in invoice. 34, debit notes and credit notes. 35, what are the accounts and records which are required to be maintained. 36, what is the period for which we need to maintain accounts and records. Okay, so this block 22 to 30. Okay, so of course I will be able to tell this because this is the only subject I learn. You understood? So I teach only this subject, so I will be able to remember, and I don't expect you also to do the same thing. But for the sake of exam, till the time you go for the exam, you try to by heart this. What is the section number and what is the provision? Okay, what is the heading? So that in exam, wherever possible, you create the opportunity to write the section numbers in the answer sheet. So that what will happen? Others will not do this. When your paper stands out of the crowd, definitely you can expect good marks. That's why many times I will be suggesting to the students, repeatedly, if you are not clearing exam, even though you prepared well, even though you are writing well, if you are not writing exam in some particular areas, so please change your exam center. So I used to advise, and it will work also. Because in Chennai when you are writing, all the students who are writing are equally prepared. Whereas when you go and write somewhere in Velur, somewhere in Tiruchi, Madurai, these places and all, they will not prepare that much. There when you are going and writing, so you will stand out. Your answer sheet will be like diamond between the coal. You understood or not? So default they will be giving. If at all there is any option of change of the exam center, option will be there, na? Over, no yaar, it will be there. Correction window only, over. Then we can't do anything, it's okay. But you tell this to others also. This is actually a cheat code. Tell this to others also, and final exam when you are coming also make use of this. Trust me, it will work. If you change the exam center, it will happen. Because I experienced this in, like every attempt, every exam when I wrote, I will not be writing in cities. I will be going to some other place. I will go and write in Velur. Velur, because that's a small town. Not many students will be writing. Even if they write also, so their local preparation, they are Desi boys. We are international, okay? So therefore, when we write there, our answer sheet will stand out. It worked for me in my CMA Inter. I got All India first rank. Okay. So therefore, had I wrote in Chennai, I would not have got that. Okay. So as I wrote there, I got. And even many cases, in my CA final, one subject SFM is there, financial management, like that. I got 92 marks. 92 marks, that was the highest in my CA final. So all other papers it was 70s, 80s, like that. And that paper I got 92, okay, highest for me. Oh, 70, 80. That's, and okay. So therefore, and this worked for me. So I told this to many other students also. They said, yes sir, you are right. 3 attempts I did not clear when I wrote in Chennai. And I listened to you and I went in Kanchipuram and I wrote. Kanchipuram they wrote and they cleared that attempt. That's why, it will be possible, make use of it. So why I told you this point? Because your answer sheet, always keep this in mind. Your answer sheet should be unique. And what others are not doing, you should be able to write that. So think out of the box. So it's not about how much you learnt. It's about how well you present. That is important. It's not at all about how much you are learning. It's no use, because in that bloody 3 hours, whatever you write, for that only you will be given marks. They will not see how many hours you prepared, how many days you prepared, so night and all whether you prepared. They really don't know anything about this. Your performance is based on the answer sheet. So by seeing the answer sheet, so they will be able to easily understand yourself. So due to that reason, think out of the box, how well we can present. Not only tax paper, every paper. So whenever you are sitting and you don't feel like reading, just close your eyes and think of how better we can present, how we can write this, how we can frame this sentence. You understood? Auditing, you studied something. These are all the key points. How we can better frame that sentence, and then only automatically you will be getting good marks. Example, in accounts writing accounting standard number, and in auditing writing that SA numbers, and in income tax and indirect tax trying to quoting the section numbers wherever possible. That too, some case laws will be there in capital gains related to this insurance and all. So one case is there like that. Some landmark cases, you know that this is an important judgment. So that trying to write the judgment wherever it is possible. Law also trying to remembering the few key section numbers. So what happens like this, when you start writing the answer sheet, your answer sheet will be out of the others. So automatically the evaluator will try to give more marks only, thinking that you are okay, you are a good student, you will be studying properly like that. So they will give. Reality we only know, but they will give marks, okay. So that's why try to remember the section numbers. That's my humble request to you. Take one day, by heart that, and revise like this concept. Example, cancellation of registration, section 29. Section 30 is what? Revocation of cancellation, like that. Sometimes heading, what is the section number? Sometimes what is the section number? What is the heading? Like that reverse also you try to remember, so that what happens is that you will become a pro in writing that section numbers in the answer sheet. Done? Now coming back to this, what are the first three section numbers that you need to remember? Section 22, when a person is required to get registered. 23, when a person is not required to get registered. 24, compulsory registration. Then 25, procedure for registration. So first three related to legality. Next three related to procedural. 25, procedure for registration. 26, deemed registration. 27, special provision for CTP and NRTP. CTP is casual taxable person. NRTP is non-resident taxable person. Then next three sections are related to special cases. Section 28 talks about amendment in registration. 29, that is initially you would have furnished some details. If there is any change in those details, you need to amend the registration. 29, cancellation of registration. Sometimes your registration will get cancelled, or you will make application for cancellation of registration. 30, revocation. Revocation means what? Withdrawal of cancellation. So proper officer has cancelled your registration. Now you request the officer to restore the cancellation so that you will continue in the registration. That is known as revocation. Revocation means withdrawal of the cancellation order. So these are the sections that we have. Now we will start with section 22. Mostly practical questions will be on these three sections, 22, 23 and 24. 22 says, when a person is required to get registered, as and when aggregate turnover of a person in any financial year exceeds the threshold limit, then that person is required to get registered. What is the meaning of aggregate turnover? So two things you need to know. First, you need to know what is the aggregate turnover. Second, what is the meaning of threshold limit? What is the aggregate turnover? I told you long back. So all four supplies will come in aggregate turnover. What are the four supplies? Taxable supplies, exempted supplies, non-taxable supplies, zero rated supplies. Everything will come in aggregate turnover. But two things are excluded from aggregate turnover. What is that? Inward supplies on which you are liable to pay GST under RCM will not come in aggregate turnover, because inward supply means what? That is your purchase or that is your sale. Purchase will not come. Even taxes also should not come. And then I told you we need to compute aggregate turnover on state-wise or all India basis, all India basis. So this is the meaning of aggregate turnover, taxable exempted exports interstate of persons having same permanent account number computed on all India basis. It excludes taxes and even inward supply on which tax is payable under RCM. Now the second part, what is the threshold limit? Now you understood what is aggregate turnover. What is the threshold limit? These are some monetary limits which you need to know. First, you check in the question whether you are doing business in a single state or you are doing business in the multiple states. If you are doing business only in single state, check whether that single state is in MMTN. What is MMTN? Manipur, Mizoram, Tripura, Nagaland. Once again, what is MMTN? Manipur, Mizoram, Tripura, Nagaland. Then what will be the limit? 10 lakhs is the limit. Suppose if you are doing business in one state and that one state is in U stamp. U stamp. What is U stamp? U for Uttar Pradesh, Uttarakhand. Uttarakhand. S for Sikkim. Then T, Telangana. A, not Andhra Pradesh, Arunachal Pradesh. M, Meghalaya. P, Puducherry, Pondicherry. These 6 places, it will be 20 lakhs. Okay. So first 4 is MMTN. Special category states is MMTN. Manipur, Mizoram, Tripura, Nagaland. What is the limit? 10 lakhs. Then in U stamp states, what is the limit? 20 lakhs. What are the U stamp states? Uttarakhand, Sikkim, Telangana, Arunachal Pradesh, Meghalaya, Pondicherry or Puducherry. So 20 lakhs. In all other states, the applicable limit will be 40 lakhs if you are exclusively engaged in supply of goods. Otherwise, the limit will be, otherwise means what? Not exclusively in goods. Not exclusively in goods means what? Services or both goods and services. The limit will be 20 lakhs. Understood, pa? Now, in Tamil Nadu, if you are exclusively engaged in supply of goods, limit is Gujarat, Telangana. You understood, okay? So if you are exclusively engaged in supply of goods, so other than U stamp states, other than MMTN, it will be 40 lakhs. Then there is one special point related to this. You should not be engaged in supply of pan masala, tobacco and tobacco products, ice cream and edible ice, bricks and roofing tiles. If you are engaged in supply of these goods, then 40 lakhs limit will not be applicable. Generally, supply of goods, 40 lakhs limit is applicable, but you should not be engaged in supply of these goods. What are these goods? Ice cream, edible ice. Related to tobacco, pan masala, tobacco, tobacco products, okay? And then related to construction, bricks and roofing tiles. 3 lists you remember. Related to ice cream, edible ice. Related to tobacco products, pan masala, tobacco and tobacco products. Related to construction sector, bricks and roofing tiles. If you are engaged in these goods, the limit will not be 40 lakhs, even though you are exclusively engaged in supply of goods and even though you are located in other states, okay? For example, you are in Tamil Nadu and you are having a supermarket. So you are engaged only in sale of goods. In that supermarket, there is one refrigerator where you keep ice cream and you sell the ice cream. Usually if you see lot of shops will have a refrigerator. At least to keep the milk, they will keep a refrigerator. And in that refrigerator, they will be selling beverages. They will also sell ice cream for the kids and all. Now, in that case, as a supermarket, you are engaged in sale of ice cream. Will you get 40 lakhs limit or not? Yes, you will get 40 lakhs limit because you are not exclusively engaged in supply of ice cream. So then to whom, sir, 40 lakhs limit not applicable? Ibacco ice cream shop who is exclusively engaged in sale of ice cream, they will not be getting 40 lakhs limit. Pan shop which will engaged only in sale of pan masala, tobacco products, they will not get. Suppose if a normal provision store is there which will sell chocolates, biscuits, chips and also cigarettes, so can they go for 40 lakhs? Yes. So if you are exclusively engaged in supply of ice cream, edible ice, pan masala, tobacco products, bricks and roofing tiles, then only 40 lakhs limit not applicable. Is it clear here? Then, So first 3 points, tell me what is the threshold limit, first 3 points, and when the first 3 points will be applicable if you are doing business only in one state. What is that? MMTN 10 lakhs, use stamp 20 lakhs, other states only goods other than ice cream, edible ice, pan masala, tobacco products, bricks and roofing tiles. Other cases 20 lakhs. What is full form of MMTN? Manipur, Mizoram, Tripura, Nagaland. What is the full form of use stamp? Telangana, Arunachal Pradesh, Meghalaya, Puducherry. Now see the second branch. If you are doing business in multiple states, and in that one state is a special category state and taxable supplies are made from that state. You are doing business in multiple states. In these multiple states, one state is a special category state and taxable supplies are made from that state. So two conditions should be satisfied. First, out of the given states, one state is a special category state. For example, you are doing business in Tamil Nadu, Telangana, Andhra Pradesh, Nagaland. Out of these four, one state is a special category state, Nagaland, and taxable supplies are made from that state, then the limit will be 10 lakhs. Suppose you are doing business in multiple states, and in that multiple states, none of the state is in MMTN use stamp. Not even one state in MMTN use stamp. Example, Tamil Nadu, Andhra Pradesh, Kerala. These three states will not come in MMTN use stamp. Correct? And if you are exclusively engaged in supply of goods, then the limit will be 40 lakhs. Whereas other cases, balancing figure, the limit will be 20 lakhs. Got it? Understood? So tell me what are the 3 points? Come on. Out of the given state, one state is special category state and taxable supplies are made from that state. Then the limit is none of the states is in MMTN use stamp and exclusively engaged in supply of goods. Balancing figure, any other case, 20 lakhs. But in this exclusively engaged in supply of goods, you should not be exclusively engaged in supply of ice cream, edible ice, pan masala, tobacco products, bricks and roofing tiles. Understood, pa? Now, see some important points related to this. You need to compute aggregate turnover on a all India basis and not state wise. So don't do state wise, because aggregate turnover we should see all the states together. And the limit of 40 lakhs is applicable only in case of exclusive supply of goods. If a person is engaged in supply of services or both supply of goods and services, so 40 lakhs will not come, only 20 lakhs or 10 lakhs will be applicable. If supplies are made from multiple states and if taxable supplies are made from special category states only, then 10 lakhs limit is applicable. If supplies are made from multiple states and in those states if use stamp is also there, then 20 lakhs only applicable. The limit of 40 lakhs is not applicable in the following cases. When? Suppose if you voluntarily get registered, 40 lakhs not applicable. If you are compulsorily required to get registered also, you should register. Don't see your 40 lakhs limit. And if you are engaged in supply of these goods, whether as a manufacturer or as a trader. Sir, whether you are manufacturing and supplying these goods or as a trader supplying these goods, you will not get 40 lakhs limit. Okay. Now, based on this, we have some illustrations. You see that. Illustration number 1. Mr. X is exclusively engaged in supply of exempted goods in Sikkim. Exempted goods in Sikkim. For Sikkim, what is the limit? Only one state. Sikkim means only one state you are doing business. And that Sikkim is in MMTN? No, but it is in use stamp. So the applicable limit will be, but in this case they are not required to register. Why they are not required to register? Because they are exclusively engaged in exempted supplies. Then next part, illustration 2. Mr. X is engaged in making supply of goods in Tamil Nadu, Andhra Pradesh and Meghalaya. Taxable value of the goods, exempted value of the goods. So you are doing business in more than one state. Now, you please do the total of the aggregate turnover. What is your aggregate turnover? 5 plus 3, 8 plus 8, 16 plus 2, 18 plus 4, 20, 2 lakhs. That is your aggregate turnover. Now, what is the applicable threshold limit? Now, you are doing business in more than one state. check whether one of the state is in MMTN. No. MM means Manipur, Mizoram, not Meghalaya. So one of the state is not in MMTN. Then, so 10 lakhs limit will not be applicable. So that we should write. What is that? In exam we should write as one of the state is not in Manipur, Mizoram, Tripura, Nagaland. Therefore, 10 lakhs threshold limit is not applicable. Okay. Now check the 40 lakhs limit. Whether 40 lakhs limit will be applicable. Why? None of the state should be in MMTN U stamp. So one state is in U stamp, correct? Meghalaya. So therefore 40 lakhs limit not applicable. That point also you should write. As one of the state is in U stamp, MMTN U stamp. That full list you should write. Okay. So therefore 40 lakhs limit is not applicable. Therefore the applicable threshold limit is balancing figure 20 lakhs. Now, this you are understood how you arrived. First you need to arrive at the aggregate turnover, then you arrive at the applicable threshold limit. Now answer. Whether aggregate turnover exceed threshold limit or does not exceed threshold limit? Exceed threshold limit, and Mr. X is required to get registered. Now wait, answer is not complete. Mr. X is required to get registered. Now where and all they will register? Each state where they make taxable supplies. Are they making taxable supplies in Tamil Nadu? Yes. So they will register in Tamil Nadu. Are they making taxable supplies in Andhra Pradesh? Yes. So they will register in Andhra Pradesh. Are they making taxable supplies in Meghalaya? No. So they will not register in Meghalaya. Understood the clarity? So first what you need to write? Aggregate turnover. See the answer. First you need to write the aggregate turnover. What is the aggregate turnover? 22 lakhs. Then you need to write applicable threshold limit 20 lakhs. Why applicable threshold limit is 20 lakhs? First, why 10 lakhs not applicable? One of the state is not in MMTN. Then, as none of the state should be in MMTN U stamp, but here one of the state is in MMTN U stamp, 40 lakhs limit is not applicable. So the balancing figure is 20 lakhs. First, the person should be liable to get registered. After that, we should register them in each state from where they make taxable supplies. So as the aggregate turnover exceeds threshold limit, Mr. X is required to get registered. And where and all they should register? In each state from where they make taxable supplies. That is in Tamil Nadu and Andhra Pradesh, but not in Meghalaya. But when will they register in Meghalaya? As and when they start making taxable supplies in Meghalaya, they will register in Meghalaya. Then look into illustration 3. Madhav Enterprises, a sole proprietorship firm, opened a shopping complex dealing in supply of goods at multiple locations, that is Himachal Pradesh, Uttarakhand and Tripura in the month of June. It has furnished the following details relating to the supply made at such multiple locations for the month of June. Intra-state supply of taxable goods, Himachal Pradesh 22 lakh 50 and Tripura 7 lakhs. Like that we have some details. Now, with the help of the above mentioned information, answer the following questions giving reasons. Number 1, determine whether Mahadev Enterprises is liable to be registered under GST law and what is the threshold limit of taking registration in this case. First, are they doing business in single state or multiple states? Multiple states. Whether one of the state is in MMTN, what is that? Tripura. And taxable supplies are made from that state. Check the question. Yes. Therefore, the applicable threshold limit will be 10 lakhs and their aggregate turnover is more than 10 lakhs. In Himachal Pradesh itself 22 lakhs. So, aggregate turnover more than 10 lakhs. Therefore, Mahadev Enterprises is liable to get registered. And where they should register? Himachal Pradesh and Tripura, but not in Uttarakhand. For computing aggregate turnover, we will consider Uttarakhand, but not for registration. Why? Because they are not making taxable supplies. Clear? Then, second part in this question. Explain with reasons whether your answer in 1 will change in the following independent cases. All are independent cases. Number 1. If Mahadev Enterprises is dealing in taxable supply of goods only from Himachal Pradesh. So, in this, we don't have Uttarakhand and Tripura data. This data is not there. Okay, this data is not there. Now you have only Himachal Pradesh data. Based on this, you interpret. So they are doing business in multiple states or single state? Single state. Is that single state in MMTN? Is that single state in U-stamp? Other states. So the applicable limit will be, are they exclusively engaged in goods? Yes. So the applicable limit will be 40 lakhs. But what is their aggregate turnover? 22 lakh 50. Therefore, they are not required to get registered. Got it? Then next, second, if Mahadev Enterprises is dealing in taxable supply of goods and services only from Himachal Pradesh. Again, only Himachal Pradesh. We don't have this data, and they are making both goods and services. So 40 lakhs limit will not be applicable. What will be the limit? 20 lakhs, and their turnover is more than 20 lakhs. Therefore, they are required to get registered. Then third part of this question. If Mahadev Enterprise is dealing in taxable supply of goods only from Himachal Pradesh and also has affected interstate supply of taxable goods amounting to 4 lakhs. Remember, a person who is making interstate supply of goods is compulsorily required to get registered. So don't see their threshold limit, always they are required to get registered. So that is the answer. Then fourth question, you see, illustration 4. Illustration 4, A Limited is doing business in Tamil Nadu, Kerala and Nagaland. What is their aggregate turnover? Calculate. 4 plus 2, 6 plus 3 plus 1 plus 2. 12 lakhs. 12 lakhs is their aggregate turnover. And what is their applicable threshold limit? First, whether one of the state is in MMTN? Yes. And taxable supplies are made from that state? No. So 10 lakhs will not come. Are you understanding? Why 10 lakhs will not come? Yes, they are doing business in special category state, Nagaland, but they are not making taxable supplies there. That's why 10 lakhs will not come. Okay, sir. And whether 40 lakhs limit is applicable? No. For 40 lakhs limit, none of the states should be in MMTN U-stamp. But one state is in MMTN U-stamp, Nagaland. So therefore, 40 lakhs limit not applicable. So what is the threshold limit? Balancing figure, 20 lakhs. But what is their applicable what is their aggregate turnover? 12 lakhs. What is their applicable threshold limit? 20 lakhs. So therefore, they are not at all required to get registered. So like this, we need to determine as to when they are required to get registered. Look into the next page. An overview of registration provisions. In that registration, mandatory registration. When a person is mandatorily required to get registered, either based on aggregate turnover or irrespective of aggregate turnover. So far what we have seen is based on aggregate turnover. Clear pa? Now we are going to discuss irrespective of aggregate turnover when the person is required to get registered. In that we have section 24. Section 24, compulsory registration in certain cases. That compulsory registration in certain cases, you remember with a keyword I creations. With a keyword I creations, you remember, in the case of this I creations, so you are not compulsorily required to get registered or compulsorily required to get registered? Compulsorily required to get registered. Now, what is this I? I for interstate supply of what? Goods or services are? Goods. Only interstate supply of goods other than handicrafts. So in case of interstate supply of handicrafts, there is no compulsory registration. So you check there. You check there. So interstate supply of goods other than handicrafts. So if I am making interstate supply of handicrafts, whether compulsory registration is applicable? No. If I am making interstate supply of services, whether compulsory registration is applicable? No. Then C, what is this C? Casual taxable person. Casual taxable person means who? A person who is coming from another state to this state and is not having any physical place of business in this state is called as a casual taxable person. You got it? So how much ever you may love Dhoni, but Dhoni is a casual taxable person in Tamil Nadu. Why is a casual taxable person in Tamil Nadu? Because he is not having any fixed place of business in Tamil Nadu. He enters into Tamil Nadu to make supply of goods or services. That is, he will come to Tamil Nadu to play the CSK match, na? So he will be coming under casual taxable person in Tamil Nadu. Same way, lot of actors who come and act in Tamil movies, but they will not have any place of business in Tamil Nadu. So they are also coming under casual taxable person. You understood? So because what happens nowadays, in every movie they will roping in actor from the other industry, na, so that they will get a entry in that particular industry. Otherwise we will not, because if every actor is not known to the other language, they will not be watching. So of course some exceptions are there, but generally we will do. That's what Jailer. So Jailer movie, they brought everyone from North India, someone, Karnataka, someone, and from Kerala, someone, like that. Why? Because then only they will get the acceptance in the other state, like that. So these people are not called as, permanent residents in this state. So they will be coming under casual taxable person. So whenever a person comes into a state and is not having any physical place of business in that state, even though their aggregate turnover does not exceed threshold limit, they need to compulsorily register in that state. But this is not applicable for handicrafts. See there, casual taxable person other than handicrafts. Sir, casual taxable person for both goods and services or only goods? Both goods and services, but other than handicrafts. Then what is R? R for recipient liable to pay GST under RCM. Then E, e-commerce operator. Which e-commerce operator? 95 as well as 52. That is, those who are liable to pay GST, HATE, and 52, those who are liable to deduct TCS. And A for agent making supply on behalf of principal. Sir, agent making supply on behalf of principal means what? Invoice raised by agent in his name, or invoice is in the name of the agent. Then T for TDS deductor. TCS already covered, e-commerce operator. So TDS deductor is also compulsorily required to get registered. Who is the TDS deductor? Notified recipient, government, authority greater than 51% by government, public sector undertakings, they. Then I for input service distributor. Who is an input service distributor? I told you, there is a head office which will take the credit and distribute the credit to the branch officers, so that head office should take the credit. Then O for OIDR supplier. Which OIDR supplier? Located outside India and making supply to non-taxable online recipient in India. Then N, NRTP. CTP also compulsorily required to register. NRTP also compulsorily required to get registered. NRTP means non-resident taxable person. Who is that? Coming from outside India to India and is not having any physical place of business in India. And S for supplier of goods through e-commerce operator. But there we have a relaxation. What is that? Sir, if they are making only intra-state supplies, they are not compulsorily required to get registered. So that's an amendment. Understood? So tell me this I creations once again. Don't see your book. I for interstate supply of goods other than handicraft. Fully you tell. Okay. What is I? Interstate supply of goods other than handicraft. C. Good. Casual taxable person other than handicrafts. R. Recipient paying GST under RCM. Then E. Paying GST under 95 or deducting TCS under 52. A. Agent making supply on behalf of principal. T. TDS deductor. Very good. I. Input service distributor. O. Where located? To whom they are making supply? Non-taxable online recipient in India. N. Non-resident taxable person. Yes. Supplier of goods through e-commerce operator other than making interstate supply. Other than making interstate supply. If they are making only intrastate supply, not required. So other than notified supplier, who is that notified supplier? Who is making only intrastate supplies. Then under 22 also there are some people who are compulsorily required to get registered. But what is the difference between 22 compulsory registration versus 24 compulsory registration? In 22 compulsory registration, they need to register, and if their turnover falls below threshold limit, they can make application for cancellation of registration. But in case of 24, they are compulsorily required to get registered. Even if their turnover falls below threshold limit, they cannot make application for cancellation of registration. Is it clear? So you write down below, note, in case of compulsory registration, so here you have some space now, there you write down, note, in case of compulsory registration under section 22, in case of compulsory registration under section 22, comma, such person can make application for, comma, such person can make application for cancellation of registration, such person can make application for cancellation of registration if their turnover falls below threshold limit. Can make application for cancellation of registration if their turnover falls below threshold limit. Full stop. However, in case of compulsory registration, under section 24, however, in case of compulsory registration under section 24, they cannot apply for cancellation of registration. They cannot apply for cancellation of registration even if their turnover falls below threshold limit. Even if their turnover falls below threshold limit. Clear here? Then, what are the cases where as per section 22 they are compulsorily required to get registered? See there. If you are already registered under the existing law, you should also be registered under GST law. But thereafter, if your turnover goes below threshold limit, you make application for cancellation. Then, suppose if you transfer the business, the transferee should definitely get registered, and if the turnover falls below threshold limit, they can make application for cancellation. And in case of amalgamation or merger or demerger, there is one resulting company na. That resulting company is also compulsorily required to get registered, but if that company's turnover does not exceed threshold limit, they can make application for cancellation. So what are the three cases pa? If you are already registered under earlier law, or if there is any transfer of business, or if there is any amalgamation or merger or demerger, the resulting company should be registered. Okay, then this is about section 22 and 24. Now look into section 23. A person is exempted from registration in certain cases. What are those cases? 4 cases per total. If they are exclusively engaged in exempted supplies. Sir, if I am making only exempted supplies, I am not required to get registered. And if I am making only non-taxable supplies, then also I am not required to get registered. Example, fruits and vegetables are exempted. So if a person is selling only fruits and vegetables, they are not required to register. But there are many shops today which will sell fruits and vegetables, and they also sell other products. Lot of provision items also they will be selling. For example, in Chennai, one popular fruits and vegetables seller as a supermarket is that Padamudir, okay, and they will be selling only fruits and vegetables. No, they are also selling soap, paste, etc. So therefore, due to that reason, they will not get the exemption. But if you see in some market and all, there will be vegetable vendors, fruits and vegetable vendors. They will not sell anything, only fruits and vegetables. They are not at all required to get registered because they are making only exempted supplies. Then, if I am making only non-taxable supplies, then also I am not required to get registered. Example, TASMAC. TASMAC, which will be engaged in sale of only divine water, okay, that is, so they will be engaged only in sale of alcoholic liquor for human consumption. Sarak, whether they need to register? No. Suppose if they sell sarak with side dish, whether they need to register? Yes, because they are not making only non-taxable supplies. Then number 3, agriculturist. Agriculturist is not required to get registered. Who is an agriculturist? Who is engaged in sale of cultivation out of land. Who is engaged in sale of cultivation out of land. Means they should not do any processing. Example, I am a groundnut farmer. I get the groundnut. I sell the groundnut. Not required to register. But I also crush the groundnut and make groundnut oil. And I sell groundnut as well as groundnut oil. Should I register? Yes. Because I am not making only sale out of agricultural land. I am also doing some other process. Due to that reason, I will not be coming under agriculturist. You got it? Then, number 4, exclusively making RCM supplies. Means my outward supplies is fully covered under RCM. Example, advocate. Advocate's outward supplies are either exempted or RCM. Na? So, advocate is not at all required to get registered. Because their outward supplies will be either exempted or covered under RCM. So, advocates are not required to get registered. Same way, you take this business facilitator. Business facilitators outward supply is always covered under RCM. So, business facilitators are not at all required to get registered. Understood or not? So, now what are the 4 cases where you are exempted from registration? Exclusively exempted, exclusively non-taxable, agriculturist, and exclusively RCM supplies. Then look into some basic provisions in the same page below. GSTIN is a 15-digit registration number. So whenever you get registration, so you get a GSTIN. What's the full form of GSTIN? GST identification number, which is a 15-digit number. In that 15 digits, the first 2 digits is state code. So this is my GSTIN. So this is my GST number. First 2 digits is the state code. Okay. Even if you know the GST number, you will not be able to get anything. Okay. Password. Tell. I'll tell. So what is the need of it? So you want to know my turnover. For that reason, I am not earning much, pa. Really, pa? Why am I earning much and all? No, I am not that much. I have lot of earnings, crores and crores of earnings in the form of students. But money wise, no. Okay, money wise, no. But you know, I am happy. Really, I am happy. Every morning when I get up, I don't have any problem. All my necessities are taken care. My kids are studying in school. I can afford the school fees. I can eat food daily. And whenever I wanted to go to any place, I can travel. And beyond that, what is required for a person? Not required. So I don't have any mental tension, pressure, etc. and all. But one pressure always will be there, that every time I need to perform well in the class and I should give the best to the students. This is the only pressure for me. Otherwise, I don't have any pressure. For this time also, I had a pressure. What is that? I need to complete the portion to the extent possible so that I should not leave anything. So this pressure will be there. Otherwise, I don't have any kind of problem. So therefore, money is not important. Happiness is important. Will you agree with me? So therefore, not much turnover and all. Lot of people will be there. For them, money earning will be the only pressure. So they will not even sleep happily also. So they want always money. So you will not have peace in your life. So you should decide what you need. Whether you need happiness or you need money. When you need happiness, money will come incidentally. That's what I am telling you. When you go in search of happiness, money is incidental. You understood? I never went behind money. I had only one thing. Happily I should take class. Whatever I learn, I should tell to my students. And I like writing books. So I write book. And I like to do consulting. And I like to search for loopholes. This is my happiness. In this happiness, when I am traveling, incidentally money will come. You understood or not? Where money will go? It will definitely come. So every rupee which is coming to us, so our name will be written on that. So it will come. You don't go behind money. Don't chase behind money. You chase behind your goals and your happiness. Where you have happiness, there you chase. Automatically money will follow you. But when you go behind money, I did that mistake. 6 years in my life, I went behind money in one place called as MT Educare. Okay. So I did not get happiness also. I did not get money also. Okay. Really, 6 years I worked there. And they have closed down, then they have left. You understood? And at that time my focus was only on money earning. Waste. I didn't enjoy my life also. Even I was having enormous pressure. So for the sake of money, I have to do many things over there. So this will not give me. But thereafter I realized, no, I have to be successful in the way in which I live my life. Then money will automatically come. So you also have that in mind. What you like, you do. Don't do anything for the sake of money. You do something, money will automatically come. Today you see a lot of YouTubers. Did they do that for the sake of money? No. They are doing something which they like. Automatically money starts coming. Example, so one guy by name Madan Gauri. So what he do, he will read everything in English in Wikipedia. And he will convert that in Tamil and he will be telling. People don't have time to convert Wikipedia information in Tamil and read. So they don't know English. They don't have time to read Tamil also. So they want to listen. This guy started doing that. Whatever he tells, everything is there in somewhere. He will read that and he will post a video. But he has lot of viewers. And you know what is his monthly income? 10 lakhs. 10 lakhs is his monthly earnings. Had he joined for one job, he would have got hardly 1.5 lakhs or 2 lakhs. So if money was the priority, you understood what I am telling? Sir, many game developers, sir. I know a kid who is of 18 years age, just now only 18 years, and that particular person has created 30 games and his earnings is close to 80 lakhs in a year. 80 lakhs. He created 30 games, different games, because he liked to make games. He learned the coding at an early age and he started creating games. Lot of visualization he do, and these games are being downloaded by lot of kids and they will be watching lot of ads. Simple, this games, lot of games, if you see talking Tom like that and all, one ad will come. When the ad comes, the revenue will come for them. You understood? So like that they are earning. So that's what I always believe in. Chase behind your dream, not behind your money. So money will be incidental. So learn to the extent possible, learn the knowledge and explore your life and opportunities. So definitely it will happen. Okay. So therefore, moral of the story, don't bother about my turnover. Then, so this first 2 digits is your state code and next 10 digits is permanent account number and next is entity code. So I have only one registration in Tamil Nadu, so 1, and this alphabet Z is a constant and D is a checksum digit, that I don't know, that randomly department will be giving. So sometimes D, sometimes O, sometimes A, like that they can randomly change that. So this is how the 15 digit will be. First 2 digit state code, next 10 permanent account number, next one entity code, and thereafter one is alphabet Z and last one is a checksum digit. Then second point, a person shall obtain registration in every state from where he makes taxable supplies. Suppose if I am making only exempted supplies in some states, even though my aggregate turnover exceeds threshold limit, I don't have to register in that state. Now within the state, how many registrations I will be getting? Usually one. But if I have multiple places of business, can I go for separate registration? Yes, with respect to each place of business. Within the state, registration is required only in case of different place of business. Alternatively, a single place within the state can be specified as principal place of business and other places can be mentioned as additional place of business. Now, who is that notified supplier I gave in the next page? So, in these cases, like a notified supplier means a person who is making only intra-state supplies is not required to get registered even though they make supply of goods through e-commerce operator. Correct, that's an amendment. Person making supply of goods through ECO and having aggregate turnover below threshold limit, so is not required to compulsorily register. But he should not make interstate supplies. He should not make supply of goods through e-commerce operator in another state. What is the difference between first point and second point? First point, directly also he should not make interstate supply. Through e-commerce operator also he should not make interstate supply. So literally he should not make interstate supply. Okay. Then declare permanent account number, address, state or union territory on the portal for validation. And they need to get a enrollment number. You got it? What is that enrollment number called as? Unique enrollment number. And again, as and when aggregate turnover exceeds threshold limit, will they register and pay GST? Yes. See the fifth point. Enrollment numbers used to be valid from the date of registration as and when their aggregate turnover exceeds threshold limit. Then look into the next provisions. Now, our focus should not be for any practical question. Mostly it will be theory question or MCQs. From this 25 to 30, from question number 20, section number 25 to section number 30, we get mostly theory questions or MCQs. Okay. Now first, what is the procedure for registration? So there is one big procedure for registration given here. So this procedure we will try to simplify and remember easily. So you make note of this. So in the middle of the page you write down what is the form number, form GST, and what is the purpose. What is the purpose of that form? Form GST and purpose. Form GST is REG1. REG1. What is the purpose of this REG1? Application for registration. Application for registration. Then REG2. REG2 is acknowledgement. When you make application for registration, you get an acknowledgement in REG2. Then REG3, certificate of, REG3 is notice. So if there is any discrepancy, you will get a notice in REG3. Then REG4 is reply to notice. Reply to notice. And REG5 is cancellation, that is rejection of application. So whenever you make application, they will reject that. That is rejection of application. Then REG6, certificate of registration. Certificate of registration. So these are the various forms that we have. REG1 application, REG2 acknowledgement, REG3 notice, REG4 reply to notice, REG5 rejection of application, REG6 certificate of registration. Now, when you make application for registration, so they will give acknowledgement. That acknowledgement will be immediate. that acknowledgement will be immediate once you make application, and thereafter within 7 working days you should get either REG3 or REG6. Okay, so within 7 working days either REG3 or REG6. Say this: REG'12, REG'12, REG3, or that is notice. Either you should get notice within 7 working days, or you should get the registration certificate within 7 working days. So within 7 working days, either you need to get the registration certificate, or if they are cancelling your registration, so means they should tell the reason why they want to reject your application. They will give a notice. Without giving notice, they cannot reject the application. So either notice we will get, or we will get certificate of registration within 7 working days. Suppose if you get a notice, then you need to make a reply to the notice. What is the time limit within which you will give reply to the notice? Everywhere in registration procedure, the time limit is 7 working days. And after you give reply to the notice, within 7 working days, either they will grant the registration certificate, or they will reject the application. So either rejection of application or certificate of registration within 7 working days. Understood the procedure? This much only. This is the procedure. That 1 page information you just remember in this half a page. Not even half page, quarter page, over. So what is the procedure for registration? You will not get descriptive question about procedure for registration. These key points only will be tested. So REG1 application, REG2 acknowledgement, REG3 notice, REG4 reply to notice, REG5 rejection of application, REG6 certificate of registration. Once you make application within 7 working days, either they need to give you notice or they need to give you certificate of registration. Then again, whenever you got the notice, so from the date you got the notice, you need to give reply to the notice within 7 working days. After you give reply to the notice within 7 working days, either they will reject the application or they will grant the certificate of registration. Okay. Now listen carefully. If they are neither giving notice nor giving certificate within 7 working days, then it will be deemed registration. So deemed to be registered, write down, deemed to be registered. When a person is deemed to be registered means what? Deemed to be registered means what? It means they cannot cancel the application. Deemed to be registered means what? Application cannot be cancelled, that is rejected. Application cannot be rejected. Application cannot be rejected. That is the meaning of deemed to be registered. Deemed to be registered means application cannot be rejected. What are the cases where a person is deemed to be registered? First, neither REG3. What is REG3? Notice. Nor REG6. What is REG6? Within 7 working days of REG1. What is REG1? Application. Sir, you made application, sir. Within 7 working days, you neither got a notice nor you got a certificate of registration. Now they cannot cancel the application. Means they should grant the registration. You understood? Then next, number 2. Neither REG5 nor REG6. What is REG5? What is REG6? Within 7 working days of. What is REG4? Reply to notice. So once you gave reply to the notice, within 7 working days, if they are neither rejecting the application nor granting the certificate of registration, means registration deemed to be granted, they cannot reject the application thereafter. Okay. So what are the two deemed to be registered? You understood? Come on. Neither notice nor certificate within 7 working days from application. Second one, neither rejection nor certificate within 7 working days from the date of reply to the notice. So that is about this procedure for registration, and here you remember this procedure is not applicable to not you. Who is not you? You see this procedure and tell you not you, not you. N for NRTP. N for NRTP. For NRTP this is not applicable. O, super, OIDR supplier. T, TDS, TCS. U, UIN holder. Who is a UIN holder? Embassy, consulate, UN agency, we discussed na. So for them this procedure is not applicable, for them a different procedure is applicable, a simplified procedure is applicable. So I have given in the next page who is a UIN holder. In exemptions chapter we have seen that there are some specified agencies of UN, embassy and consulate whose outward supply is exempted. But on their inward supply they will pay some GST. That GST they can claim as a refund. To claim the refund, they will be given one identification number that is known as unique identification number. Then next, listen. What is the time limit for making application for registration? Long back we studied. 30 days from the date you are liable to register. You remember this enough. When you will liable to register depends. If you are compulsorily required to register whenever you commence a business within 30 days. And if your aggregate turnover exceeds threshold limit, as and when it exceeds threshold limit from their 30 days. So what is the point you need to remember? What is the time limit within which we need to make application for registration? 30 days. Within 30 days from the date you are liable. But in case of CTP and NRTP, casual taxable person and non-resident taxable person, you should make application for registration at least 5 days before commencement of business. CTP and NRTP should make application at least 5 days before commencement of business. So only 2 points you should remember. What are the 2 points? First, the regular time limit for making application for registration is 30 days from the date you are liable to register. Whereas CTP and NRTP at least 5 days before commencement of business. Then along with the application for registration, you need to furnish your bank details, but even you can submit the bank details later also. Now there is an amendment in this place. The previous provision was 45 days from the date of registration or date of filing first return, whichever is earlier. Now they amended it to 30 days. 30 days from the date you got the registration certificate or the date on which you file your GSTR1, first GSTR1. Whichever is earlier, whichever is later, whichever is earlier, whichever is earlier. So what is the provision for furnishing bank details pa? 30 days from the date of registration or date of filing, not due date, date of filing GSTR1, whichever is. Now say this. So registration granted on 3/11/2020, 3/11/2020. 3/11/2020 means what is 30 days from 3/11? 3/12. So write down the answer below. 3/12. 3/12/2020. B. What is the date on which you will file your GSTR1? Assuming the due date you will file. What is the due date of GSTR1 after registration? When you got registration? November month. For November month, when will you file GSTR1? Tambi, मुझे class गवनी pa, please pa. Okay. So, what is the GSTR1 due date? 11th of next month. So, we should file GSTR1 only after we register. In which month we got registered? November month. For November month, when will you file GSTR1? 11th of December 2020. Whichever is earlier. Which is earlier? 3/12/2020 is earlier. Then next. If registration is granted on 18/11, if registration is granted on 18/11, now you try. A. 18/12, 30 days, that is 18/12/2020. B. 11/12/2020, whichever is earlier will be 18 or 11. 11. So 11/12/2020 will be taken as the time limit for furnishing bank details. Understood here? So here we are assuming due date of GSTR1 itself as the actual date of GSTR1, but we need to take actually the date on which you file the GSTR1, and not applicable to those who require to deduct TDS TCS. Sir, bank details, whatever is to be submitted, we have a relaxation. After registration also you can give bank details. But this provision is not applicable for TDS TCS, which means they have to give the bank details at the time of registration. So that is the meaning of that. So write down below note. Point number 1, TDS or TCS deductor need to furnish bank details at the time of registration. TDS, TCS deductor need to furnish bank details at the time of registration. Second, if any person not furnished bank details on time, within time, comma, their registration shall be cancelled. Their registration shall be cancelled. So generally TDS, TCS deductor, when they need to give the bank details at the time of registration, but others they can give the bank details later also, but within the time limit. What is the time limit? 30 days from the date of registration or date on which they file their GSTR1, whichever is earlier. Suppose if they are not giving the bank details within the time limit, their registration shall be cancelled. Done? Next, look into this Aadhaar authentication. There is something called as Aadhaar authentication. Please concentrate, it's an important provision. Every registered person should undergo Aadhaar authentication. And is there any alternative for Aadhaar authentication? Yes. So they can go for, that is at the time of making application for registration, they have two options. Either they can go for authentication or they can give the details, KYC details. If they are going for without Aadhaar authentication, the registration will be granted to them only after physical verification. In case of Aadhaar authentication, no physical verification unless the officer wanted to conduct. But in case of application without Aadhaar authentication, by default they will do physical verification. Is it clear or not? Now, sir, new applicant, I am a new applicant. Aadhaar number is assigned to me. Then I will give the Aadhaar number, undergo Aadhaar authentication and submit the Aadhaar details. Suppose if in some states, so now they have brought biometric Aadhaar authentication. What is this biometric Aadhaar authentication? You cannot do only OTP verification. You need to go to the Aadhaar enrollment center and you need to keep your thumb impression and verify, and this retina scan and all also they will do for the purpose of granting the registration. Got it? So just the OTP will not be sufficient. So they started this in Gujarat and they are extending it in other states. You don't have to remember Gujarat, but you just remember in case there is a biometric Aadhaar authentication, they should undergo that biometric Aadhaar authentication in the Aadhaar enrollment center. Whereas if biometric Aadhaar authentication not applicable in those states, then what they need to do, just the Aadhaar authentication, that is OTP verification, will be sufficient. Is it clear? Sir, what if they don't have Aadhaar number? Then they will be offered with the alternative and viable means of identification. That is your other ID proofs and all will be there, na? That is voter ID, then PAN card, then for address proof also rental agreement, like that some other details you can submit. But they will grant registration only after physical verification. Is it clear? Then next, sir, I have already registered, sir. Already registered. At the time of registration, I did not submit the Aadhaar details. So now, should I submit the Aadhaar details at a later point of time? Yes. Otherwise, my registration will be cancelled. Just remember this point, okay? Sir, at the time of registration, I did not give Aadhaar details. But using the alternative means, I have registered. But after registration, I need to submit the Aadhaar enrollment slip. Suppose if I am not giving, my registration allotted shall be deemed to be invalid. Means Aadhaar authentication is literally mandatory. But when you will do, it differs. You understood? When you will do, it differs. At the time of registration itself, you can do Aadhaar authentication. So in future, it will not arise. Suppose at the time of registration, you don't have the Aadhaar number. So alternative means is there, you can get registered. But at a later point of time, after registration certificate, you need to apply the Aadhaar number and give them the enrollment slip. Otherwise, your registration will be cancelled, deemed to be invalid. Understood? Then, so now I am talking about at the time of registration. At the time of registration means you are a new applicant. Okay. Now you have two options. What are the two options? Either select Aadhaar authentication or don't select Aadhaar authentication. If you select Aadhaar authentication, please look into option 1. If you select Aadhaar authentication, after submitting the part B of the application, you will be sent with a OTP link. So to your email and to your mobile, and that OTP link we need to click and enter the OTP, mobile OTP and email OTP. Then the Aadhaar authentication is completed. Sir, by when I should do this, sir? 15 days from the date you submitted part B. Sir, you submitted part B, within 15 days you need to complete the authentication. So when you complete the authentication within 15 days, the date on which you completed authentication is the date of application. Is it clear, pa? Suppose, sir, 15 days over, sir, 15 days over, then what will happen? You have not done the authentication. On expiry of 15 days, it is deemed that you submitted application without authentication on expiry of 15 days. And therefore, definitely there will be physical verification. Is it clear or not? Then again, so see this. Successful Aadhaar OTP, registration to be granted within 7 working days, or if fails to authenticate within 15 days, application deemed to be submitted after expiry of 15 days, but how that application will be treated as application without Aadhaar authentication. Now, one more twist is there. Even if you do Aadhaar authentication also, based on risk parameters, means the locality where you are living is a risky area, means lot of traders are involved in that area and you may give the fake address also. So even though Aadhaar authentication is done, they will take up the application for physical verification. Example, in Chennai, Saukarpet, Pursevakam. So these are some areas where lot of traders will be there. Then Ritchie Street, then that Paris, Goindappan Icon Street, like that lot of areas are there in Chennai, which is with dense traders. Now you can give same address will be shared with 10 people. You understood? Same address will be shared with 10 people. Then in that case, fake registrations are possible. So they will come, inspect the premises, and then only they will be giving the Aadhaar, that is a registration certificate. Now tell me, what are the 3 cases registration will be given only after physical verification? Come on. Applied without Aadhaar authentication. Second, applied with Aadhaar authentication and not completed within 15 days. Third, applied with other authentication and completed within 15 days, but officer takes it up for physical verification based on risk parameters. Okay, so this point somewhere you need to make note pa, because this can be asked as a short note question. Maybe in this space you write down. In this space you write down physical verification required in the following cases. Physical verification required in the following cases. Physical verification required in the following cases. Number 1, applied without authentication. Applied without authentication. You can understand now what does it mean? Applied without authentication. In exam you write in detail. Okay, applied without authentication. Second, applied with authentication. Applied with authentication but not completed. Applied with authentication but not completed within 15 days. Applied with authentication but not completed within 15 days. Then third, applied with authentication. Applied with authentication and completed but based on risk parameters, requires site verification. But based on risk parameters requires site verification. Okay pa? So now listen, in these three cases pa, what is the time limit to grant the registration certificate? 30 days. 30 days. That 7 working days we saw na, that's not applicable. The moment they go for physical verification, what is the time limit automatically? 30 days. Why 30 days, sir? Because they need to come, inspect the premises and give the registration. Na? That's why 30 days. You got it? Sir, what if within 30 days they have not granted registration certificate deemed to be registered? So now you remember 5 deemed registrations. Tell me what are they? Application you submitted, neither notice nor registration certificate within 7 working days. Super. Second, you gave reply, neither rejection nor certificate within 7 working days. Next, these three within 30 days. Okay, means you applied without authentication and within 30 days they have not granted registration. You applied with authentication, not completed within 15 days. Thereafter, within 30 days, they are not granting registration. You understood? 30 days will count after 15 days. And you applied with authentication and they have taken up for physical verification and not granted registration within 30 days. These 3 points, common 30 days. You understood? So these are the 5 cases where there is deemed registration. Now you will get another short note question. What are the cases where a person is deemed to be registered? Now these 5 points I just structured in one chart. You mark this as important for short note. Deemed registration, you can see in the next page. Deemed registration, what is that? Sir, you applied for registration, and you have not opted for authentication. Not opted means? Not opted means time limit alone you tell me pa. Not opted means for registration how much time? 30 days. So within 30 days from application you did not get registration, so deemed registration. Are you getting this? Then pa, you opted authentication and not completed within 15 days, then also time limit. So 30 days after expiry of 15 days if registration is not granted, easy. Then next, apply authentication opted, completed within 15 days, okay, completed within 15 days, but you got a notice and you gave a reply within 7 days, 7 working days. Now, what is the time limit to give you registration certificate? After reply, 7 working days. If not, then also registration deemed to be granted, correct? Within 7 working days of reply, otherwise deemed to be granted. Then, you made Aadhaar authentication, but based on risk parameters require site verification, time limit, 30 days. So, within 30 days of application, if they are not granting registration, deemed to be registered. Suppose based on risk parameters, they are not taking physical verification and even no notice also. Then what is the time limit within which you need to get registration? 7 working days. Otherwise, registration deemed to be granted. Is it clear? You told 5 points, not just now. That 5 points is only given here. So you need to write this as the answer when you get a question. What are the situations where the registration to a person is deemed to be granted? Got it? Then, next question they can ask, what are the situations where Aadhaar authentication is not required? What are the situations where Aadhaar authentication is not at all required? Some cases not required. See the previous page. Easily you can remember. First, government do not require to undergo authentication. Correct? Government includes its extended family members. Who are they? Central government, state government. See that list. Central government or state government, local authority, public sector undertaking and statutory body. You understood? These 4 people do not require to undergo authentication. Got it? Then next, individual. Every individual is required to undergo authentication. What if they don't have Aadhaar number? Who will not have Aadhaar number in India? Not a citizen of India. So they are not required to undergo authentication. In HUF, who is required to undergo authentication? Karta. Who are not required to undergo authentication? Other members of HUF. Same way, firm. In firm, who is required to undergo authentication? Managing partner. Who are not required to undergo? Other partners. Then in any other person, company, body corporate, etc., who is required to undergo authentication? Authorized signatory. So others are not required. So first 4 points, how will you remember? Individual, not a citizen. HUF, other than Karta. Partnership firm, other than managing or authorized partner. And in case of others, other than authorized signatory. 4 points over. Next 4 points, central government, state government, local authority, statutory body or public sector undertaking. Last, UIN holder. So these 9 cases, they are not required to undergo authentication. So mark it as important for short note. Then, the presence of applicant is not required during physical verification. Previously it was required. Now they have made an amendment. Presence of applicant is not required. Sir, whenever the officer is coming for physical verification, the applicant need not be there. But if the place, address is correct, that is enough. So presence of applicant is not required. Clear here? Then we will complete this and we'll take break. Just 2 points only. So what is the time limit for uploading details of physical verification? That is another amendment. That is, what happens is that, sir, within 15 working days from the date of verification, they need to upload the details. Who should upload the details? Officer should upload the details. In which case, if the physical verification is after grant of registration, they granted registration, but they want to come and check. They can come, check our premises, but upload the information in the portal that they have completed physical verification within what time? 15 days. Just remember for MCQ purpose. Okay. Then suppose before granting registration itself, they want to do physical verification. They will come and upload the information of physical verification, that they completed physical verification. When they should upload? At least 5 days. 5 days or 5 working days? 5 working days. Here also 15 working days. Everywhere we have seen working days, except 30 days, it is 30 days. Okay. In all other places, that 7 working days, 15 working days, 5 working days, prior to the completion of time specified. What is the time specified for completion? 30 days. What is the time limit within which they need to do physical verification and grant registration? 30 days na? 30 days, at least 5 days before. At least 5 working days before means what? Some 25 days or 24 days. They need to upload the information of physical verification, that they completed the physical verification. Now, as it is an amendment, directly they will ask this. What is the time limit within which the proper officer should upload the details of physical verification in the portal? If, 2 points. If the physical verification is after registration, 15 working days from the date of physical verification. If the physical verification is before granting registration, at least 5 working days before the date on which they need to complete the physical verification and grant registration certificate, that is 30 days. And this illustration 6 is related to this discussion. Mr. A commenced business on 15/5/2021 and crossed the threshold limit on 36/2021, and he submitted application on 25/7. Is it within 30 days? When is he liable to register? 36. And when he is making application for registration, 25/7, is it within 30 days? Yes, by selecting Aadhaar authentication. Such authentication is completed on 31/7. Can Mr. A issue revised tax invoice if registration is granted on 2/8/2021 with respect to supplies between 36 and 2/8? Remember one important point, what will be considered as the date of application? The date on which you have completed the authentication. When you completed the authentication, 31/7. When are you liable to register? 36. Is the application made within 30 days? No, the application is made beyond 30 days. As the application is made beyond 30 days, you will not be called as application made within 30 days. So revised tax invoice can be issued or cannot be issued? Cannot be issued. You understood the mistake that has happened here. You submitted application on time, but what is considered as the date of application? Not literally when you submit, only when you complete the authentication. As the authentication became late, revised tax invoice cannot be issued. Also, one more point we have seen, section 18(1)(a). So, if the person is making application for registration within 30 days from the date he is liable to register, then only he can take ITC on closing stock. So, even Mr. A cannot avail ITC on closing stock. So, we completed procedure 25 and 26 deemed registration, and we are left with 27, 28, 29, 30. After break we will see that, and remaining portions we will see. We will meet at 2 o'clock. Thank you. Okay, we will start. Look into page 232. Special provisions relating to CTP and NRTP. CTP refers to casual taxable person and NRTP refers to non-resident taxable person, and they need to get a compulsory registration whenever they commence a business, and they need to make application for registration at least 5 days before commencement of business, and the validity of their registration is 90 days, maximum 90 days. Suppose if they make application for registration for 30 days and the registration will be granted only for 30 days. If they make application for registration for 60 days, 60 days, 90 days, 90 days, 120 days, maximum 90 days only. So, number of days that they are seeking registration or 90 days, whichever is lower. So, that is the meaning of maximum 90 days. Suppose if they want to continue into the registration even after 90 days, they can continue, for which they need to make again an application for extension, and they can continue for a further period not exceeding 90 days. Means what is the maximum number of days that a person CTP and NRTP can be registered? 180 days, and that is which on sufficient cause being shown by the said taxable person, proper officer may extend the said period of 90 days by a further period not exceeding 90 days. And as this CTP and NRTP is not having any fixed place of business in the state, they have to make an advance tax deposit. That advance tax deposit will be adjusted against their actual liability. Suppose if there is any excess amount, they can get it as a refund. Suppose if there is any shortfall, so they have to pay the difference. and this excess amount or shortfall, everything will be in their electronic cash ledger. So you can see advance tax to be deposited at the time of registration plus extra amount for extended period. And at the time of making application for registration itself, they need to estimate what could be their net tax liability. So that is, they are going to stay in this state for 10 days. In 10 days, what could be the supplies that they can make? So like that, they have to estimate their net tax liability and deposit. So net liability means what? Gross liability minus input tax credit for the period for which registration is sought. Suppose if there is any extension is sought, for that extended period also again the additional amount of tax is required to be deposited, and I told you this advance tax will be credited to which ledger? Electronic cash ledger, which shall be adjusted against the final liability determined. Then look into the next one, section 28. So section 27 is about this. Then 28, amendment in registration. When there will be amendment in registration, remember, if there is any change in details that we have initially submitted, then it will lead to amendment in registration. Amendment in registration cannot be done in case of change in permanent account number. So when will there be a change in permanent account number? If there is a change in first name, because our fourth digit, okay, so E is the constitution, P means individual, and F is firm, C is company. Like that, if there is any change in constitution, a partnership firm becomes a company, there is a change in permanent account number. And the fifth alphabet is related to our first name. So if there is any change in the first name, then also there will be change in the permanent account number. So whenever there is a change in permanent account number, we need to make an application for new registration and cancel the old registration. We cannot continue with the same registration. Reason? The permanent account number has changed. But should we cancel the registration and then apply for new registration, or apply for new registration and then cancel the old registration? Apply for new registration and cancel, because when you apply for new registration, from the old registration ITC can be transferred and then we can cancel our old registration. So that is this. See this, amendment in registration. If there is any change in details submitted at the time of registration, check whether there is a change in permanent account number. Yes, there is a change in permanent account number. Make application for new registration and cancel your old registration. No, there is no change in permanent account number, but there are some changes. Then in that case, make an application for amendment in registration. Now check whether there is a change in the core fields. What are considered as core fields? Change in name, change in address, and change in top management is considered as core fields. What is the meaning of core fields? So these core fields, change in name, change in address, and change in top management, should be approved by the proper officer, then only registration will be granted. But if there is any other change, what could be any other change? Change in mobile number, change in email ID, or change in bank details, change in goods or services that we deal with. So in that case, automatically it gets updated, okay? Only in case of change in name, change in address, any address, principal place or additional place, or change in top management, proper officer approval required. Suppose if there is no change in the core field, so directly it gets updated in the portal, just a OTP verification will be done. Suppose if there is any change in the core field, the application will be forwarded to the proper officer, and if the proper officer is satisfied, then immediately the change will take place. But what is the time limit? 15 working days. What is the time limit within which we need to make application? 15 days. What is the application? REG 14. Once we make application, what is the time limit within which they will approve the change? 15 working days. For us, all days are working days when we make application, but for them it is only working days, 15 working days, okay? For us 15 days. And suppose if they are not satisfied with that, they will give a notice. Usually what is the form of notice? REG 3. Suppose sir, within 15 working days, either they are not giving notice, neither notice, nor they are approving the amendment, then the amendment deemed to be approved. So write down below. Amendment deemed to be approved in the following cases. I have given some note space, there you write down. Amendment deemed to be approved in the following cases. Amendment deemed to be approved in the following cases. Point number 1. Amount deemed to be approved in the following cases. Number 1. Neither notice in REG 3, neither notice in REG 3 nor approval in REG 15, neither notice in REG 3 nor approval in REG 15 within what time? Within 15 working days. Within 15 working days, neither REG 3 nor, neither notice in REG 3 nor approval in REG 15 within 15 working days. From when? From the date of application, from REG 14. 15 working days from REG 14. Then it is deemed to be approved, correct? So just write down neither notice in REG 3 nor approval in REG 15 within 15 working days from REG 14. Second point. Now listen carefully. So suppose if the officer gives a notice, then we need to give reply to the notice. What is the time limit within which we need to give reply notice? 7 working days. What is the form in which we need to give reply notice? Usual form REG 4. And thereafter within 7 working days, if they are neither rejecting the application in REG 5 nor granting the approval for amendment, then also amendment deemed to be approved. So second point you write down. Amendment deemed to be approved in the following case. In that second point, neither rejection of application in REG 5, neither rejection of application in REG 5, neither rejection of application in REG 5 nor approval in REG 15, nor approval in REG 15 within how many days? 7 working days within 7 working days from REG 4. Clear here? REG 4 is reply. It's there on the top, you can see. What are those? REG 4 is reply. After furnishing the reply, REG 4 same. Within 7 working days, if you are neither getting the rejection nor getting the approval, then registration deemed to be amended. Okay. Next. Look into the next section, section 29. Understood pa? Section 28, amendment in registration. 29, cancellation of registration. In this cancellation of registration, we need to know what are the situations that leads to cancellation of registration. Total 8 situations we have where registration of a person will be cancelled. First 3 situations, the registered person can make application for cancellation. Number 1, there is transfer or discontinuance of business. Transfer or discontinuance means what? Business you have transferred, means the other person only should register, so you can make application for cancellation. Or you stopped doing the business, then also you can make application for cancellation. Change in constitution of business. Change in constitution means what? Partnership to company or sole proprietorship to partnership, then a new registration we get, so old registration we need to cancel. Or taxable person no longer liable to be registered, means what? His turnover would have fallen below the threshold limit. In these 3 cases, what are the 3 cases here? Transfer or discontinuance of business, a person is no longer change in constitution, or a person no longer liable to be registered. In these three cases, either the registered person can make application for cancellation or proper officer suo motu can initiate cancellation. But there are 5 situations where proper officer will initiate cancellation. What are they? If you have contravened the provisions of the act or rules. Number 2, you are under composition scheme. You need to file an annual return. What is the annual return for a person opting for composition scheme? GSTR 4. By when the GSTR 4 needs to be filed? By 30th April of the succeeding financial year. Due date over, 30th April over. And within 3 months after due date, if you are not furnishing annual return, then your registration will be cancelled. Suppose if you are under normal scheme, you have not filed returns for consecutive 6 months, continuous 6 months or 2 quarters. 6 months means 2 quarters only, na? Then also your registration will be cancelled. So returns related 2 points. What are those 2 points? Number 1, contravention of provisions of the act or rules, or returns. Returns point I am asking. Person under composition scheme, not file annual return within 3 months after due date. And then next one, so person under normal scheme, not file return for consecutive 6 months or 2 quarters. Then also registration deemed to be cancelled. Registration will be cancelled. Okay, automatically they will cancel that registration. Then next, if you have contravened the provisions in that, so contravention, there are many contraventions, but one more point you see, registration obtained by fraud. So what is registration obtained by fraud? You gave fake details for registration, or you voluntarily obtained registration but not commence business within 6 months. In these 5 cases, our registration will be cancelled by the officer. Sir, cancellation of registration, what is the disadvantage? Disadvantage is simple. So whenever they cancel the registration, we need to reverse the ITC on our closing stock. And even though we don't have that much of balance in ITC, we need to pay. So it is like you downloaded a game in your mobile. You played the game, and to cross one level and all, it is taking hell lot of time. Multiple attempts you are taking to cross one level in the game. Yes, you know. So because games and all will be complicated, just like that we will not be able to cross the levels. And like that 14 levels you completed, and you played that game for around 30 days. And now suddenly the game got deleted, and again you are reinstalling and playing from beginning. It will hurt or not? It will hurt. Like that, you are doing business. You accumulated lot of ITC, and suddenly they are telling registration cancelled. Reverse the ITC. Again you need to do from the beginning. You understood? That is like a penalty for the purpose of non-compliance with the provisions. You got it? So now when you get a question, what are the situations that leads to cancellation of registration? You need to write these 8 points. Okay. So what are those 8 points? Number 1, transfer or discontinuance. Number 2, change in constitution. Number 3, no longer liable to be registered. Then next, contravention of provisions. Total 4 you told. Composition scheme, not file annual return within 3 months after due date. Okay, next. Normal scheme, not file returns for 6 months or 2 quarters. Next. Obtain voluntary registration, not commence business within 6 months. One more point. Registration obtained by fraud. These 8 points you need to write. Then see the next one. What are the contravention of provisions that leads to cancellation of registration? In these 8 points, 1 point is what? Contravention of provisions of the act or rules. And what are the contravention of those provisions that leads to cancellation of registration? That is 7 points. You remember these 7 points? Number 1, wrong address. Wrong address means what? You are doing business in a different address than the address what you have given in registration certificate. Then next, wrong ITC. You are not supposed to take the credit, but you avail the ITC. So contravene that section 16, conditions for availment of ITC you did not follow and you took. Then wrong invoice. Wrong invoice means you have given invoice with incorrect details, reduced rate or some other goods like that you have shown, or value you have reduced. So these 3. What are the first 3 points? Wrong address, wrong ITC, wrong invoice. So wrong address, wrong invoice, wrong ITC. Wrong address does not conduct business from the place where they have obtained registration, issues invoice in contravention of the provisions, and avail ITC in violation of section 16. Then 3 violations. So number 1, violates furnishing of bank details. So we have to give the bank details within 30 days from the date of registration or date of filing first GSTR1, whichever is earlier. Otherwise, our registration will be cancelled. Then next, you have violated anti-profiteering provisions. Anti-profiteering means you should have transferred the benefit of reduction in rate of GST to the next person. Sir, previously the rate of GST was 18%. Now they reduce the rate of GST to 5%. Means 13% has got reduced. That 13% you need to transfer to the next person, that is consumer, by reducing the sale price. If you are not reducing the sale price but retain the same sale price, your profit will increase, correct? This increase in profit is known as profiteering. To avoid this profiteering, they will pass an anti-profiteering order asking you to pass on the benefit. If you are still not complying with the provisions, then it will lead to cancellation of registration. So you please write down below. In case when there is a reduction in rate of GST, in case when there is a reduction in rate of GST, in case when there is a reduction in rate of GST, but the benefit of such reduction, but the benefit of such reduction is not passed on to the buyer, is not passed on to the buyer by way of reducing the price, by way of reducing the price, comma, it leads to profiteering. It leads to profiteering. Understood pa what is profiteering? What is that? There is a reduction in rate of GST, but that benefit you should have passed on to the buyer. How you will pass on the benefit to the buyer? By reducing the sale price. If you have not done that, it is known as profiteering. To avoid profiteering, continue. To avoid profiteering, an anti-profiteering order, to avoid profiteering, an anti-profiteering order shall be passed. Okay. So suppose if you are not complying with that anti-profiteering, that is a violation. You got the clarity? So what are the 2 violations we have seen? Violation of furnishing bank details, violation of anti-profiteering. One more point pa. Violation of provision of rule 86B, that is payment of 1% of your liability through electronic cash ledger. So what is this? Sir, every person, they have to pay at least 1% of their liability through cash ledger if their turnover in a month exceeds 50 lakhs. So concentrate, remember important point, usually it will not be directly tested in question, it will be like a hidden adjustment. So when this 86B 1% will be applicable, turnover in a month greater than 50 lakhs. And out of your gross liability, 1% of your gross liability you have to pay through cash ledger. And 99% only you can pay through credit ledger, even though you have sufficient balance in the credit ledger. So this is like, say, my gross liability my gross liability is 18 lakhs and I have ITZ 20 lakhs. But can I use 20 lakhs for payment of 18 lakhs? No. So out of this 18 lakhs, 1% I have to pay through cash ledger. So how much will be through cash ledger? How much will be through cash ledger? 1%. 1% of 18 lakhs. 18 lakhs into 1%, that will be 18,000, and through electronic credit ledger. Through electronic credit ledger, how much I need to pay? 99%. 99% of liability. What is 99% of liability? 17 lakh 82,000 I have to pay through credit ledger. If I am paying, the turnover, liability 18 lakhs na, turnover will be definitely more than 50 lakhs. Liability means GST. You take 18 lakhs divided by rate of GST, you take somewhere like 18%. So 18 lakhs divided by 0.18, how much? 18 lakhs divided by 0.18, how much you got? 100 lakhs, correct? More than 50 lakhs. So you take 12% GST also. 18 lakhs divided by 0.12. So 12% is 18 lakhs, means 100% is how much? So more than 50 lakhs, correct? So definitely the turnover will be more than 50 lakhs, not tax more than 50 lakhs. So when 86B will be applicable, turnover, not tax, turnover more than 50 lakhs. Then 86B applicable, which says, even though you have sufficient balance in the ITC, you have to pay mandatorily 1% through cash ledger, that is 18,000, and remaining 99% you can pay through the electronic cash ledger. And this, still there will be some balance in the ITC that you can carry forward. Without following this, if you use entirely ITC for payment of your gross liability, that is an offense. So that will lead to cancellation of registration. That is what violation of payment of 1% liability through cash ledger. So tell me, what are these 6 points we have seen so far? First 3, wrong address, wrong ITC, wrong invoice. Then 3 violation. Violation of anti-profiteering and violation of furnishing bank details and violation of payment of 1% of liability through cash ledger. Then last one more point, 7th point, that is your liability in GSTR1 is greater than GSTR3B for 1 or more tax periods. When will it happen like this? Liability in GSTR1 greater than GSTR3B. In GSTR1, you have showed more liability. You don't have to pay GST at the time of filing GSTR1. GSTR1 just invoice details we will show. But actually we need to pay tax at the time of filing 3B. So as per GSTR1, you have showed your liability as 18 lakhs. But in your 3B, you paid only 12 lakhs. Okay. So means what happened? There is a shortfall now. Actually, what is your liability as per GSTR1? 18 lakhs. But how much you should have paid? 18 lakhs. But how much you actually paid? 12 lakhs. So there is a shortfall. So then also it will lead to cancellation of registration. Sir, which idiot will show more liability and pay less liability, sir? Problem is, in GSTR1 I will show more liability because I want to give credit to my recipient. So therefore the recipient will take credit. But this month I don't have that much money to pay tax. I would have spent fully. So I have to pay tax. So I have paid only 12 lakhs because I don't have money. Then if you do like this for 1 or more tax periods, it will lead to cancellation of registration. Is it clear? Same way, if you are taking ITC in your 3B more than your ITC as per 2B. So in your 2B, say 3 lakhs is the ITC. You should not take more than the matched ITC. But if you want to take more than the matched ITC, sir, can we take that, sir? Actually, yes. Because in 3B, we will only do the entry. When we are entering more than 3 lakhs when you take, it will show a warning. Boss, you are taking an ITC more than your 2B. Really you want to take ITC, it will tell the warning. But even then, Actually, in some cases it is allowed to be taken. Genuine cases also could be there. GST paid under RCM, pertaining to earlier tax period, re-availment of ITC. So that's why it will not restrict. It will tell, okay, take, but red one message will come. It is like you are taking ITC more than your 2B. So if it is genuine ITC, you proceed to take. Otherwise, don't take like that. Even you ignore that warning and you are taking more ITC and it is not genuine. Not genuine. So just like that one number you have put and you took the ITC, that will also lead to cancellation of registration. Is it clear? So what is that last point, pa? Liability in GSTR1 greater than 3B for one or more tax periods, or ITC in your 3B is greater than your 2B for one or more tax periods. When you get a question on what are the contravention of provisions that leads to cancellation of registration, you need to write this 7 points. Understood? Then, now sir, whenever our registration is suspended, what is the, that is whenever our registration is liable to be cancelled, what is the department will do? First they will suspend our registration. Please listen. So we have seen many situations there will be cancellation of registration. What they will do is that directly they will not cancel. First they will suspend our registration and they will do the enquiry and thereafter they will decide to cancel. Sometimes they may not cancel, they will allow us to continue in the registration also. Is it clear, pa? So first you will make application for cancellation or department will initiate cancellation. What is the first step that they do? They do the suspension of registration. From the suspension of registration till the cancellation of registration, some time will be there. During this time, you are behaving like an unregistered person, but you are officially not called as an unregistered person. Is it clear? Example, one police is committing a mistake. Now, he will be dismissed or suspended? Suspended. And they will conduct an inquiry. If really he has committed the offence, he will be, suppose if he is not committing any mistake, he will be continuing, correct? He will be continuing. But in this period, he is police or not a police? He is police. But he don't have the powers of a police. Is it clear? Sir, during the period of suspension, he is police. But he is not having powers of a police. If you go and dance before him, he will keep in mind. But after the date when he is continuing, can he take action or not? Yes. You understood? Suppose if he is dismissed, so far he was not having power. Now officially he is not called as a police, he can't do anything. You understood? Like that, whenever your registration is suspended, you will behave like an unregistered person, which means on your outward supply you cannot collect GST, on your inward supply you cannot take ITC by filing return. And the moment when your registration is cancelled, you are literally like unregistered, officially unregistered person. So far you were like unregistered only, but now officially unregistered. Suppose if they make you continue in the registration, for this period where you have not filed returns and took ITC, you can take now. And for this period you have not recovered GST, you can recover the GST by giving revised tax invoice. Is it clear? So say this. A registered person whose registration has been suspended. Sir, is suspension of registration mandatory or optional? Is suspension of registration mandatory or optional? You read the first paragraph and tell me. May suspend the registration means they may not even suspend the registration also, correct? And when suspension of registration will come into picture? Only when there is a cancellation. Got it? What is the period for which your registration will be suspended? If you make application from the date you selected till the date they conclude the proceedings. When they initiate cancellation from the date they selected till the date of conclusion of cancellation proceedings. Please go through this table. Whenever you made application for cancellation, the date you are selecting in the application or date of application, whichever is later, till the conclusion of cancellation proceedings. Suppose if officer initiate cancellation, he will be specifying in the notice one date from which our registration is suspended till the proceedings, cancellation proceedings. During this period of suspension, you are not supposed to collect tax from your recipient. So you cannot issue a tax invoice. Even on your purchases, you cannot take ITC. So GSTR 3B cannot be filed for availing ITC. Sir, during this suspended period, if I file the returns, why my registration is suspended or cancelled? They have started the cancellation because of non-filing of returns. You understood? Sir, whenever you are not filing returns, they will initiate cancellation and they suspended your registration. Sir, during this period, can I file the returns for this period? No. During this period, can I file the returns pertaining to the period before suspension? Yes. Sir, for some period, like say 6 months, you did not file return. Now they gave a notice for cancellation and they have even suspended your registration. Now during this suspended period, that last 6 months for which you did not file return, can you file now? Yes. But for this suspended period, you cannot file any returns. If you file these returns, what will happen? Automatically your suspension will be revoked and you will continue in the registration. You got it? So that's an amendment. Then next one, you can see this illustration to get the clarity about that suspension of registration with dates I have just given. A person makes application for cancellation on 2010 and the date selected by him in the application is 1/11, whichever is later. What is the date of application? 2010. What is the date of application? 2010. What is the date selected in the application? 1/11. Whichever is later? 1/11. From 1/11 till the conclusion of cancellation proceedings. Conclusion of cancellation proceedings 5/12. What will happen on 5/12? Either they will accept your application and continue in the cancellation, or they will reject your application, means you will continue in the registration. Either they will reject your application or they will pass the order for cancellation. You got it? So what will happen in the conclusion of cancellation proceedings? Either they will cancel or they will allow you to continue. You got it? Suppose if they pass the order of cancellation, that order of cancellation is passed on which date? Passed on which date? No, 1/11 they cannot pass because they will not have a watch like Dr. Strange. They will not go back, and on 5/12 they cannot go back to 1/11 and give. So when they will pass the order? 5/12. So on 5/12 only they can pass the order. But what is the effective date of cancellation? 1/11. Are you understanding? What is the meaning of this with effect from 1/11 means? Sir, order they will give you on 5/12. But what is the date mentioned in the order as effective of cancellation? 1/11. So far 1/11 onwards, you were behaving like an unregistered person. Now officially you will be called as an unregistered person. Are you getting this? Now suppose, sir, if they are rejecting the application, then again with effect from 1/11 only, we will be continuing as a registered person. But during this period, what we have done on our outward supplies, whether we recovered GST? No. We have not recovered GST on our outward supplies. On inward supplies, whether we have taken ITC? No. We have not taken ITC. Now, they rejected the application. When they rejected the application, we will continue in the registration. Now, for the last 1 month, I have not collected the GST from my customers. How can I collect? By giving revised tax invoice. And again, I have not availed ITC for the last 1 month. Can I avail ITC now? Yes. So GSTR 3B of November to be filed, because for November month I have not filed, that I will file. And supplies between 1/11 and 5/12, GST payable can be recovered by issuing revised tax invoice. Then next one, suppose if officer initiates cancellation, same process. Officer gave a notice on 2010 and he is telling with effect from 1/11 your registration will be suspended. And on 5/12 they will decide. What they will decide? Either they will pass an order for cancellation or they will drop the notice and allow you to continue in registration. Now suppose If they pass the order of cancellation on 5/12, what will be the effective date of cancellation? 1/11. And suppose if they drop the notice, you can continue in the registration. But for this period, on outward supplies and inward supplies, on outward supplies you have not collected GST, on inward supply you have not availed ITC. So same story, you can give revised tax invoice to recover GST and you can file returns to avail ITC. Now, say they passed an order for cancellation, but actually you don't want your registration to be cancelled. So is there any recourse available to you? Yes. You can make application for revocation of cancellation, that is only section 30. Again I am repeating. Once the order for cancellation is passed, thereafter we can make an application for revocation of cancellation. Previously, what was the time limit for revocation application? 30 days. It can be extended for a further period of 30 days by ACDC plus 30 days by commissioner. Now they have amended it. It is 90 days from the date of cancellation order, and it can be extended for a further period of 180 days based on the approval of commissioner, additional commissioner or joint commissioner. So see that this is an updated provision here. Application for revocation of cancellation. What is revocation of cancellation means? Withdrawal of cancellation order can be made within 90 days from the date of order of cancellation. Date of order of cancellation means in this example 1/11 or 5/12? 5/12, not 1/11, 5/12. When you officially in your hand, when you got the order copy, 5/12, then only you will know na, but the effective date was 1/11. So 5/12 plus 90 days, and even if you are missing that 90 days also plus 180 days, but that should be approved by additional or joint commissioner or by commissioner. Understood the time limit pa? So tell me, what is the time limit for revocation of cancellation? 90 days from date of order of cancellation, which can be extended for a further period of 180 days, and that should be approved by additional or joint commissioner or commissioner. Then say this, procedure for cancellation of registration. So what is the procedure for cancellation of registration? First, either you will make application or they will give notice, correct? Two cases. Suppose you are making application for cancellation. What is the form of application for cancellation? Reg 16. And proper officer is satisfied that registration is liable to be cancelled. So no, they are not satisfied. They are telling no, your turnover now it has come down, but in future it will go, so we will not cancel. Fine, they will reject the application. What is the time limit? 30 days. Very simple. Sir, within 30 days from the date when you apply, either they will pass the order of cancellation or they will reject the application. Procedure over. Just one point you should remember. What is that? You make application, within 30 days they will either decide to reject the application or they will pass the order of cancellation. In between this 30 days period, what is the 30-day period called as? Suspension of registration. Got it? Then suppose if proper officer initiate cancellation, they will give a notice, and that notice you need to give reply. Usually what is the time limit within which you need to give reply? Notice 7 working days. And proper officer satisfied with the reply. Proper officer satisfied with the reply. Yes. Then they will drop the proceeding and allow you to continue in the registration. If the proper officer not satisfied with your reply, then they will pass the cancellation order. Sir, what is the time limit within which they should decide? Again 30 days. But that 30 days is not given in the law, but this is based on CBIC direction. You got it? In law they have not given, but as per CBIC direction means all this process will be over in 30 days. When they give notice or you make application. So they will either pass the cancellation order or they will reject the application, or either they will pass the cancellation order or drop the proceedings within 30 days. But in case when notice is given, actually we will give a reply. What is that reply? 7 working days. That is the extra point. So actually this procedure for cancellation of registration I have not discussed previously and all, but in the updated study material, latest study material, they have given this. So that's why they have included. So maybe we can expect some MCQs based on this time limits. Then look into the next one, last section, revocation of cancellation of registration. So whenever there is a cancellation order, from the cancellation order we need to make application for revocation of cancellation within 90 days plus 180 days, and all the pending returns should be filed. Whatever is the pending returns, that should be filed. Once you make revocation application, again proper officer satisfied, yes, if the proper officer is satisfied, they will revoke the cancellation order. Suppose not satisfied, they will give a notice. What is the time limit within which either they will revoke the cancellation or they will give notice? Same 30 days. 30 days. Suppose if they give a notice, what is the time limit within which we need to give reply to the notice? 7 working days. And after that reply, within 30 days, if the officer is satisfied, they will revoke cancellation, otherwise they will reject application. You understood? Now suppose if they revoke cancellation, from the date of cancellation till the revocation, you have not filed returns now. Those returns you need to file within 30 days. Say this. Sir, first you go for revocation application, sir. First you go for revocation application. And this is the order of cancellation. Thereafter you will file the revocation application. Up to the order of cancellation you have not filed some returns now. Those pending returns you need to file now. Again, from the order of cancellation till the revocation order, during this period some returns are not filed now. Those returns you need to file after revocation order within 30 days. You understood or not? No, okay, no issue. Order of cancellation in our example is 5/12. Correct? But with effect from 1/11. So 1/11 is the effective date of cancellation. Then thereafter you make a revocation application. Thereafter they will pass a revocation order. Say for example, revocation order is passed on 18th of December. (1/11/2020) 2020 only, no? 1/11/2020, and thereafter, so here say it is on somewhere 18/8/2021, because lot of gap is there na for making revocation application. Now up to October, please listen, up to October, whatever returns that you have not filed, that you should file at the time of revocation application. So which returns? Up to October, returns not filed. So up to October 2020, that returns should be filed before revocation application, because without filing those returns you cannot make the revocation application. Now from November to August, August not 18th August, so November to July, because now only 18th August na. So all those returns, what are the returns between 1/11 to 18/18? Which period to which period? November 2020 to August 2021. All those returns you need to file within 30 days from 18/8/2021. What is 18/8/2021? So from there 30 days. What is 30 days? 17/9/2021. You need to file those returns. Understood or not? That's it, pa. So this is about registration. We have completed this. Now look into composition scheme. Please check page number 207. Composition scheme, I told you there is only one amendment, remaining things and all are same. So composition scheme section is what? Section 10. And there are two types of composition scheme. First of all, what is the purpose of composition scheme? There are lot of small traders or small dealers, if they are paying GST at the regular rates, their sales may not increase. In order to increase their sales, a reduced rate of GST is given to them, and that reduced rate of GST, if they pay, they cannot recover that GST from their customers, and even they cannot take ITC on their inward supplies. So let's try to understand the advantages and disadvantages of composition scheme, and then we will see what are the various composition schemes. You are under composition scheme. What is the advantage? First, cost to consumer gets reduced. Why cost to consumer gets reduced? Rather than, that is, you will not charge GST to the customer. Usually a normal person, a person who is under normal scheme, will charge GST to the customer. For example, 5,000 rupees plus GST 18%, means what will be the cost to the consumer? 5,900. Suppose if they are under composition scheme, how much they will be charging? Only 5,000. Means the cost to consumer gets reduced, yes or no? Because the cost to consumer gets reduced, as a consumer you tell me whether you buy from a person under normal scheme or under composition scheme. Composition scheme. So because of it, the sales volume will increase. And when the sales volume increases, what is the advantage to the supplier? Total profit also will increase. And one more advantage in composition scheme is reduction in compliance cost, because a normal scheme person is required to pay tax on a monthly basis, file returns on a monthly basis. But a person under composition scheme will be filing returns on a quarterly basis, even tax also they will pay on a quarterly basis. Moreover, in accounts and records chapter we have seen that a person under normal scheme is required to maintain I formats, but a person under composition scheme is required to maintain only I forma. So few records are not required to be maintained. Like that, there will be reduction in the compliance cost for a person under composition scheme. So these are the advantages of composition scheme. So cost to consumer gets reduced, because of which our sales volume increases, because of which the total profit increases, even there is a reduction in compliance cost. Compliance cost means what? Cost of complying with GST provisions. That is known as compliance cost. We need to pay money to file the returns, and we need to pay the taxes monthly. If we pay on a quarterly basis, that quarter it will be with us only, so we can pay it later. And even accounts and records to maintain, that will involve some cost. So consultant fees, chartered accountants fees, etc. and all. So that will get reduced. That is the meaning of that. Then what are the disadvantages of composition scheme? A person who is under composition scheme cannot take ITC on their inward supplies. On their purchases they cannot take ITC, and their purchase price increases. So why purchase price increases? Normally, example, 1,000 rupees plus 12% GST you paid. If ITC available, what is your purchase cost? 1,000. If ITC not available, what is your purchase cost? 1,120. So your purchase price increases because ITC not available. And what will happen to the profit? Profit gets reduced because of two reasons. As purchase price increases and the GST whatever you have to pay out of your pocket, so your profitability gets reduced. And tax cannot be recovered from the recipient. You have to pay out of your pocket whatever is at reduced rates. So these are the disadvantages. Now the person who is under composition scheme should decide whether really they need to go for composition scheme or not based on this cost benefit analysis. Now there are two composition schemes, one under 10.1, another under 10.2a. To whom this first composition scheme is applicable? A registered person who is engaged in manufacture of goods, or a trader, or a supply of food service provider. For three people, composition scheme under 10.1 will be applicable. Who are they? Manufacturer, trader, supply of food service provider. And composition scheme under 10.2a, to whom it will be applicable? Same. Manufacturer, trader, and supply of any other service. So what is the extra point that we have in 10.2a compared to 10.1? Sir, any service provider can go for composition scheme under 10.2a. But under 10.1, only a person engaged in supply of food can go for composition scheme. Then, what is the meaning of aggregate turnover for determining the eligibility for composition scheme? So, generally, what is the meaning of aggregate turnover? Taxable supplies, exempted supplies, non-taxable supplies, zero rated supplies, correct? Minus inward supplies under RCM, and even taxes. This is the general meaning of aggregate turnover. Am I right, pa? Now to this you make two adjustments. You will get aggregate turnover for determining the eligibility for composition scheme. What are those adjustments? So interest on loans, advances, deposits should not be taken into aggregate turnover, and pre-registration turnover should be included in the aggregate turnover. So see this. So aggregate turnover will be computed on the basis of turnover on all India basis and will include the value of taxable supplies, exempted supplies and exports made by all persons within the same permanent account number, but excludes inward supplies under RCM. For that extra one adjustment they are asking us to do, interest on loans, advances, deposits will not be taken into computation of aggregate turnover. So I have given the turnover meaning. So in different places what we get as turnover, page number 212, page number 212, you can see there, meaning of aggregate turnover. So what is the meaning of aggregate turnover for composition scheme? What is the meaning of aggregate turnover for composition scheme? Same as meaning of aggregate turnover normal, and two adjustments. What are the two adjustments? Interest on loans, advances, deposits should not be taken. Highlight that. Interest on loans, advances, deposits should not be taken. But in regular aggregate turnover it should be included. Yes. Then pre-registration turnover should be included. What is pre-registration turnover means? Before you get registered, some turnover will be there na. That should also be taken into aggregate turnover here. These are the two adjustments that you need to remember from the regular meaning of aggregate turnover. Sir, why we need to study this aggregate turnover? Because composition scheme under 10(1) is applicable to a person whose aggregate turnover during the previous year does not exceed threshold limit of 150 lakhs or 75 lakhs, which you can see in page number 208. Differences between composition scheme under 10(1) and composition scheme under 10(2)(a. Have a look into that. What is it they are telling? To whom composition scheme under 10(1) will be applicable? Read there. When their aggregate turnover during the previous year does not exceed 1.5 crores and 75 lakhs in case of 8 special category states. So what are those 8 special category states? Generally you remember 8 northeastern states, M, T, N, A, Sam. Now remove A, Assam, and add Uttarakhand. So these are the 8 states for which 75 lakhs limit will be applicable. So what are the 8 states pa? M, T, N, U, Sam. What is MMTN? Manipur, Mizoram, Tripura, Nagaland. U, Uttarakhand. Yes, Sikkim. A, Arunachal Pradesh. M, Meghalaya. For these 8 states, what is the applicable limit for composition scheme? 75 lakhs. Should we see that for current year or previous year? Previous year. So aggregate turnover during previous year does not exceed 1.5 crores or 75 lakhs in case of 8 special category states. Then current year we can opt for composition scheme under 10(1). Suppose if you want to go for composition scheme under 10(2)(a), what should be your aggregate turnover during the previous year? 50 lakhs. It should not exceed 50 lakhs. All states. Okay, we don't have any special category, etc. All states 50 lakhs. Aggregate turnover during previous year should not exceed 50 lakhs. Now, you told me to whom 10(1) is applicable? Manufacturer, trader, supplier of food service provider. To whom 10(2)(a) will be applicable? Manufacturer, trader, any service provider. Now, as a manufacturer, you tell me, first point you see and tell me, is it 10(1) or 10(2)(a)? Which will you prefer as a manufacturer? Because as a manufacturer you will get both. So you tell me which will you decide? 10(1). Because more limit we have na. So then trader also 10(1). Supply of food service provider also 10(1). Any other service provider as 10(1) not possible, you will go for 10(2)(a). Is it clear pa? Any other service provider as 10(1) not possible, so they go for 10(2)(a). Then, so see the second point, to whom it is applicable? Manufacturer, trader, supplier of food service provider, and 10(2)(a) manufacturer, trader, any service provider. What is the benefit of reduced rates? This you need to remember. Generally rates related to composition scheme, they will not give in question. You have to determine. Whereas normal rates and all, it will be given in the question itself. But composition scheme, you need to remember the rates. So what is the rates under 10.1? To 10.1, to whom it is applicable? Manufacturer, trader, supplier of food service provider. Look into manufacturer. What is the rate of GST under composition scheme? 0.5 CGST, 0.5 SGST. You remember as 1%. 1% of what turnover? Taxable turnover or total turnover? Total turnover. Sir, what is the difference between taxable turnover and total turnover? Total turnover includes exempted supplies. Taxable turnover means excluding exempted supplies. Understood? Now, manufacturer 1% of what turnover? Total turnover. Trader, you see, trader 1% of what turnover? Taxable turnover. Understood the difference between manufacturer trader rates? Manufacturer also 1%, trader also 1%. Manufacturer 1% of total turnover, trader 1% of taxable turnover. Supply of food service provider, what is the rate? 5%. 5% of what turnover? Total turnover. These are the three rates that you need to remember. So manufacturer 1% of total turnover and trader 1% of taxable turnover. Supply of food service provider 5% on total turnover. Logically, if you see, restaurants normal rate also 5%, composition scheme also 5%. So they will not go for composition scheme, they will go for normal scheme. But outdoor caterer, normal rate is 18%, composition scheme is 5%. So they will go. So like supply of food, wherever normal rate also 5, they will not go for composition scheme. They will continue in normal scheme because that 5% they can recover from the customer. But if the rate is not 5%, some other rate, then they will go for composition scheme because they get the advantage. Understood? Then, what is the benefit of reduced rates in case of 10.2a? What is the rate per? 6% on what turnover? Total turnover. Then, what is the current year limit for the reduced rate? Same, 1.5 crores or 75 lakhs. And once they cross that 1.5 crores or 75 lakhs, they cannot continue in the composition scheme. They are disqualified. Whereas 10.2a, what is the limit? 50 lakhs. Okay. Now, sir, I am engaged in some other services, but I want to be in 10.1. Is there any possibility? Example, I am a manufacturer and I can go for 10.1, but I want to provide some installation services. Okay. Can I be in 10.1? Yes. For that, there is a limit. Up to what extent I should provide other services? 10% of turnover during previous year or 5 lakhs, whichever is higher. To that extent I can provide the services. Okay. Now, you all can get up and sit once. Okay. Sit, sit, sit. Kindly don't sleep during the afternoons till exams. No, try to control because our exam time is like that, 2 to 5. And during that time, actually in the body, the effectiveness will be very, very less. So don't sleep during that time because that will become a habit and your effectiveness will come down. Okay. So develop a habit of not sleeping in the afternoon or take a power nap. Power nap, it's like 10 minutes to 15 minutes. Keep an alarm and you get up. Now, it should not be like you turn off the alarm and you sleep for 2 hours. No, not like that. Okay. Fine. So, what is the point I was referring to is, sir, I am a manufacturer, sir, and during the previous year, my turnover is 120 lakhs. Can I go for composition scheme? Yes. But how much services I can provide other than supply of food under 10.1? What was my turnover during previous year? 120 lakhs. 120 lakhs into 10% is how much? 12 lakhs. 12 lakhs or 5 lakhs, whichever is higher. So 12 lakhs worth of services I can provide. Understood? Again I am repeating. A person who is under composition scheme 10.1 cannot provide services other than supply of food. But if they want to provide any other service, they can provide, but only to the extent of 10% of turnover during previous year or 5 lakhs, whichever is higher. And for these services, what will be the rate of GST? The rate applicable to trader. What is the rate applicable to trader? 1% of taxable turnover. Understood? So we have come across taxable turnover, total turnover, that difference you know. Aggregate turnover and turnover for 10% limit. See this example, no need to make note, just listen. Sir, during the previous year, I am doing business in 3 states, Tamil Nadu, Karnataka and Kerala, and my turnover is 60 lakhs, 40 lakhs and 30 lakhs. So my aggregate turnover is 130 lakhs. During the current year, my first question to you, can I go for composition scheme 10-1? Yes or no? Why? What is my aggregate turnover during previous year? 130 lakhs. And what is the applicable limit for me? Am I doing business in MMTN new stamp? In this list, MMTN new stamp is there? No. So that's why 75 lakhs will not come. In this list, if MMTN new stamp is there, any one state, MMTN new stamp is there, automatically the limit will be 75 lakhs. So therefore the applicable limit is 150. During previous year, aggregate turnover does not exceed 150. Can I go for composition scheme 10-1? Yes. Now during the current year, to what extent I can provide the services? Calculate and tell me. How much services I can provide during the current year? 13 lakhs services I can provide, because 130 lakhs into 10%, 13 lakhs or 5 lakhs, whichever is higher. Absolutely wrong answer. Because this is not aggregate turnover, this is turnover. 10% of turnover. What is the difference between aggregate turnover and turnover? Aggregate turnover, all India basis, turnover will be state wise. So 60 lakhs into 10%, or whichever is, so that will be 6 lakhs, and whichever is higher. Therefore, I can provide 6 lakhs worth of services in Tamil Nadu. In Karnataka, 4 lakhs or 5 lakhs, whichever is higher. So that is 5 lakhs. Then in Kerala, 3 lakhs or 5 lakhs, whichever is higher. So to what extent I can provide the services? Understood? So it's not 13 lakhs. In the MCQ, 13 lakhs will be given, 16 lakhs will be given. We will think 13 lakhs and we'll select the answer as 13. But the answer is 16 lakhs. We can provide services of 16 lakhs because this 10% point is not to be computed based on aggregate turnover. This 10% point should be computed based on state-wise, because it is not aggregate turnover, it is turnover. Sir, what is the difference between aggregate turnover under composition scheme and turnover under composition scheme? Both are same, everything same. Aggregate turnover is on all India basis, turnover is computed state-wise. Everything else is ditto, same. You understood? So, therefore, why we will take turnover? Why we will take turnover? For 10% limit. And whether we see this turnover for previous year or current year? Previous year only. So, aggregate turnover also we will see for the previous year, correct? So, see this. Come back to page number 212. Page 212. So see the difference between aggregate turnover for composition scheme and turnover for computing 10% limit. Same, where is the difference? Sir, this is all India and this is state wise. Remaining and all is same. Clear? So what is the difference? Only thing, aggregate turnover is on all India, A for all India, and here A is not there, so state wise. Okay, remaining points and all will be same. Now Sir, we need to take current year turnover for payment of GST under composition scheme. Am I right? Okay, I am under composition scheme, that's fine. I have decided that I want to be in composition scheme. Now current year I need to pay GST on what turnover? So taxable turnover or total turnover of the current year. Okay, but there are some cases where I am disqualified from the composition scheme. So please look into page 208, come back. In some cases, I am disqualified from composition scheme, means I should not go for composition scheme. Whether I need to check this for the current year or previous year. Current year, the following supplies should not be made during current year. The following supplies should not be made during current year. What are those supplies? Remember, S9 RCM. Section 9 is RCM. Okay. S9 RCM. Section 9 is RCM. Correct? So remember this list. S9 RCM. What is yes, sir? Supplier of services other than supply of food or beyond 10% limit. I cannot provide na. Sir, I am under 10.1. Being in 10.1, either I should be providing restaurant service or supply of food service or 10% limit. Beyond that, can I provide any other service? No. So that is the first disqualification. If I provide any other service or if I provide service beyond 10% limit, I am disqualified from composition scheme. That is yes. N for non-resident taxable person. NRTP cannot go for composition scheme. And next I for interstate supply of goods or services. If I make interstate supplies also, I cannot go for composition scheme. Then another N, non-taxable supplies. Non-taxable supplies means alcoholic liquor for human consumption and petroleum products. If I am making sale of that, I cannot go for composition scheme. Generally, restaurant can go for composition scheme, yes. But there is a bar and restaurant which will sell food as well as sell liquor. Can they go for composition scheme? No. Can a petrol bunk go for composition scheme? No. Why? Because they are engaged in sale of petroleum products. Got it? Then yes, NIN, E for e-commerce operator. Which case? Supply of goods or services through e-commerce operator, only services through e-commerce operator. Only services through e-commerce operator. Generally, can restaurant go for composition scheme? Yes. But if they supply through Swiggy or Zomato, can they go for composition scheme? No. Then R for inward supplies on which GST is payable under 9.4. So inward supplies on which GST payable under RCM under 9.4. So you cannot go for composition scheme. Sir, but 9.4 now is applicable only to promoter or builder. Anyhow, promoter or builder cannot go for composition scheme because that is some other services, na, they cannot go for composition scheme. Then C for casual taxable person. So NRTP also cannot go for composition scheme, casual taxable person also cannot go for composition scheme. Then M for manufacturer of certain notified goods. What are those notified goods? Ice cream, edible ice, pan masala, tobacco and tobacco products, aerated waters. Extra one more product is there. In that list, we did not have aerated waters. Where? Registration. But here we have extra one more product, that is aerated waters. Aerated waters is like raw material for sodas. Sodas and beverage industry, raw material is aerated waters. That is water they will take and do the oxidization by removing certain minerals. So this oxidization, the water taste will be different, okay. And usually when you have the soda, normal soda when you drink without cooling, so that will prick your tongue, okay, without cooling etc. and all. If you drink the soda, you can see it's not like a normal water, it will prick because they will remove certain minerals etc. in the water. There is an oxidization process that happens. In this oxidized water, if they put the essence, that will become 7-Up, that will become Miranda, that will become Thumbs Up, like that essence they will be adding. So basically this aerated waters is common for all the beverage industry. It's a raw material. So a person who is manufacturing these aerated waters cannot opt for composition scheme. But remember, only manufacturer. But a trader can go for composition scheme. Ibaco ice cream shop, can they go for composition scheme? Yes or no? Yes. Why? Because they are not manufacturing. But suppose if there is a manufacturer of ice cream, can they go for composition scheme? No. So what are the who are the manufacturer of certain notified goods? Ice cream, edible ice, pan masala, tobacco and tobacco products, aerated waters, bricks and roofing tiles. What is the difference between this point and the registration point? Registration point, so supplier cannot, any supplier, manufacturer or trader cannot get 40 lakhs limit. Here only manufacturer cannot go for composition scheme. There we don't have aerated waters and here we have that. Now, so can you tell me this S9 RCM, come on, S for services other than supply of food or beyond 10% limit. Then N, non-resident taxable person. I, interstate supply of goods or services. Another N, non-taxable supplies. E, what through e-commerce operator? Services through e-commerce operator. Then R, RCM under 9.4. Then C, casual taxable person. M, manufacturer of notified goods. Now, say this. So, this is common even for 10.2a also, but only thing is that for 10.2a this S point not applicable. Because 10.2a any service provider can go na. So, what is the difference in conditions between 10.1 and 10.2a? 10.1 S9 RCM, 10.2a it will be 9 RCM. So, that is about this. Okay. Next. So, look into the meaning of turnover for payment of GST under composition scheme. Come back to page 212. Take page 212. So, there are total 3 turnovers in composition scheme. One is aggregate turnover for determining the eligibility to opt for composition scheme. Second, turnover for determining 10% limit for providing services. Third, turnover for payment of GST under composition scheme. Now, what will be the aggregate turnover? We know already. Normal aggregate turnover, 2 special points. What is that? Interest on loans, advances, deposits will not be included and pre-registration turnover will be included. And what is the difference between aggregate turnover and turnover for payment, like computing 10% limit? Aggregate turnover all India and this turnover will be state-wise. Now, what is the difference between turnover for 10% limit versus turnover for payment of GST under composition scheme? So, usually 10% limit we will compute for the previous year, correct? Whereas, for payment of GST under composition scheme, we need to take current year. One more change is that usually non-taxable supplies or interstate supplies if you are having, you cannot go for composition scheme. Non-taxable supplies or interstate supplies, you cannot go for composition scheme. Third difference is that pre-registration turnover shall be excluded. So, there are 3 differences. One, so between turnover for 10% limit and turnover for payment of GST under composition, the turnover for 10% limit is for previous year, whereas turnover for composition scheme will be for that payment of GST will be for current year. And non-taxable supplies, interstate supplies, if you are having, you are disqualified from the composition scheme. And third, pre-registration turnover will be excluded because now only you are getting registered. Up to that point of time, no need to pay GST. Now, connecting these 3 turnover definitions, we have some examples. Have a look into illustration 1 below. During 2019-20, a person commenced business and on 24/7/2019, his aggregate turnover exceed 40 lakhs and he got registered. So, when he commenced business, 24/7/2019, hardly some time only, bring your energy, okay, few topics only we are having. So, try to focus more, okay, it may be difficult only, I can understand your pain. For the last 4 days, today it is 5th day, but we are at the end, okay. So, we have completed swimming entire ocean. So shore is near, okay. So just a few hours only. So please see this. For the current year 2019-20, when the person has commenced the business 24/7/2019, and when he need to register, as and when his aggregate turnover exceeds 40 lakhs, he got registered. Post registration, his turnover is 130 lakhs. Post registration. Now, whether this person is eligible for composition scheme or not. Sir, we need to see for the current year, previous year aggregate turnover. While computing aggregate turnover, whether we need to take 40 plus 130, 130. Whether pre-registration turnover will be included or not included for computing aggregate turnover. Just a little bit, if you scroll your eye up, there will be one table. Search there and tell me whether pre-registration turnover will be included or not included. No, kutti saa vachiduven. Included and telivar. It will be included. Aggregate turnover for determining the eligibility for composition scheme, pre-registration turnover will be included. So therefore, 130 plus 40, how much? 170. Is it more than 150? Yes. So you cannot go for composition scheme during the current year. Got the clarity? Next, illustration 2 you see. A person aggregate turnover during previous year 2021 is 120 lakhs. Previous year 120 lakhs. So as previous year is 120 lakhs, he opted for composition scheme during the current year. He wants to render services other than restaurant during the current year. So how much extent he can provide the service? 10% of turnover during previous year or 5 lakhs, whichever is higher, okay. That only they are asking us to compute. Determine the limit up to which services can be rendered based on the following facts. Previous year, such person commenced business and threshold limit is 20 and post registration is 100. So how this 120 is? 20 pre-registration, 100 post registration. For computing 10% limit, whether pre-registration turnover should be included or not? Included. So this 20 we need to take. Then next, interest income during the previous year 40, out of which interest on loans advance is 30 and balance is for delay in receipt of consideration. This 30 lakhs interest on loans advances should be taken in turnover for computing 10% limit or not? No, see the table, it should not be included. So interest on loans, advances, deposits, everywhere in composition scheme will not come in turnover. Check all the 3 places. In all the 3 places, interest on loans, advances, deposits will not come. That's why you should not include. So what is your revised turnover for computing 10% limit? 120, pre-registration you include 120 minus 30. What is 120 minus 30? 90 into how much? 10%. That is 9 lakhs or 5 lakhs, whichever is higher. Up to what extent you can provide the services? 9 lakhs. Then look into illustration 3. A person commenced business during current year 2021. So current year only he commenced business. So what will be his turnover for the previous year? 0. 0 means it does not exceed 150 lakhs. So definitely he can go for composition scheme. His aggregate turnover exceeds 40 lakhs. And he got registered under the composition scheme. He is into trading within the state and the aggregate turnover during current year is 200 lakhs. So what is the total turnover during the current year? 200 lakhs. Compute GST payable if the applicable rate of GST is 12%. Now concentrate. So what is his aggregate turnover pa? 200 lakhs. Now up to what turnover? This is for the year, for the entire year. Up to what turnover you will be in the composition scheme, and remaining 50 will be in normal scheme. So composition scheme and normal scheme, composition scheme and normal scheme. So what is the turnover under composition scheme? 150 lakhs, and the turnover under normal scheme is 50 lakhs. Now, while payment of GST under composition scheme, see the third column, turnover for payment of GST under composition scheme, pre-registration turnover will be included or excluded? So minus pre-registration turnover. What is the pre-registration turnover? 40 lakhs. So what is the balance turnover under composition scheme? 110 lakhs. On this turnover, what is the rate? Who is he? Who is he? Manufacturer, trader, service provider? Who is he? Trader. So what is the rate of GST? 1% for composition scheme. But under normal scheme, what is the rate of GST? 12%. So 110 lakhs into 1%, 1 lakh 10,000, and 50 lakhs into 12%, 6 lakhs. So 1 lakh 10,000 plus 6 lakhs, that will be taken as the total liability. Got the clarity? First, what you should do, take the total turnover, divide it into two, composition scheme turnover and normal scheme turnover. What is the limit? Already you know. Composition scheme 10-1, what is the limit? 150. Normal scheme beyond that. And suppose if it is 10 to A, what is the composition scheme limit? 50. Beyond that will be normal. So once you divide that, thereafter, from the turnover under composition scheme, deduct the pre-registration turnover for the year. Why? Because at that time you don't have to pay any GST. Deduct that and see the balance. On that you pay the tax under composition scheme. On remaining turnover you pay tax under normal scheme. So that is this. Aggregate turnover 200 lakhs. First 40 lakhs no GST. Thereafter remaining 110 lakhs. You understood how we got 110 lakhs? Total 150 minus 40. 110 lakhs. You will pay GST 0.5, 0.5 CGST, SGST. Thereafter, what is the turnover under normal scheme? 50 lakhs. There you will pay the regular GST. Understood? Then, sir, one more point. I am under composition scheme. I have some inward supplies on which I need to pay GST under RCM 93. Now, on that inward supplies under RCM, should I pay the composition rate or the normal rate? Normal rate. For outward supplies only composition rate. On our inward supplies it will be normal rate if we need to pay tax under RCM. See that note. Person opting for composition scheme under 10-1 or 10-2A should pay GST under RCM on the inward supplies at what rate? Normal rate. You understood the computation part, pa? So this computation part is important. Apart from that, we have certain procedural aspects in this. Look into page 209. How can I opt for composition scheme? If I am a newly registered person, now only I am getting registered. Can I go into composition scheme anytime? Yes, no restriction. Anytime I can enter into composition scheme. In the registration application, there will be one option. So I need to select that option to pay tax under composition scheme. I will be entering into composition scheme any time during the year, no issue. But if I am already a registered person and I was under normal scheme, now I need to go for composition scheme. I need to wait till the beginning of the financial year. For example, 22-23 I am under normal scheme. Now, I want to go for composition scheme. I am in the December month. Now, I need to wait till April. So, till April of the next year, and I can go into composition scheme only from the April 1st of the next year, means beginning of the financial year only I can go for composition scheme. If I am already a registered person. Now, only if I am getting registered, anytime I can enter into composition scheme. What is the form for intimation for composition scheme? CMP2. CMP2 is a form for intimation. So that, sir, I want to go for composition scheme. CMP2 I have to file. Then other provisions relating to composition scheme, I need to display that I am under composition scheme in every notice, signboard which is displayed at the principal place of business and additional place of business. What is the validity of composition scheme? If all conditions are satisfied, the option remains valid. Every year I don't have to intimate. But any year, if the conditions are not satisfied, breach of condition like S9 RCM, then I need to come out of the composition scheme, or my turnover exceeds, I need to come out of the composition scheme. For exit from the composition scheme, what is the form? CMP4. CMP2 is for entry into composition scheme. CMP4 is for exit from composition scheme. And what is the time limit within which I need to exit from the composition scheme if I breach the conditions? 7 days. Within 7 days, I need to exit from the composition scheme. Sir, voluntarily also can I withdraw from the composition scheme? Yes. Voluntarily also, when I feel like composition scheme is not beneficial for me, I can withdraw from the composition scheme. Then, proper officer has reasons to believe, like I breach the conditions, but I am continuing in the composition scheme. Concentrate. I breach the conditions, but I am continuing in the composition scheme. And department came to know that I breached the condition. For example, I made interstate supply, but I am continuing in composition scheme. Department came to know that. They will give a notice in CMP5. After that, within 15 days, I need to give reply in CMP6. Thereafter, within 30 days, they will either allow me to continue in the composition scheme or deny the composition scheme. So, what are the 3 forms you need to remember here? 5, 6, 7. 5 for what? Notice. 6 is for what? Reply to notice. 7 is for what? Order. Order, either allowing or denying composition scheme. Time limit for notice, any time. What is the time limit for reply? 15 days. And once we gave reply, what is the time limit within which they will pass the order? 30 days. Now, we have ITC connection also in this. What is that? Listen, I am under normal scheme. I am under normal scheme and I go for composition scheme. I go for composition scheme. What should I do? Availment of ITC or reversal of ITC? Reversal of. So, before this date, whatever is the ITC that is there, ITC on this closing stock, I need to reverse, because the moment I go into composition scheme, I cannot enjoy the ITC. So, reversal of ITC. For reversal of ITC, what is the form that I will file? ITC 1 or ITC 3? We studied this. We studied this. ITC 1 or ITC 3? If you want, you search in input tax credit chapter and tell me. One is wrong answer, ITC 3. ITC 3 is only for reversal of ITC. ITC 1 is for availment of ITC on closing stock. So, I told you 18.1 availment of ITC on closing stock, ITC 1. Whereas 18.4 reversal of ITC on closing stock, that is ITC 3. Then, I am under composition scheme. I am under composition scheme. Now, I go for normal scheme. Will I avail ITC on closing stock or reverse the ITC on closing stock? Avail ITC on closing stock. For that, what is the form that I will be filing? ITC 1. Now, when I go into normal scheme from composition scheme, for this migration, what is the form that I need to file? Composition scheme to normal scheme. I am entering into composition scheme or exiting from composition scheme? Exiting from composition scheme. So, what is the form? CMP 4. So, ITC 1 and CMP 4 is a combo. Got it? ITC 1 and CMP 4 is a combo. Then again, sir, whenever I am under normal scheme, I go into composition scheme. Should I intimate or should I withdraw? Intimate. For intimating, what is the form? Entry into composition scheme. CMP2. So, CMP2 and ITC 3 is one combination. So, total we have 4 forms related to this. ITC. So, first 1, 2, 3, 4. Odd forms 1 and 3 are ITC. Even forms CMP. First and last is one combination. Middle 2 is one combination. Is it clear? So, this middle 2 is a combination wherein when I enter into composition scheme, I will reverse the ITC. When I exit from the composition scheme, I will avail the ITC. So these 4 forms you can see in the page 211. 211 I gave you. First 2 forms as a combo, CMP2 and ITZ3. Next 2 forms, CMP4 and ITZ1. Okay. Then next, denial of composition scheme, whether it will be prospective or retrospective. What does it mean, sir? I committed a breach. Say this, 2022 1st April I opted for composition scheme. On 18 September 2022 I made supplies through e-commerce operator, which I should not do, but I made. Again I am repeating, 1st April 2022 I opted for composition scheme. On 18 September 2022 I made supplies through e-commerce operator, so that's a breach of condition. In that S9 RCM, E supply of service through e-commerce operator, I made supplies through e-commerce operator, so I breached the condition. But I continued in the composition scheme. In the next year, department came to know that I was still in composition scheme, so they gave a notice. And I gave a reply, but they did not accept, they want to deny the composition scheme. Now from when they will deny the composition scheme? Either 29th June onwards, prospective, or backdated, but not before 18 September 2022. Prospective means from that date onwards. Retrospective means backdated. Prospective means forward. And retrospective means backdated. So they can pass an order backdated also. But that should not be before 18 September 2022, because from 18 September 2020 only I made the breach. Understood? So eligible for the scheme as no conditions were breached. So reject composition scheme with effect from 18/9 or a later date as decided by GST officer, but not before 18/9/2022, as condition for composition scheme is breached with effect from 19/9/2022. Then issue number 1, say this, sir, I have more than one registration, sir. Now for few registrations I want to go for normal scheme and few registrations composition scheme. Possible or not possible? Not possible. All the registrations will be under normal scheme, all the registrations will be under composition scheme. All in, all out. So mix and match is not possible. Then next, aggregate turnover during the previous year is 80 lakhs. I am doing business in Tamil Nadu, Nagaland. Whether one of the state is in MMTN, USAM, MMTN, USAM. Whether one of the state is in MMTN, USAM, yes, Nagaland. Therefore, what will be the applicable limit for me? 150 lakhs or 75 lakhs? 75 lakhs. So therefore, I cannot go for composition scheme as my aggregate turnover during previous year is exceeding 75 lakhs. Then, what are the returns to be filed by a person opting for composition scheme? They need to file a quarterly return. Say, a person commences a business and during this year, they are under composition scheme. So when they are under composition scheme, so they need to file quarterly return in CMP 8. So this is Jan to March 2020. Okay. Jan to March 2020. So for the first year, that is 2019-20, I am under composition scheme. So what is the return that I need to file here? CMP 8. By when that CMP 8 should be filed? By 18th of the month following every quarter. Even tax I will pay on a quarterly basis. Plus one annual return required to be filed. What is that annual return? GSTR 4 by 30th April of succeeding financial year. Again, next year I can either decide to be into composition scheme or under normal scheme. If I am under composition scheme, same returns. But if I go into normal scheme, I need to file the regular returns, GSTR 1, GSTR 3B and the annual return GSTR 9. Then next, these are the various forms. Already we discussed this. I just gave you like a summary. With this, we completed composition scheme.